morning, everyone. Welcome to day 4 of the Traders Conference. Can you believe we're already on day 4? This conference has been flying. There's been so much great information and I guess techniques, different ideas that have come out of the conference so far. It's pretty incredible, everything that I've learned so far. I hope you've learned something so far as well. We are about 8 minutes from getting started. My name is Kelly Clement. I am going to be your YouTube host today. Jeff Gibby will be our host for the event. And starting our first presenter today will be Tushar Chande. We're excited to have him as our first presenter this morning, talking about some of his ideas around the market and what's going on. He always has a great take on the market, so stay tuned for that. I'm just going to do some checks, make sure everything's up and running, and I'll be right back with you. Oh, before I leave, as you come in, say hello. Tell us who you are, where you're coming in from. Again, we're here in beautiful Salt Lake City. Love to hear where you're coming in from. Greg, thanks for letting us know you're coming in from Texas. So definitely let us know where you're coming in from. Okay, just checking in with Jeff and Tushar there. Everything is ready to go, so we are all set to go. Stefan, welcome from Arnhem. Wow, Arnhem in the Netherlands. Okay, I've been to the Netherlands a few times. I don't think I've ever been to Arnhem. I'll have to look up where that is. Thanks for checking in with us, letting us know where you're coming in from. Appreciate it. Let me really quickly show you today's schedule, who we have coming up. Again, if you want to see what the schedule is for the day and also register for the prizes we'll be giving away throughout the day, you can go to metastock.com, click on the homepage banner, and it will take you to the page. I also put a link in chat. That's the metastock.com/traders-conference, and that will also get you to the schedule for the day. But let me bring up the schedule right here. All right, so you can see here we have this the link here. Day 4 is live now. You just click on that link right there, and what it will do if you're on metastock.com is it'll take you to the metastock.com/traders-conference page, and you can see Tushar Chande here is our first presenter of the day. Again, always has a great take on the markets, what's going on. So excited to hear from him this morning about what's going on. Then we have Marina Villatoro, who is also known as the Trader Chick. Excited to have her here. Peter Dalal talking about finding trading opportunities in turbulent markets. Daniel Sinnig talking about his Power Bundle 360 and how you can use it with AI-powered insights. It's actually a really interesting what he does and the way that he looks at indicators. We have John Thomas, always has an interesting take on the market as well. Melissa Armo, Fausto, and then finally wrapping up the day with Dan Sugar. So you can see another great day of education. We are excited for all of our presenters, as always. But let's get ready here in just about 3 minutes to get it kicked off with Tushar Chande. I'll be right back with you, do some more checks, make sure everything's ready to go, and say hello. about 2.5 minutes out. So one of the things I did want to mention, again, if you want to see that schedule, just go to metastock.com, click on that homepage banner. It'll take you right to the conference, and so you can see everything. We will be giving away prizes throughout the day. So if you register on that page, you'll be eligible for the prizes as well. So make sure you do that. One question we get asked a lot is this being recorded? Can I watch it again? So if you come back to this exact same link that you're watching it on right now, that will be the recording. So you can come back. You can always go to youtube.com/metastock, and that will also get you to all of our videos. So that's our homepage for our YouTube channel, youtube.com/metastock. Also, we do like to thank our sponsors. We have 3 sponsors for this conference. We have Stocks and Commodities Magazine as a sponsor. We have the CMT organization, the Chartered Market Technicians organization, and AAII as a sponsor. So we have 3 fantastic sponsors. We love our sponsors and what they provide and what they help bring to the conference. So certainly check out all of our sponsors. You can go to traders.com, AAII.com, or you can go to cmtassociation.org. So those are our 3 different sponsors for the conference. Again, thank you to our sponsors and everything that they do. And as Greg said, hey everyone, while you're waiting, how about hitting that thumbs up button? I like it. So give us a like, give us a subscribe. We appreciate that as well. Let me just go do my final checks and we'll be ready to get this thing started. All right, have a great day of learning, everyone.
Good morning, everybody. Hey, it's Jeff Gibby, day 4. We're going to start it right now. And you know what that means? It means a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. All right, very cool. A couple things, a couple really questions that come up all the time. One of the big questions that we get is, where is the recording? If you're watching this and go to webinar, it's easy to find the recording. It's available. We've got all 3 days up. I'm going to go put timestamps on day 3 this morning sometime. But you can just go to youtube.com/metastock. You can find all of the videos that we've put up live. So another question that we get a lot is, oh, no, not a question. Just a quick request. If you do go up to our YouTube channel, or if you're watching us on YouTube, say hi. Well, say hi anyway. It's always good to see you. Say hi. Let us know how you're doing today. And if you're watching us on YouTube, hit like, hit subscribe. I know I ask you to do this, and you hear it every time you watch a video on YouTube, but it really does help. If you subscribe, we do conferences and events, and sometimes we do some market recaps. You'll get notified when that happens. But in addition to that, we appreciate it. Like, subscribe, chat. That all helps with the YouTube algorithm as well. And there you go. Let's say thank you to the sponsors today. Stocks and Commodities Magazine has been a sponsor of our events. Great magazine. They've been publishing since 1982, and they have 1.3 million subscribers and a 17,000 article trade articles. I really do appreciate Stocks and Commodities. They've supported us ever since we started these big events. So CMT Association is the second sponsor I want to talk about. If you're interested in managing money, like working for a bank or being a hedge fund, etc., if you have money under management, something along those lines, you can actually, it might be very, very helpful for your career. And tomorrow we're going to have Tyler come in and talk about how helpful it can be. And it's eye-opening. But if you're interested in doing something like that, go to cmtassociation.org, or you can call them at 646-652-3300. So, and then finally, AAII. AAII is a brand new sponsor for the MetaStock conference, but they're a very well-established organization. It's a nonprofit organization. They started in 1978. They've helped 4 million traders. And they do courses, they do research analysis, they do newsletters, all kinds of stuff. If you're interested in finding out about AAII, you can go to aai.com and they can help you with that. So with all of that being said, of course, we're MetaStock. MetaStock is my favorite charting and analysis software platform. It's also been rated #1 in its price category for 30 years in a row. It can help you scan the markets, test trading ideas. We're talking about it all day long. I love MetaStock. I wouldn't trade without it. And what we're doing, if you're interested in doing a trial to MetaStock, is if you buy a month, we'll give you a second and third month for free. We'll talk more about that throughout the day. But if you're interested in getting more information about that, get in touch with us at metastock.com/conf-promo or metastock.com/sales-chat. Or call us at 800-882-3040. So now that we've got all of that out of the way, thanks for coming. It's good to see you. Let me go ahead and introduce our first speaker today, and Tushar Chande. Tushar Chande has been working in the investment field for a really long time. One of the reasons that we're so familiar with Tushar Chande is one of the systems that's included in MetaStock is actually, and it has been for decades now, is actually called the stochastic RSI. And so that was a system that was developed by Stanley Kroll and Tushar Chande. And one of the things I'll say about Tushar is he is a consummate system designer and developer and tester. I love the work that he does. But over the decades that we've been running system tests, one of the ones that always performs best is that stochastic RSI. And so he's actually created a bunch of methodologies for MetaStock. He's going to talk about those today, but he's awesome. He's a really, really good system designer. So with that being said, Tushar, let's get you in here. Tushar?
Yep.
Oh, there you are. Okay, cool. I was like, he was just there. Let me go ahead and make you the presenter. How are you doing this morning?
Oh, very good. Thank you for that great introduction. And I must say, I've been really enjoying the conference. Thanks to all of you guys. You've been really excellent. And overall, the design and so many opportunities for traders to see, many, many different ideas for trading. It's really been fantastic, as usual. So congratulations to all of you guys for putting on a great conference.
All right, thanks. And it's going to get even better with you here. So it's your turn. I'm going to get out of the way.
All right, thanks. So you have my screen and everything? I'm visible? Okay.
After that, yes, we can see everything.
Okay, excellent. So this past weekend was the annual meeting for Berkshire Hathaway. So this is kind of the perfect timing to talk about Warren Buffett and his newsletter. So every year he writes an annual report. And this year he wrote about his actual trading record, which is absolutely unbelievable. And so I was reading that and I was sort of inspired to ask the question, can we use some of the things we can see on his track record to design a system? So kind of a tall order, a little bit of a complicated talk. So I hope you'll be patient with me as we go through it. And so the title is Flowers and Weeds, which is something that is directly out of his newsletter. And then I'll talk about the long-term system that's included in my package here, and show you how its performance sort of reflects some of the things that Warren Buffett talks about. So a little bit different than most of the other talks, in the sense that they're talking more or less short-term or shorter-term trading, whereas I'll talk about very long-term trading. So again, we're talking of trying to get different ideas, different insights, and this is another food for thought kind of thing. So let's get started. So this is the usual disclaimer. Main thing to remember here is that past performance is not necessarily indicative of future results. And there's one additional disclaimer that if you buy this package, the charts that you will see might look slightly different than the ones I have in the presentation, because they're done at different times. Okay, so let's take a brief look at the package. The package has two parts. One is asking the question, is this market trading? So it's trending. So in order to measure trend strength, I have a tool called the Chande trend meter, so that helps you narrow the focus. And then I have three systems. I have a long-term system and two shorter-term systems called the volatility system and the swing system. These are counter-trend systems. And I've talked about these systems elsewhere before in the MetaStock forum. So today I'll talk about this system, so you kind of get a sense for where this fits in. And let me just show you 4 charts just to give you like a visual on what the system looks like, and then we can go into the testing and so forth. Okay. So this is some chart. It turns out to be its ARK Innovation ETF. And if you think about in real term, when we got this breakout, we had no idea where that was going to go. So we know this was a great trend, but we need to be able to identify that in real time and trade it in real time, not after the fact. So I have the tool here, these 3 bands. So the decision rule is that if it goes outside the upper band, then we want to be long. So that's sort of our first decision process or decision rule, saying that should I trade this or not? And if you don't want to trade it if it's unless it's outside the bands. And then the rules are all hard-coded. They are robust. The same rules are used on everything, so there's no optimization of any sort. And it gives you a specific entry condition, and it gives you a specific exit condition. So there's really nothing for you to do other than just follow the process. And then the red dots, for example, are a trailing stop that you would implement in your daily trading. So eventually it will get you in, and then it'll get you out. And of course, some trades might be what are called false breakouts, but that's not relevant here. And lastly, the main thing to remember here is that there's no guesswork. The blue arrows tell you that you should be long. It's a low frequency of trading. So you're not generating 15 signals a day. We are trading in the direction of the major trend. So we're not being counter trend. And from your point of view, it's plug and play, right? It gives you very specific entries and exits. So you can buy the package today and start trading tomorrow. So here we go. All right. So now that you just have a sense for what the package is and what the long-term system is, let's try to sort of take a step back and start with, what is Warren Buffett's trading signature? And then explore a long-term system test. Many times here at MetaStock, they've asked me, well, show me a test. So, okay, let's dive into testing. And hopefully you learn something in the process in terms of how to think about testing and how to think about evaluating your own performance. And feel free to ask questions as we go along. Okay. So this is the annual report. You can download it at this particular link. And if you look at pages 4 and 5, I've highlighted 2 blocks, 2 grains of insight that he put in there. And I want to specifically refer to these. So let's look at that on the next slide. So in his 2023 letter, he says that in 58 years of Berkshire management, most of my capital allocation decisions, i.e. trades, have been no better than so-so. So just think about that. Basically an incredible track record that'll be never matched again. And his first, very modest claim is that most of his trades have been no better than so-so, which is absolutely astonishing. And then he says that our satisfactory results, which is an understatement, have been the product of about a dozen truly good decisions. So he feels that every 5 to 7, 10 years, he's made one really spectacular decision, and the rest of them have been so-so. So that's an amazing and astonishing, report, and we'll build on that. And he concludes that the lesson for investors is that the weeds wither away and the insignificance as the flowers bloom. So that's why I got the title of the talk. And once again, he says that it just takes a few winners to work wonders. So this is what I want you to remember. It just takes a few winners. And I'll show you that the long-term system is an engine to find outlier trades. And it'll all make sense in the context of what Warren Buffett says. And just for context, this is his current portfolio. The numbers may have changed a little bit. Apple was the largest position in his liquid portfolio at 38%, then Bank of America, Chevron, Coke, and so on. But the thing to note is that the top 10 positions account for 85% of his portfolio. So clearly a very, very concentrated portfolio, exactly the opposite of diversification that everyone talks about. And he obviously has a mega positions here in terms of Apple. I just want to show you two charts, Coke and American Express, that he has discussed in his annual letter. So he brought it here in 95. This is annual returns, quarterly data. And you see that it swung quite a bit and has had significant moves up or down, and yet he has still held on to the position. And basically no mechanical system can do that because they're not designed to buy and hold. So this is an example of where his strategy would be very, very difficult to replicate with a simple mechanical system. This is American Express. Again, he bought this in December 95, so like 28 years ago. And look at the huge changes in prices. He was even back to kind of where he was at the origin many years later, but he's held on and now he's somewhere over here. And of course, this is just price. He obviously got dividends, so his total return is better than what's in these charts. But my point here is that no mechanical system will keep you in this position for this long because you just get stopped out along the way. So let's go back to what he said. He said that most of his trades have been 50-50. So I've arbitrarily assumed that his percentage of winning trades is around 50%. So it may be, say, 42, 43, 44%. So say plus or minus 5 to 7% around 50. And then this is the key. So win-loss ratio is the ratio of the average winning trade divided by the average losing trade. And the reason he's had such spectacular performance is that his win-loss ratio is humongous. It's way bigger than anything you could do with a mechanical system. And I've just said much greater than 10, much greater than 10. And I don't know what it is, but it could be a huge number. And I think this is what really distinguishes his entire investment performance. Okay, so that's all fine, but let's put it in context. So here what I've shown is I've done a histogram of the annual performance that is reported in the annual report, both for Berkshire itself and for SPX. So the horizontal axis is annual return. The vertical axis is frequency because it's a histogram. The orange lines are the S&P return over each individual year that they've been in business, and the blue lines are Berkshire. So you can see that the dashed orange line sort of shows the S&P distribution. The dashed blue line kind of shows the polynomial fit for the Berkshire returns. And there's a distinct difference between what has happened to the market and what has happened to or what has been done by the Berkshire stock. And this is what we'll focus on. So here I've cleaned up the chart, the previous chart. Again, we have frequency in the vertical axis because the histogram and returns on the horizontal axis. But I've removed the orange bars, which are the S&P, but I've left the dashed line in place just to give you a visual for what the S&P look like. And this is what I want to focus on. These incredibly massive outliers in terms of annual performance by the Berkshire stock really makes a difference, and it's the entire story of his track record. Because without these outlier performances, his track record would not be as great as it is. But of course, he has these. So the question is, how do we get these in our own trading? So that's what we're going to try and reach for. And then what I did was, that was annual data. So I also looked for monthly data for Berkshire A, and I could only get back approximately 40 years. So I don't have the full track record. And then this is again a histogram. So you have frequency in months and monthly returns. So for example, between 0 and 2.5%, we had more than 100 months with those kinds of, with that range of return and so forth. And the orange line here is just a visual reference for a normal distribution, just to give you a sense for what the normal distribution looks like. And again, what we see here is that on the right-hand side, in terms of strong positive returns, we have many occurrences, multiple occurrences of very strong positive monthly returns. And that's what distinguishes this track record. And that's what we want to get from a system design point of view. And then what I've done here is I've taken the previous slide and just expanded the vertical axis. So I can just emphasize that there's and because this orange line here is the normal distribution, you can see that there are lots of data points well beyond the occurrence of the normal distribution, i.e., we have massive outlier returns on the high end of returns. And this is what we're looking for. This is what we'd like to capture. So let's just summarize what Warren Buffett reports, that performance comes from a few outlier returns, but don't know which ones, right? Because he said, I put on lots and lots of trades, but only a handful of them really took off. And there's no way to know at time zero when I put it on where this trade was going to go. So few outlier returns, but don't know which ones. And that's really the crux of the problem. And of course, he has a unique thing because he's traded for a long time. He's traded for 58 years. And for you to get the benefit of the strategy, you'll have to trade for a long time. It's not a trade for 3 days and be done. And the key thing is that he does not use a trailing stop. What does that mean? He's not worried about short-term fluctuations, and he's not worried about the smoothness of the equity curve. So when I was a money manager, I had to really worry about the smoothness of the equity curve. But as an individual, you can just say, I want gross net, I want just total profits and not worry about volatility. Okay. So I'll end this discussion of Berkshire with this chart. This is, again, the same chart I've shown before. And this is a signature of a long-term trend following system. So even though it looks amazing and is amazing, it's really nothing, but it's very typical of the signature of a long-term trend following system. So the long-term system that's in the package is basically your engine to get outlier returns. The cost is you have to trade it for a long time because you don't know which ones are going to give you the outlier returns. So that's sort of in a nutshell what I'm trying to show you. Okay, so let's take a small break. What I'm going to, so I showed you sort of the introduction, then I showed you the whole, how you can convert what Warren Buffett's record looks like into something we can use, at our level. And then I want to show you sort of a simulation of a long-term trend following system to show you that a typical long-term trend following system kind of has the same return signature as we see from the Berkshire Hathaway returns. So I want to point out that simulated testing has many limitations. So it's very important to understand. People always ask me, show me the test, show me the test. Testing has its own sort of can of worms, own set of limitations and problems. So I've only highlighted a few. There are more than these, but let's just run through a few so that you get a sense that testing is not a panacea for everything. So the first is that past performance is not indicative of future results because markets are random. Then every system is designed with some benefit of hindsight. Like you knew something about, you want to capture this type of behavior or that type of behavior. My personal pet peeve is that it compresses years of testing into a few minutes. So you can, test 40 years of data in, 40 milliseconds. But if you have to implement it, the real-time clock does not accelerate. So you still have to wait 40 years. And that is a real challenge to trade a system for a long time without any changes. That's a non-trivial problem. Then in real time, you must accumulate a large number of trades before the actual results match the simulated statistics. So this is an important thing to understand. When you test it, you're testing over a long set of data. So you may have hundreds and hundreds of trades. Now, in real time, if you get 10 trades or 20 trades, that's not sufficient to match what your test statistics look like. So, you can get 10 great trades to start with and you say, wow, this is the best thing ever. You can get 10 losing trades to start with. So this is a disaster, but it's not. You have to accumulate and trade for a long time. And then, of course, markets change. I mean, markets are not constant. Execution changes, participants change, liquidity changes. And the testing does not reflect all costs and taxes. So again, testing has limitations and try to be a little bit skeptical about what you see. Okay, so this is just a random system that I tested. It doesn't matter what the details are, but what I want to show you was, look what happened. This is monthly returns. And sure enough, we have outlier returns. And the blue line is sort of a polynomial fit, which looks very much like what we saw with the annual returns from Berkshire. So the short answer is, if you take a well-designed trend following system, you can get the outlier returns that help you sort of achieve superior long-term performance. So this is a long-term, trading opportunity. So I just put the Berkshire thing back just to remind you that they had these massive outliers. That's the signature we're trying to capture. But remember that he also had outliers on the downside. And what our design has done is we've truncated this part of it. We've eliminated the downside risk at the cost of having outliers, but maybe dialing down the outliers also in the process. So this is what the simulation looks like. Again, the red line is we have fat tails, but we have truncated the downside distribution. So you see we have this wings, we've cut off the downside wings, and the long side, the upside wings are still there, but they may have been dialed down a little bit in the process of truncating the downside wings. So a long-term system gives you the same kind of signature as we saw in Berkshire's track record. So now let's talk about some trade statistics. If you look at the trading analysis or the report of the testing, you get hundreds of statistics. If you look at the MetaStock summary, it's complicated, all sorts of statistics. Which one do you focus on? So I'm going to give you a very simple analysis of the trade level. So even if you don't remember anything from the stock, remember the next few slides, because that'll help you with your own testing and trading. So this is this is trade level analysis. So I looked at individual trades, right? So if you do a simulation, you can obviously calculate the total number of winning trades. Then you can calculate the total number of losing trades. And of course, the total number of trades. So the percentage winning trades is very easy to calculate. It's just the winning trades divided by the total number of trades. So this is one statistic we'll use. Then the gross profit is just the profit or the paper profit from all the winning trades. The gross loss is all the losses from the or the paper losses from the losing trades. And I've not used a negative sign here because we know what we're talking about. So right away now we can calculate the average winning trade, which is simply the gross profit divided by the number of wins. Then we can calculate the average losing trade, which is the gross loss divided by the number of losing trades. And then we combine these two to find the win-loss ratio, which is the average winning trade divided by the average losing trade. So I've taken, hundreds of statistics and I've boiled them down to just three things that you have to remember: the percentage winning trades, the average losing trade, and the win-loss ratio. That's the average winning trade divided by the average losing trade. Now, why is this relevant? It's relevant because you can maximize the percentage of winning trades or the percentage wins by your system design and portfolio selection. So you control this particular statistic. And you also can easily control the average losing trade by controlling your trade size and the initial stop. So these are things you can control as a result of your design. And if you control those two things, then this will just fall out of whatever you did to achieve those two things. So that's the relevance and importance of this way of looking at the data. Instead of looking at hundreds of statistics with all sorts of whatever. Okay, now the net profit, which is essentially gross profit minus gross loss, can be rewritten as number of wins times win-loss ratio times the average losing trade minus number of losses times the average losing trade. So this is your net profit. So this one single equation drives the entire profitability of your trading process. And right away, you know that we can minimize this term. In order to make this higher, you have to make this as small as possible. So you minimize this term with risk control, portfolio selection, and really good execution, with great attention to execution. And this term is, you maximize this term with system design and portfolio selection. And this is where the outlier trades come in, because the outlier trades make the biggest impact here. So, we saw the outlier, returns in the Berkshire Hathaway returns. I showed you the simulation of a typical system, and it's all about outliers. And outliers impact here. So if you are following the Buffett advice, where it says that we don't know, just a handful of really great outlier trades will make your day, well, this is why it makes a difference. So summary: maximize percent wins, maximize win-loss ratio, minimize average losing trade. And remember, this does not consider the smoothness of the equity curve. So, you have two different things. You have the smoothness of the equity curve versus just gross profit. And we're focusing on the gross profit part of the problem, not worrying about the smoothness of the equity curve. Oh, so this is a complicated slide. Bear with me for a second. So what I've tried to show you here is that these are three things. This N is the total number of trades. So I've assumed 500 trades. So we're talking of a large sample. We're not talking of 5 or 6 days of trading. And these are the three parameters we want: percentage wins, win-loss ratio and average losing trade. Now, suppose you fix the average losing trade at 9, and you fix your percentage wins at 47%. So, we saw from Warren Buffett's letter, is about around around 50%. So I picked 47, a little bit below. Then the question I want to ask is, what is the impact of the win-loss ratio? So under this assumption, if your win-loss ratio is 1, you just barely break even, which 2, you're a little bit profitable. And as the win-loss ratio increases, your profitability increases dramatically. And see, for example, if you get to a ratio of 13, you'd be really profitable, assuming that these parameters hold. And essentially, this is what Berkshire Hathaway was able to do. I mean, he has a lot of leverage, and then he has held on to positions for a long time. So his average win-loss ratio is humongous. And so that kind of gives you a sense for why, he has these blowout returns. Okay, so now I gave you an introduction. I told you about the Berkshire philosophy. I showed you sort of a generic system test. So now let's look at the test of the long-term system itself. So, I gave you sort of a, block by block. So now this block, we're going to look at the long-term system test directly. So, all of you guys who say, show me the test, only then I'll believe you. Okay, here it is. So again, reminder, we have the same rules across the board. This is a very important thing to understand. There is no interaction between the rules of the system and the data. So at no point have I tweaked the rules to get a better test. These rules are written a long time ago. They have nothing to do with the underlying data on which I tested it. So important to understand that this is a robust system. And because I don't change the rules, the results I get are more reflective of what I can expect to get in the future. So philosophically, I'm not optimizing at all. Important to understand that. Okay. So same rules on every stock, no optimization. And the rules were written without looking at the data. There's no influence, there's no interaction between the test data set and the rules. So I picked stocks in the QQQ because it has all the biggies. The length of the test is about 10 years, or as the data are available. I use nonlinear trade sizing, and I assumed a 1 million constant account size because I want to look at the trade by trade performance. Okay, so this is the result of the test using the MetaStock test engine. This summarizes the performance by market, not by trade, by market. And I've just sorted them from worst to best. And you see that there's an outlier trade here in terms of a losing trade. Most of the trades are sort of even or flat. Most of them didn't even give any signals because it has a very large buffer zone. And then look at these. We have some outliers here, some markets that really boomed, or that had great trends. We didn't know which ones they were going to be a priori, but the system can catch trends and latch onto trends and hold on to trends. And we had the outlier returns here. So essentially, this system captures the behavior that we saw on the Berkshire equity curve. That is, it's capturing outlier trends. Now, I wrote my own code to look at it on a trade by trade basis because we can't do it currently in MetaStock. So I used 10 years of data, and I had a volatility exit at 6x. So the volatility exit can be lose, loser, and loses. So I made 3 levels, so you can see what happens. What is the impact of having loser and loser stops? Because we know that Berkshire essentially never uses a trailing stop. So there were 481 trades. The win-loss ratio was 3.09, and the break-even was 1.16. So we are well above break-even, 3 times the break-even. So what that tells you is that this system is likely to be profitable when you can capture outlier trades over a long period of time, if you trade it for a long period of time. And this is the story I want to show you. So this is the trade by trade summary, where I've sorted them from the worst trade to the best trade, individual trades. The vertical axis is gross profit. The horizontal axis is just the number of trades. I had a little bit less than, so we had about 481 trades. So you see we're a little bit less than 500 trades. So the worst losing trade was about, say, 4,000. And the best trade was 44,000. And this is really what we're trying to do. We're trying to capture the outlier trades. Most of the trades are going to be small profits or small losses, and we don't know which ones, and that's the problem. Then we'll have a few collection of losing trades, but you see that if you look at the magnitude of the winning trades versus the losing trades, there's no comparison. So when the market starts to trend and we get mega trades, the system will get you in and keep you in. So this is the most important signature, and I'm showing it to you directly using individual trades over a long period of time, like 10 years. And of course, you can trade anything you want with it, but I picked a particular subset because you have to have something to trade. Okay. Now I traded with 8x. So I had a tight stop. I made a little bit looser. I make it 8x, and I'll show you in a minute what that means. Now the profitability has gone up because I don't get stopped out quite as often, and the win-loss ratio has gone from 3 to 4. So the break-even is 1, and I'm 4 times the break-even, which means that the system will almost surely make money if you trade it for a long period of time. And the challenge is, can you stick with it? That's really the challenge. And again, individual trades with the 8x, exactly the same scenario. Most of the vertical axis is loss or gain per trade. These are the individual trades. You see, we got a little bit less than 350 trades. We had like 347, so a little bit less than 350 trades. The worst trade was about 5,000, a little bit worse, which is because the stop is loser. But the best trade is like 60,000. So if you look at the comparison between the worst trade and the best trade, there's like no comparison. And this is the key to the success of the system, that it can capture outlier trades, which is the whole philosophy of what Warren Buffett is trying to do. And just like him, we have no idea which ones are going to trend. We don't know which ones are going to break out and have this mega trend. So you just have to trade a whole bunch of them, and which is essentially what he has done. But he has used whatever criteria he has in terms of moat or this or that. It doesn't matter. Okay. And then again, say 8x. I've shown you the individual frequency distribution of monthly returns. The sort of shaded portion is a normal distribution just for reference. And you can see that we again have a large number of outlier months and outlier trades, which I've shown you in the previous slide. So we can replicate the equity curve or the histogram of monthly returns that we find in the Buffett returns versus by using a long-term trend following system. So that's kind of the message. Okay. So let me summarize the testing. So the exits were 6, 8, and 10. So tight, loose, and loosest. The percentage wins go up. That makes sense because the looser the stop, the more likely the trend can persist. You see that the win-loss ratio increases dramatically, but the big step here, not as a big step here. But it's well above the critical ratio. So this system will be profitable in the long term. You can be almost certain. And then this last line is a bit of a cheat, but I want to just show you. Like I said, if I could somehow concentrate my portfolio in just the stocks that were trending great, which is what Berkshire could do in real time, you see my win-loss ratio can go to 7. So this is just to indicate that, of course, in real time, I don't know which one is going to be, but in a test, it's difficult to do that. But I was able to manipulate the test a little bit to show you that I could go from a win-loss ratio of 3 to 7, which would be a dramatic improvement and a significantly more profitable venture. So in real time, if you could change your allocation to favor the strongest trends, you could probably increase your win-loss ratio. But in the test, I just put on the position once and let it rip. So idea here is that if you use some discretion and are able to reinforce or add more equity to your strongest positions, that can over time help you increase your win-loss ratio, which will increase your overall profitability. So this is directly a system test. So I don't want to hear any complaints. What does the test say? The model captures long-term trends. The model has a wide neutral zone. Not every market will generate a signal. The market is robust. The model is robust and will most likely be profitable across many years of trading. You trade for a long time. And the selection of what you trade is critical. So it's not enough to just say, I brute forced it. You have to be somehow selective. And that is his problem as well. But what does it not say? So it doesn't tell you what the annual returns are going to be. Because we looked at individual trades. Time is out of the question. We don't know what the future drawdowns will look like because that's unknowable. Which markets will trend in the future? We don't know that either. So that's a problem. And then, of course, we don't know how smooth the equity curve will be because we've not tried to manipulate the equity curve. So again, to summarize, over time, it just takes a few winners. This is the 8x winning trades. You see that there are a handful of winning trades can have a huge difference, and the system is an engine to capture outlier trades. And then, of course, we produce outlier monthly returns when you look at the histogram. So essentially, the long-term system that's in my package has the same signature as the Warren Buffett returns. And the challenge is not whether the system is good or bad. The challenge is whether you can trade it for a long time and what you trade with the system. So it's a responsibility. The problem is not the system. It's me or you as individuals trading the system. Okay. So summary, the system has a strong signature as a trend following system, and it's not the system design, it's the trader's determination. Like, could you trade it for 30 years? It's a non-trivial problem. Could you trade it for a long time? And the short answer is that, you could have many systems, and this will just be one system in your portfolio, and you can let it run on the side and, do other things with other parts of your equity. Okay. So having done that, let's look at some actual charts. So, and I showed you testing, everything. Now let's look at a chart to see how it works. So it needs strong persistent trends. There's a high level of smoothing, so it'll be slow to enter. There's a very slow exit. It will not catch the absolute top. And you need patience. If you want to trade for the long term, as you saw, most of the trades are little winners, a little losers, a couple of big losers. You just have to be patient. You don't know in what sequence the trades are going to come. So this is Devon Energy. A long period of time, we have the 3 bands. You see that for a long time, it stayed underneath the upper band. So we're going to ignore it, filter it out. And once it goes above the upper band, then, our system can kick in. So we have a specific entry condition. This is over 10x or 8x exit, and the system keeps going. The stop doesn't know when it's going to be hit. You just keep updating the stop as you keep going along. And what could be easier in terms of running the system on the side? It's a low intensity system to trade. There's no guesswork, right? Because they have a green ribbon underneath that tells you that you should be trading. There are blue arrows to keep you in the position. That's a very low frequency of trading. We're not trading hundreds of times a month. Trades in the direction of the major trend. The trend is up, so we are long. We're not pushing against the trend. And it's plug and play, right? If there's a commentary, it gives you an exact entry point, an exact exit point. Don't have to think. It's all canned. There's no training, no nothing. Just, plug and play. Fortinet, beautiful trade. Got in here, keeps going. Nearly got stopped out here. So really important. Keep the discipline. Comes back in, gets stopped out. So when the trade started here, we had no idea that it was going to go this far. Now we got a re-entry. Again, we don't know where the trade is going to go. So that's part of the challenge with this type of approach, that you've got to put on a position and stick with it. And sometimes you'll have, say, 5 or 6 or 7 or 8 or 10 losing trades in a row. You can't get frustrated. You have to keep going, because as we saw in the distribution of trades, suddenly magically you'll get this outlier trade, and you get a few of those over 10 years, and you're more than happy. This is AMN Healthcare. Trade started here, outside the upper band, kept going nicely. You see that the trailing stop accelerates when the prices accelerate. And this is what I wanted to point out. Why is stop discipline important? Because here in 2 days, it reversed and hit the trailing stop. So it's very important to maintain stop discipline, i.e. not get ahead of the market, either getting out or getting in too soon. Just let the system get you in and let the system get you out. And then this is what I was talking about. The way the stop is calculated is that you have the highest high. I'm using 100 days for convenience, and some multiplier. So some K times delta. Delta is some measure of volatility. So you can imagine that the higher K is, whether 6 is 6 or 8 or 10, the looser the stop. So the larger this number is, the wider the stop, or looser the stop. So when I showed you results with 6x, 8x, and 10x, now you see it makes sense. So the stop gets further and further away, and I'll show you an example of that. This is AMN again with 4x and 6x. So the purple dots are 4, the red dots are 6, and you see that the 4x is closer to the price, and the 6x is further away. So larger the number, larger this number, the looser the stop. So that's just to reinforce that message. Here's another one, ARC Innovation. You'd have gotten it somewhere over here. With the red dots are at 6x, you'd have got stopped out here, re-entry, stopped out here, re-entry, stopped out there. But with the 8x stop, you'd have entered there, and you'd have gone all the way to the top, all the way to over here. So this is what, if you remember the results, the 8x results, the win-loss ratio went from 3 to 4, roughly. So this explains why you can avoid a few stop outs by using a little bit looser stop. On the other hand, you've got to sit through all this volatility, and then you've got to make sure that you stick with your stop discipline. For example, here, you don't get ahead and get out, and so on. So the mental challenge of sticking with a long-term system for a long period of time is enormous. So it's trivial to show you a test and say, oh, well, it's so great. Sure. But doing it in real time is a lot harder. And believe me, I did it for 15, 20 years. And sticking with the system without making a single change is very difficult, very, very difficult. This is first solar with the 6x and 8x. So again, we got in here, went over here. Remember, we have the green line above. We got stopped out, at the 6x top. 8x would have continued. Takes re-entry, keeps going. We don't know where it's going to go. So that's the challenge. The system is very robust. It can find a long-term trend, can give you, it can automatically calculate the stop for you. But ultimately, you or I have to, we as individuals have to actually do the trading. So this is NVIDIA. I want to show you this super mega trend in NVIDIA. Again, we don't worry when it's inside the bands. When it's outside the bands, we want to trade it. This chart sort of solves a couple of problems. In the upper panel, I have something called the Chande trend meter. It's also included in the package. It's a measure of momentum or trend strength, and it has a scale from 0 to 100. When you have very strong uptrends, you get reading above 80 and above 90. And when you have a very strong downtrend, you get values below 20 or even below 10. So if you look at the same NVIDIA trend, you see that it had portions where it was very strong. So this is when you can be in, and then it consolidated, went sideways for a while. This also showed that the sideways action, and then a little bit of a breakout, then a reversal, and then a little breakout, reversal, and then the mega trend. So you can either trade directly with the trend meter and sort of concentrate when you're well above 90 and outside the upper band, or you can use the CTM as sort of a crush to lean on, where you say, well, I'm trading with 10x, the vol is going on, and gives you a little sense for what's happening in terms of the trend strength. So you can use a CTM to select items. So you can use the bands to screen out as a first screen, and then if you want to use the CTM as an additional screen, or for example, if you wanted to add to a position, then you can say, okay, I'm going to maintain a baseline position of NVIDIA, and then when the trend is above 90, I'm going to dial up the size of the position. So that's another way to try to increase your win-loss ratio. So the CTM in combination with the bands will help you kind of focus on how do I improve my win-loss ratio.
Hey, Tushar.
Yeah.
You said I could break in with questions at any time.
Go ahead. Yeah.
So Flavio wants to know, I love it. How is the upper green line calculated? What moving average or exponential moving average is being used? I'd like to simulate it myself. Thank you.
Sure. Yeah, sure. It's the 350-day exponential moving average with a 40% upper band. So it's not a volatility band per se. It's just a percentage bands. So it's a 350-day exponential moving average with a 40% band above it.
Perfect. That's all the questions so far. If you have questions, ask.
That's really boring. I'm putting everybody to sleep, I think.
Actually, Matt wants to know if you still use the Vidya.
Oh, yes, I do. I definitely use it. It's just that it's not in this particular package because I think it's already in the MetaStock in some form.
Yes, it is, yeah.
It is already there, so I didn't put it in this package. But it's very much there. You can, if you look through the indicator list in MetaStock, you can find it. And essentially, so for those who don't know, I was the first to create adaptive exponential moving averages. So there's this whole class of adaptive indicators. And a long time ago, before the dawn of time, I wrote this article where I showed how you could directly connect market volatility to the mechanics of how the exponential average is calculated. So you get a dynamically adjusting adaptive moving average. Others have come up with their interpretations of it, but I'm the originator of the idea. And then I also have something called a dynamic moving average. So the idea is that part of the problem or challenge we have as traders is we use something like 14 days or whatever, but we are not directly adapting to market volatility. Whereas if you can manipulate if you somehow can include volatility in the formula directly, then there's another form of adaptation that's built into the indicator, and there's one less thing for you to do. And it works really well. I mean, again, in this context, I'm talking of a very slow moving system. With Vidya, you could design systems with different dynamics. So it's really a matter of what kind of system dynamics you're trying to achieve.
Here's a good question that's coming from the YouTube audience. So Stefan wants to know, how do you decide what security you should trade?
Oh, yes, that's the $60 million question.
Scanning helps, though, right?
Yeah, I would say so. There are three ways you can do it. The first way is that there's a scanner using the green line, the green bands built into the package. So you can use that as a first cut. So that'll just look through whatever. Maybe just step back. So you sort of have to decide what you want to trade, whether you want to trade, say, ETFs, or you want to trade stocks, or futures, or whatever it is you want to trade. Then the other thing is that typically I would also look at volume not as an indicator, but as a liquidity measure. So you don't want to trade something that is illiquid, depending on the size of your position you're putting on. If you're trading a lot of money, then you need a liquid stock that has enough volume, or ETF with enough volume, so you can put on your position without a lot of slippage. But I'm not using volume directly to drive the trading decision. So that's sort of one top level view. The second level view is you can run a scan using the CTM. So there's a CTM scan built into the package, and I'll show you which ones are trending strongly. And then you see whether it's outside the band. If it's outside the band and it's trending strongly, you say, okay, all right, I'm going to trade that. And the third way you can do it is you can use the scan itself. There's a built-in long-term system scan, and that'll show you. But the problem with the scan as it works is that it only tells you the current, the new signals coming on. So that's useful if you're first putting on a position. But if there was a signal, say 10 days ago, it won't show you that. So in many ways, you're better off by first scanning with CTM. Then that gives you for sure it's trending. Then the second cut would be, is it above the this exponential bands? And the third cut would be, does it have enough volume? So if you can answer those three things, at that point it's a bit of a random thing, because for example, you could buy this on this particular day, and then it'll go sideways for like 3 months or 4 months or 6 months. You're gonna say, why did I take this trade? So there's always some randomness in terms of what you trade and when you get in. But I think those three rules will help you. Start by scanning with CTM. Then the second rule would be, is it outside the bands? And then the third rule would be, does it have enough volume so you can put on a position without a lot of slippage? So I think those three things will generally keep you in the right side of things. But for example, you may say that you only want to trade the NASDAQ stocks, or you only want to trade, the S&P 500 stocks, or you only want to trade stocks in the, or the ETFs from Vanguard or whatever. So I mean, there are different ways to pick the universe that you want to trade. And I've traded for a long time, and believe me, this is a problem I grapple with every day, because if I have a universe, there's 100% probability that something not in my universe is going to have a phenomenal trend. So, that's the basic challenge. And, that's what Warren Buffett himself said, right? Most of his trades are like 50-50, because, he used his process, picked something, not everything works. So that's also a lesson of the stock, that, you can do your best to pick what you think is most likely to succeed. And the reality is that it may or may not succeed. So you have to be willing to say that, okay, I followed a process, it didn't work, but it's like a crank. You want to keep turning the crank, and eventually the process will latch onto and find you the outlier trades, right? But not every trade is going to be successful. Does that make sense?
Yeah. One more question.
Sure.
Maybe for now. Kishore wants to know. Is it such that this is best for just long-term trading or short-term trading too?
Yes, the answer is yes and yes. Yeah. So what do you mean by long-term, right? If you use daily data, okay, this system is primarily designed for daily data, but you could use it on 10-minute data. You can use it on 30-minute data. It's not that you can't use it on shorter-term data. It's just that the volatility of the 30-minute data can trigger you in and out. So the system will behave differently because the underlying volatility is not the same, right? I mean, implicitly, by looking at daily data, I've assumed a certain volatility profile. And depending on what you're trading, if you use intraday data or weekly data, the system will behave somewhat differently. But can it be used? The answer is yes. But is it going to behave exactly the same way? The answer is no, because we're also making some assumptions about the underlying volatility.
And I also wanted to add to that, in addition to the long-term system that's in the system, you have the ST system and the volatility breakouts. And so yes, there are multiple systems. So the one we are focusing on is the one that's more designed for long-term.
Let me just, okay, so just to reinforce what Jeffrey was just saying here. So I have, so we talked about the long-term system. This is the trend following system. So it's a breakout system. So if the market is going higher, we want to be long. But these two systems are counter trend systems. What does the volatile system buys a breakout after the market is consolidated for a while. So for example, if you have say Meta is a good example, right? The earnings report, Meta had a big breakout. You have a big gap on the chart. It wants to trade that gap. Or CGen is a good example. They got a buyout offer from Merck or something, and then there's a big gap up in the stock. You want to look for and buy that gap up on the stock. But CRM is an example where we got a breakout, but the breakout didn't follow through. Just went up, then came back down. And then the swing system is directly buying weakness after strength. So unfortunately, I don't have any charts here for the swing system. But think of it this way. Wait, do you mind if I look through my things here?
I can show. I have some charts, and I will talk a little bit about the swing system.
Sorry, this is a different version. I was running out of time, so I curtailed it.
No problem. We're actually kind of running up on time too. I can't believe it's almost been an hour. It's amazing how fast it goes. But go ahead. Sorry.
I was trying to jump. Okay, so this is. I'll just take literally 1 minute. So this is Tesla, and everyone loves Tesla. So this is an example of a long-term system on Tesla. We're going to break out. We're going to exit here, but this is the volatility breakout. There was if you go back here, we had this the triangular consolidation and then a breakout. This particular spot. So this is that particular spot. This is the volatility breakout system. So it captured the breakout, and then it followed with a trailing stop all the way to within, say, 3 days of the absolute high of the move. So that's the volatility breakout system. And then we have the swing system. So if you think of it this way, Tesla sold off. We have weakness. We're buying strength after weakness. Then again, we have a bit of weakness. We buy strength after weakness, and then this trend moves higher. And if I show you, this is CTM on hourly data. You see we had a strong downtrend here because CTM was below 20. So you could have gone short, say somewhere over here, and then you have the trailing stop. You come out here, you get stopped out, and then you have CTM on the upside here. Again, you could have say when it goes above 90, so you buy in this area. You have a trailing stop, and then you get stopped out, say here or wherever. So the tools can be used. So the counter trend system buys weakness after, buys strength after weakness. So you have a sell-off, you want to buy the rebound, and then of course you can use our intraday data. The tools are totally robust. You can just use them on whatever time frame you want, with the knowledge that sometimes underneath, your certain hidden assumptions about volatility. And sometimes the market may be too volatile for the system, but that's kind of something. If you try it a few times, you get a general idea whether you like it or not. Okay, does that answer your question?
Yes, good job.
Okay, all right. I'll wrap up over there. I hope I've not bored you guys to death. System testing is its own can of worms. I've shown you, direct test, using trading data for the long-term system. It's the perfect engine to capture outlier trades. It sort of reflects the Buffett philosophy. It's robust. There's no assumptions. There's no tweaking and manipulating. So it's a high probability that it'll work. But the challenge is, can you trade it for a long time? And that's non-trivial problem. Okay, I'll stop over there.
Would it be a good time to take more questions?
Oh,
so
sure.
We have a couple more
questions, as many as you have.
Neil wants to know: don't your CTM bands doesn't your CTM and bands both measure trending markets?
Yes.
Do you use both?
Yes, I use both. But if you look at that chart, right, they're measuring slightly different things. So you're talking of time periods. The underlying time period for the CTM is different from the underlying time period of the band. So the bands are much, much longer term than the CTM. The CTM will find trends on a time scale that's shorter than the band. So they're both measuring trends, but they're measuring them on different time periods. So for example, on the CTM, it only goes out to 100 bars, whereas obviously on the bands, it goes out to 350 bars. So you get a totally different measure of the trend because the underlying time periods are different. And here the bands is only one measurement, right? Whereas the CTM combines about 20 different measurements. It looks at patterns and breakouts and momentum and returns and volatility, and combines all of this in a complex nonlinear way to give you a measure of momentum ranging on a time horizon of some 25 to 100 bars. So they're both measuring momentum, but the time period is significantly different. So you won't necessarily get the same answer. Though, of course, like I showed you for NVIDIA, when you have, it's like when you have a coincidence, when the two can coincide, that is, you have strong short-term momentum and long-term momentum, then give you the same answer. But obviously, then there can be different divergences when on the short term you can have momentum. But for example, here you're inside the band, so the band will say, "Oh, nothing to do," but CTM might say, "Oh, we have a strong trend here." So the CTM is not thinking about the bands; it's just giving you a measure. Poof, 100 days, what's happening?
Stefan in YouTube wants to know how many securities would you trade? You, not him, to be diversified.
I try to trade around 25 or less, because
the answer was 25 or less. Is that what you said?
Yeah, 25 or fewer. I would say between 10 and 25 would be a good number. What happens is that if you have, say, 100 securities, you get too many signals, and then you need a huge account size. So there's like a balance between what you want to trade. When I was a CTA, I traded around 45, 50 markets, so I could control the leverage, and I competed with the best and brightest. So again, it's a good number if you're a CTA, but for an individual, 10 to 20 is a good number. 100 is like impossible to manage.
Kishore says, would this be useful if I want to build a 5-year portfolio? Thank you for the question, Kishore. Okay.
Yes. So the way to think about this is that you say I'm only going to look at, that's why I picked the QQQ, because I'm only going to look at the top tech stocks. And then, I'm just going to have a small position that I can keep running on the side while I do other things with other part of my portfolio. And, I just have to get a few outlier trades for this thing to pay off. Because that's the whole idea, right? That we don't know which ones are going to trend. We don't know when we're going to get this mega trend. But just if you get 4 or 5 mega trends, it more or less, pays for itself. So yes, you can definitely sort of, if you think of it as a cooking stove, you have so many burners going on. So you can have one burner, which is your long-term trend burner, and all you're waiting to do there is, magically over time, the system will capture massive outlier trades. You don't know when they're going to come, but you don't want to focus all your equity on that. So, you can definitely do that. You can trade multiple systems in your portfolio.
Yes, another question, and I think I'm going to refer to him to one of the webinars we just did with you not too long ago, but he wants to know if there's any guidance on sector rotation. And we did a whole session on that not too long ago.
Session on that. The short answer is use the CTM. S&P has 8 sectors or whatever, and if you want to look at the U.S. equity markets, you can go to maybe 20 sectors because you can think of if you look at iShares, they have sector ETFs, but so does everyone else. But iShares is a good place to start. So if you look at the sector ETFs and iShares, you have maybe 20, 25 sectors, and then use CTM to rank those, and then you'll see the strongest sectors and the weakest sectors, and then all you got to do is trade the top 5 sectors, and then keep changing as you go along, and I think you'll be happy with the way CTM works for you. So that's sector rotation, right? Because the CTM will automatically rank every day the trend strength, and when a sector gets strong, it'll rise to the top, and the sector weakens, it'll go to the bottom, and then all you got to do is pick the top 5, and off you go.
I found that video for him and I sent it to him too, because we did the whole hour on sector rotation.
Right. But the CTM is a perfect tool for that, and then you can trade the sectors using the spiders, SPDRs, the XLKs, and so forth, or the iShares. They have a bunch of them, but so does everyone else. But I just talked of iShares because they're very easy to get.
All right, we are almost out of time already. Is there anything final you wanted to say? I did want to talk about the add-on and how people can get it. It's amazing how fast that went.
Well, all I can say is trading is a lot harder than it looks, but my tools are very robust and very reliable within the randomness of the markets. So I would highly encourage you to buy the package, experiment with it. My number one message is don't take my word for it. Do your own research. But I can assure you the tools are very robust, very reliable, and and ultimately this is a matter of being self reliant and self independent. So you got to start somewhere. I think map package is as good a place as any to start.
That's great. Kishore says, thanks for all the answers. And Matt,
so glad we could do it.
Matt says, excellent presentation as usual. Each presentation has been unique, and I intended to learn a lot about trading. I just learned a lot more about system testing in one presentation than in reading multiple books. So I'm glad you enjoyed it.
I've done at least 50,000 hours of system testing, so believe me.
Yeah, I love system testing. All right, Tushar, I'm going to talk a little bit about your add-on. I really appreciate your joining. We'll have to have you back when we don't have such a time crunch. But
maybe over a campfire.
Yeah. Great job. We appreciate it.
Thanks a lot, guys. Have a great day. Thank you again, everybody. I'm so glad you could stop by. I really appreciate it.
Very cool. Let me go ahead and do this. I'm going to go ahead and just talk a little bit about. We'll keep things going today. Presenter, me, show my screen. Okay. And then let's do this. Okay. All right, very cool. All right. So Tushar did a pretty good job. He did a really good job talking about the Tushar Chande long-term system. And I really liked how he took the notes out of the Warren Buffett stuff and kind of talked to and kind of affiliated that. I do want to just basically talk a little bit about kind of the toolkit that we've kind of designed with him. Again, when he contacted us and said, hey, I want to help design a system for MetaStock. My name is Tushar Chande. I was like, I know who you are. We've been using your stochastic RSI system for a while. And so I really like what he came up with. In the toolkit that he has, it's going to have the 350 E40 envelope, the Chande trade meter, a stop, and the Vidya. So Vidya is actually included in this package. Somebody asked about it a little bit earlier. The trend meter is designed to measure the strength of a stock. And out of those indicators, he basically created the long-term system that he showed you, the swing system, and then a volatility breakout system, which is a very unique approach on a breakout. So what it looks for is it looks for breakouts, obviously. It's called a volatility breakout, but it looks for a breakout that's excessive of the average true range, if I'm remembering it correctly. And it's a really, really kind of unique way to look for breakouts. I really kind of like what it does. So with those methods, he talked about the long term. It's trend following. It has high levels of smoothing. It's designed to buy strength, and it's designed for that patient position trader. Obviously, it's going to use wider stops because it's a longer-term system. The swing system buys strength after there's been weakness. As the swing moves, it uses a bit tighter stops, and it looks for follow-through after breakout. And then the volatility breaks out. So it uses average true range to identify if it's a breakout of significance or not. And of course, with it, when you're looking at long-term things and volatility breakouts, and you're looking for very specific criteria, of course, you want to be able to scan for them because that's how you find them. You don't want to have to go look at every chart. And we might have mentioned it over the course of the last 4 days, but we really like the scanning engine in MetaStock. It does such a good job in helping you find those, and you'll be able to scan for any of those systems. So it includes the expert advisor. The expert advisor is going to give you the commentaries, the stop positions. It's going to explain the system, what's going on in the stock. It's all in plain English. They did a really good job with it. So, and it does have system tests. You can kind of see out of the back test. I think this was a back test that I ran on about 500 days of data, but the swing system really, really performed well. The long-term system also performed well, and so did the volatility breakout system. And I'd expect anything the Tushar Chande develops to have really good system testing. So $4.99 is the normal cost of the Tushar Chande toolkit, and I think we underpriced it. Here at the conference, we're going to do $3.99. We're going to back it with a 30-day money-back guarantee. We have, as soon as you order it, you're going to have access to an instant boot camp that we recorded around it. And if you need a copy of MetaStock, we'll throw in a free trial. We'll actually also help you install it. You have unlimited access to our support team. And so if you want to take advantage of that, give us a call at 800-882-3040. You can also visit us at metastock.com/saleschat. You can also go to metastock.com/Chande. So there you go. Take advantage of that. It's a really, really cool add-on. And I've been testing systems for decades now. And to say that Tushar's work doesn't come up at the top of that every time, he's definitely a consummate technical analyst. He knows what he's doing. So metastock.com/sales chat, metastock.com/conf promo, or give us a call, 800-882-3040. So we'll do a quick, well, hello, Scott. It's good to see you. Thank you for coming today. Matt, thank you for that really good comment. Kishore said, Tushar, appreciate your excellent confidence. It was nice to attend. Yeah, good job. And then Surrender says, thanks, Tushar. All right, we're caught up on comments too. So there you go. Real quick, I want to say thank you to Stocks and Commodities Magazine. They've been a sponsor of the events and the conferences we've been doing for a decade now. And we really appreciate that. It's a great magazine. You're here. I hope you've learned some stuff. I hope it's been helpful for you. And I do think that you should always be learning. You're always either getting better at what you're doing or not, right? One of the things I love is getting my Stocks and Commodities magazine in the mail every day, looking at it, taking a look through it, seeing if there's any articles, reading Tushar Chande's latest article, whatever it might be, right? Anyway, if you do a subscription to MetaStock today, you'll get 5 months for free from Stocks and Commodities. And if you spend $300 or more, you'll get a 2-year subscription. And great partners, great magazine. You should definitely take a look at it. So also want to thank the CMT Association. We'll talk a little bit more about them later. And AAII for their sponsorships of the event. Really got some great sponsors, and we really appreciate them. So with that being said, I should have asked for this earlier, so I need you to act fast. I'm going to give you a number. I need you to pick me a number from 1 and 11,239. And I need it really quick because we're running about 7 minutes late. So give me a number, and we're going to give away this Around the Horn book to the number you pick. So the number again is between 1 and 11,239. We're going to give away Adrian Mance's Around the Horn book. You can see it right here. See, it's a nice hardcover book. It has all of his patterns in it that he likes to trade with. And it's yours as long as you give me a number. Well, I mean, it's somebody else's as long as you give me a number. So let's see, Jennifer, 4727. So let me see who that is. I have everything ready. 4727. Okay. And the winner of that is Trader. I'm sure those are both the real names. Okay, so but they do have a Gmail account. There's not like a lot of identifiable information, but for the person that just won that, they didn't register with a real name. That's not disqualifying. We're okay. We'll call you Mr. Trader. I'll drop you an email, and if we can collect a real address from you and a real name, we'll give you a book. So in any case, thank you for the numbers, everybody. Hope you're enjoying it so far. Again, we're MetaStock. You can get an extended trial. We've only won the Reader's Choice Award for just 30 years in a row. Scanning, testing, forecasting. It's a great tool. I love it. I wouldn't trade without it. If you buy a month, we'll give you a second and third month for free. You can do that at the 800-882-3040, metastock.com/saleschat, or metastock.com/conf-promo. So there you go. Our next guest is Marina Villatoro. And I'm going to ask you, Marina, if I'm saying that right, because I hope I am. Also known as the Trader Chick. Also a very, very good speaker. Also somebody that's going to give us a little bit something different right now. So Marina, how are you?
Hi, I'm good. Can you hear me?
Yeah, it's good to see you. I'm going to make you I'm going to make you an organizer so you can see all the questions as they come in. And then I'm going to make you the presenter so you can share screen.
Go to a Villa.
What's that?
You could pronounce my name like Villatoro. You know, like when you go to a villa, and Toro, like the bulls.
Villatoro.
Yeah.
Okay, cool. I probably put a little bit more into that, a little bit more of a role. Villatoro.
There you go. Beautiful. Perfect. All right, hang on a second. I am sharing my screen, I hope. Let me know if you can see. All right.
I can see that. Okay, I'm going to get out of the way. I know we're starting a little bit late. It happens. We've decided that just the start times and end times are a suggestion. But
even better.
It's all yours.
Well, wonderful. Thank you. Hi, everybody. Thank you so much for being here. I know that you guys are just soaking in so much awesome stuff. I've actually been sitting in on quite a few myself, and they've been really informative. I'm learning a lot, like Jeff said, we can learn something new every day. So thank you everybody for being here. I am seeing that the room is full. There's so many people here. Can you guys tell me, where are you all from? Where are you guys coming from? I'd like to know. So send it here in the question box or the chat box. I'm not really sure if we use the chat box that much. Oh, there we are. Yes, I can see people are using the chat box. Utah. Oh, Jeff, you're from Utah. Nice. We were in Utah recently. We went to, oh my gosh, we went to quite a lot of places. Salt Lake City. Hi, Andrew. You are joining. Where are you coming from? Where are you joining us from? So I see that there's a lot of people and very few people are responding. So are you guys sleeping? What's going on? There we go. Surprise, Arizona. That's a pretty cool name. I hope you're always surprised. Portland, Oregon. Nice. Florida Keys. Me and my husband went there on our like mini honeymoon, but it was like, our sons were already like 10 and it's 4, I think. Canada. Nice. Croatia. Very cool. You're from Mumbai, but currently living in Seattle. Wow, that's a change. And Canada, and Chris is from Canada. Ronald is from Ontario. Chicago, very cool. Peoria, Arizona. Oh, nice. We have places for all of it. Here we go. Neil, you and Jeff can meet up. You're both in Utah. I know Utah is a huge state. I'm just kidding. John is from Clemens, Florida. Denver. Oh my God. So we are having a full house. Quite a lot of people here from the States, which I absolutely love, and also international. I just want to say thank you guys for being here. Really, I mean, I know that it takes a lot. We are all so busy, and the fact that you guys showed up, it means a lot. Oh, I see that there is Michelle is from Poland, Texas. Lisa, you are from Texas. Awesome. All right, guys, let's jump in. So I am here to present for you guys, and my goal is 100% for you to come out learning something. I actually always tell my kids, if you get one thing from the book you're reading, the presentation you're listening to, and implement that one thing, you have come out richer and more fulfilled than you were before, right? So I might be showing you quite a lot of things, but if you just take even the one thing and implement it, I can guarantee that will move you into another direction. Absolutely. Andrew, I found you from Dan Sugar, one of your presenters coming on this afternoon. Oh, okay, cool. All right, guys. So my other thing is that we are all here for a reason, right? Mainly because you want to learn something, but also I'm sure that you're facing some sort of challenges. I am here to answer your questions. I am here to help you guys, okay? That is literally the goal of me being here, on top of me teaching you things. So please ask away, ask any questions. I know that there's people on YouTube, so please ask. Jeff will definitely get me the questions over as well. Okay, so don't be shy. There is no such thing as a bad question, because if you have that question, I can guarantee that another person sitting in this room has that same question and probably might have not even realized they had that question until you ask the question. Okay, guys? So please, it's time to ask and enjoy. I am Marina, the Trader Chick, and this is me. And today, I really want to talk about something that we tend to overlook quite a lot. And that is kind of going back to the core, the foundation, the structure of trading, right? It's interesting because a lot of times we completely overlook the most important things, which are like the basics, and go right into the heart of stuff. It's kind of like you want to become a doctor, and instead of learning, all the processes, anatomy and all of that, you just want to hop right in and start to operate. And unfortunately, with the financial markets, there's absolutely no barrier to entry, and you can do that. You could kind of overlook all the important things to jump right in just because you have a little bit of money, and then problem is that we end up losing, but that could be completely avoided. And in this presentation, I want to be able to build that strong foundation with you guys, and that will be all through understanding day trading versus investing, busting a lot of day trading myths. What there is to trade. A lot of people don't even know what there is to trade. The trading lingo, understanding brokers, and all that other incredible stuff. But before we go anywhere, who am I? I am Marina, the trader chick, and this is me. I am an expat in Barcelona. And the reason why I bring this up is because I've actually been an expat for over 20 years. Before this, I was living in Costa Rica and in Guatemala. We moved just recently, about 3 months ago, to Barcelona, Spain from Guatemala. So now Barcelona is our new home. Absolutely, absolutely love it. It's definitely one of my favorite places for us to have lived, and I've lived in many places. And before I became a trader, I was actually a fitness instructor and a travel writer. And the main reason I bring this up is a lot of people believe that you have to be from a financial background or economic background, and that's totally untrue, right? Like you could literally be from any walk of life to become a successful trader. That is the coolest thing of all. I'm also trilingual. And the main reason I bring up that I'm trilingual is, well, first of all, I speak Russian fluently because I was born in the Soviet Union. We were refugees to the US when I was really little. And I learned English, not as English, but pretty much just learning how to speak. I just kind of continued on and learned English without realizing that I was learning a new language. But I learned Spanish in my later years. I was in my late 20s. And the main reason I bring this up is a lot of times, going back to this, there is no barrier to entering the markets. Imagine if you want to learn Spanish and you enter a room full of native Spanish speakers who don't speak a word of English, and you want to get into their conversation. It's impossible, right? Like, we understand that you have to understand how to say, hola, mi nombre es. You have to go through the process of each word and understanding and practicing, right? So that's pretty much the same thing when it comes to understanding and really learning the markets, is that it is a very similar process as learning how to speak a new language. And that's really what I want to focus on today and show you how you guys could do that. The coolest thing about trading, guys, you could do it from anywhere. There's absolutely no excuse these days, right? When I lived in Guatemala, I constantly was getting people saying to me, oh, how's the internet over there? I'm like, to be honest with you, it was amazing. Sometimes I went to visit my parents in New York and I had issues with my internet there. So there is no more barrier in that respect, right? You can literally do it from anywhere. And before COVID, I used to be featured on all these I used to go to a lot of live events. And sometimes I still get people in these presentations who have seen me live. So if you're here, hello. All right, guys, before we move forward, I just want to let you know that I have this presentation made out for you. Go to makingofaDaytrader.com. MakingofaDaytrader.com. Go here and you will get this full presentation completely for free. Just go to makingofaDaytrader.com. All right, so like I said, if you just get the one thing from this presentation that you can implement right away, I can guarantee that will take you to that next level. So first and foremost, what is day trading? Why is it not investing? So unlike investing, in day trading, you do not want to diversify. Don't diversify. I know that it's, you're overexcited when you first begin. You want to trade everything under the sun. It doesn't work like that, okay? Look, imagine your kid comes up to you and they say, hey, mama, or hey, papa, I want to learn how to play a musical instrument. And you're like, okay, cool. What do you want to play? And they're like, I want to play the piano, the drums, the guitar, the harpsichord. And you're looking at them and you're like, but they're all so different. Let's focus on the one until you master that one, then we'll move on to the next. It's the same thing with the financial markets. You cannot be trading all these different ones. Focus on one instrument, and that instrument can be the one that will make you all that money. I get students all the time that come to me. They're like, okay, I want to trade equities. I want to do Forex. I want to do futures. And I'm like, let's focus on just one thing for now to really get that going. And then once you get it, you can move on to the next. And you know what? 99.9% of the times, nobody continues on with the other because they are really loving that one instrument. But the thing is, they took that time to really commit to that one instrument. So it really makes a difference. Okay, the other thing is investors really care about the companies they're investing in, right? If Apple is coming out with the iPhone 15, you're going to be in it for the long haul. Day traders, we don't care. I don't care if the iPhone is coming out in 3 months or not, because I'm only focused on what's happening right in front of me. And if the market is telling me to go long, I'm doing that. If it's telling me to short, I'm doing that. So it's all about that. And it makes no difference if the market is going up or down, because we can make money either way. All right. Now, this is important. There are so many myths. I call them debunking the myths, but really it's just limiting beliefs and it's lies that keep us from moving forward. First and foremost, the majority of the biggest myth of all is that it's really risky. It's gambling. Think of it like this, right? If you want to drive in the Formula, let's say you want to be a Formula One racer, right? Do you need to learn how to drive a car? Do you need to learn how to race the car? Yeah, I mean, it's pretty basic stuff, right? You know you got to do that, right? You put in the time, you really put in that effort. A lot of times people just put their money into the market. They don't even know if it's going long or short or anything in between, right? They're just going. And then they wonder, why have I lost the money? Because they didn't even understand how to maneuver what they were doing or work with their platform, right? Imagine you just got MetaStock and you haven't even bothered to learn how to set it up. And then you're trying to learn how to set it up, but in the live market. Chances are you're going to lose. And then you're going to say, oh, it's a gamble. It's not. You got to just put in the time, figure it out, and then you will be able to do it. So that's where the gamble comes in. Because a lot of people just jump in without doing any of the work beforehand. The other big, huge myth is that you need $25,000 to get started. Total myth. Why? Because you need $25,000 only in the equities market and only if you're going to be doing a margin account. You can start pretty much with $500, even some markets with $100. I will really get into the margin account because that to me is loan sharking and nobody needs to have a margin account. I will explain that in a little bit. You do not need $25,000 to get started. Like I said before, you need to be a math whiz or financial background. No, not true at all. You do not need to do any of that at all because it's all about technical analysis. I don't use any math at all today. None. The only time I do any math is when I'm adding up my profits or losses. And that's it. You don't need that. That is a total myth. The other thing is that it's so stressful and chaotic. Well, if you're doing this, who wouldn't be stressed out? This is completely unsustainable, guys. This is not true. Like, I cannot tell you the amount of people that show you that this is how it works. It doesn't. You cannot sustain this kind of chaos in front of you, okay? One chart. I personally use one chart. Imagine having all this blinking and going on. With how are you not going to go crazy, right? How are you not going to be able to digest the proper data that you actually need to take the trades, to get out of the trades, to stay out of the trades, right? And the other massive thing is if you have a really good, strong platform, you don't need to be buying all these other things until you really know how to use that platform, right? Because the good platform offers you so much. So I always say the majority of the times, people that are selling you all these other indicators and algorithms and softwares, they're going to be asking you for more money later on to upgrade them. That's not what you want to do. You want to understand your software that you have in front of you and be able to use it properly. The other thing is there's this myth, oh, I have to get up at 4:30 in the morning and do all this research and stay up all day with all these different news items going on while I'm taking trades. Excuse me. And then afterwards, when the market's closed, I have to do more research. No, that is literally just driving yourself into the grave. That is so unsustainable. Look, the majority of the people that are doing the research and the news, I call this telenovelas because they're just experts. Well, they're nonsense experts that just want to hear their own voices and have their own agendas. You don't need that. What you do need to know is understanding technical analysis and how to read your charts properly. That is the most important thing. Another really huge myth that everybody here has probably done at one point, I certainly have been super guilty of it, is trigger happiness. What is trigger happiness? It is being in and out of trades all the time. When I first began, I felt that I had to be constantly taking trades, constantly. I was doing like 40 to 60 trades within like 2-3 hour session. Completely obscene. Even if I was winning, I was still losing on the commissions alone. You don't need to do that. Look, day traders, the pros, after I really understood pros, they take 1 to 3 trades per day. Because if you have a strong strategy, if you're looking for that strong, high probability trade, that's the one that you're going to be taking. That's the one that's going to give you the most amount of your money. That's the one you have to focus on, because the most radical way to trade is conservatively. Okay, because aggressive moves or too many moves, it does not work out, because small profits daily will bring you those big profits yearly, because aggressive moves today, nobody mentions that aggressive loss the next day. Okay, super important. The other thing is FOMO. I know that you guys have heard of FOMO, right? Fear of missing out. FOMO. This is a real thing. Fear of missing a trade. I cannot even tell you the amount of time people start to chase trades because they are in fear that they are going to be missing a trade, right? I cannot even tell you the amount of times. Here's the thing, guys. Here's the thing. There is always another trade coming. Always another trade coming. Remember that. If you miss this one, don't start chasing it, because what happens when you start to chase it, you get into an emotional state of mind. You chase the trade turns on you, you lose money, you start to go into revenge trading, and it becomes a nightmare. You end up losing everything. Just let it go. There's another trade coming. I guarantee it. I'm positive. I can guarantee it 100%. All right, guys. So here's the thing now. What to trade? All right. So back to that one instrument. Before you even start to go look for a broker and all this other stuff, it's really good to know what you want to trade. So here are the markets that there are to trade. We all know of Forex, right? Foreign exchange, the currency market. So here's the thing. The way it works is that it's pairs. It's two countries, whatever, dollar, euro, whatever it is, right? The thing is, a lot of people also want to get in on too many currency pairs. Again, too much chaos. Stick to 1, maybe 2 pairs so that you can really, really understand and master those pairs. Okay? Equities. Oh, I love it. Whenever I say to people, hey, so what do you trade? I trade stocks. What does that mean? There's 5,000 stocks on the US market alone. Are you trading? What are you trading? So the thing is, people who trade stocks successfully have system, right? They could either trade like a sector, technology, pharmaceuticals, entertainment, or maybe just big caps, or maybe just small caps. You know, I actually know quite a few really successful traders that only focus on like Amazon, Microsoft, Tesla. Those are high volatility, high volume stocks that really can bring you in really huge rewards if you focus on them. So don't say you're trading stocks. What exactly are you trading? Futures, same thing. So when I ask people, what do you trade? Oh, I'm futures. Okay, so you're trading wheat, you're trading soy, you're trading sugar, you're trading the ES minis, the NASDAQ, because none of them are the same. They all have incredibly different movements, incredibly different strategies, right? You cannot drive 5 vehicles on 5 different terrains at the same time. Choose your one. I personally am an E-mini person. I love the E-mini. That is the S&P 500 index on the futures market. Okay, pick the ones you love. Are you into options? Super, stick to options. Okay, don't start saying that you're doing all these other things when you can't even get your options done properly. So learn all about the options and do that well. Crypto. Hey, you know, whenever people tell me crypto, I trade Bitcoin, I'm like, well, Bitcoin is 1 out of 6,000 different coins and alt projects. Okay, what are you doing? Really find those things that you really want to learn. The same with crypto, right? And again, focus. It's niching down. You know, there's a saying, the riches are in the niches. So it can be applied to anything. What does that mean? It means that one instrument, that one. So if you actually get one thing out of this, please find your one thing that you really want. Why? Because then it will simplify everything else. leading into demystification of brokers and margin accounts. First and foremost, this always amazes me. I get people coming to me, or students are like, okay, I have a broker, I'm ready to start. I'm like, well, what do you want to trade? I'm not really sure. Well, the broker that you're going to be using needs to be compatible with what you're trading. If you're going to be doing crypto, do you really want an equities broker? Yeah, they might have a little bit of some cryptocurrencies that you're allowed to do, but I'm going to be paying so much more in commissions. The platform isn't going to be proper for that. So there's all these things, right? You need to first know what you want and then find a specialized broker. Now, what is a broker? This is so important. People totally forget what a broker is. Look, imagine you want to buy a pair of jeans, and you go into the Levi's jean shop, and there's a woman or a man, a salesperson there, right? You go, you look for your jeans, and what is that salesperson? Who is that? That's the broker. They do not care at all if those jeans fit you, if those jeans don't fit you, if those jeans are going to be a gift. They don't care. All they want is the sale. And a lot of times they're going to push that sale because they make a commission. That's the broker. Don't ever think your broker is on your side. The broker is literally there to make that transaction and nothing more. Okay? So if you're getting calls from your broker saying, why aren't you trading? Or why aren't you in the market? Or why aren't you doing this? Tell them, I'll get in it when I'm ready. Don't be pressured. Now, margin accounts. This is the broker's biggest thing. Ooh, we'll give you a really cool feature, a really good benefit, a margin account. Do you guys know what a margin account is? It's literally them lending you money, right? So if you have, and you need normally for $25,000 or more for that to happen, because then they can lend you more. So imagine you buy all these stocks for the money that you have, and then they tell you you get the benefit of having another whatever amount that you could buy more. They're lending it to you. So they don't care if you're going to lose or win that money, because they're going to need that money back, and they're going to need interest. Here's the thing. You do not need to open a margin account. It is not obligatory. It is not mandatory. And you could simply say no. And I recommend you saying no. Now, commissions. Again, if you are not with the right broker because you want to trade futures and you are with a Forex broker, are you going to get the best commissions? No, because that's not their specialty. Find the futures specialty broker. They're the ones that are going to give you the best rates. They're also the ones that are going to give you the best feed and the quotes. What is feed? Feed is literally gasoline for your car. Feed is what is giving you that real-time feed. If you're going to be a trader and you're going to be doing on a delayed, forget it. You're going to lose that money. So you need good feed. You need that feed. Platforms. Guys, without a good platform, there is no trading. Let me tell you something. MetaStock is an amazing platform. They work beautifully. They have all that you need, but you need to have that good platform for you to truly be able to do well. You cannot be a Formula One driver in a minivan, right? Same goes for trading. You need that platform. Now, let's talk about lingo. The thing is, everybody forgets that there is a lingo for everything that we do, right? Whatever corner of hobby, occupation, whatever has its own lingo. It's just how it goes, right? And even something as basic as understanding a car. Me and my husband just had to teach our oldest son how to drive a car. And it's his own lingo, right? He gets in the car and we're like, all right, buckle up, put your gear into first, make sure your clutch is in, brake, release the brake. He's like, wait, gear, clutch, that is lingo, right? Shift gears, that's a lingo. And if you don't understand, you're going to crash. This is the same thing for the lingo for trading, okay? And I have to say, a lot of people who fail in the beginning because they don't even bother understanding that there's a lingo. So let's go over this lingo really quickly. Intraday trading. Guys, that's it. It's literally in and out of all your positions in the same day. Why is that important? Because if you're going to be looking, if you're not intraday trading, you're going to be looking at a chart that is maybe a week, but you're only in the day position in and out. Does that 1 week matter to you? No, you need to be in the 1 minute chart or the 3 minute chart. Wait, are you swing trading? Then maybe you should go into that's a longer time frame, a 1 day chart or 3 day chart. A 1 minute chart will not do you any good if you're swing trading. So you need to understand what exactly you're doing. Bull market is literally the market trending up, going up. Bear market, market going down. The thing is, there are 3 trends. There are 3 types of markets. The sideways trend is probably the most important of all because it's the one that is overlooked and it's the one that takes the majority of your money because this is that indecision area. And you need to understand that there is one. All right, this is so important. Profit target. Okay, you need to have your profit target in place as importantly as your risk management in place. You cannot do a mental stop or mental target. Why? Mental stop is literally the same as saying you're going to put on a mental seatbelt on your baby and thinking that you're going to protect them in a car crash. A profit target is when ego really kicks in and greed will always win. What does that mean? It means you've got your profit target in and then you see that the market is continuing in that direction and you remove it and don't take your profit and boom, it changes and goes and stops you out. That's greed. Why don't you put in that profit target, get filled and split target to be able to go to the next level? You need a profit target. Don't just wing it ever. And again, all of this is done from the Holy Grail, which is the chart. Okay. And I kept on saying technical analysis. You need technical analysis. And the only way you could do that is with indicators. Charting platforms, they offer you really great universal indicators to the point that you really don't even need to think about others. Okay. Indicators are so important. And again, trending markets. I mentioned that before. We have the downward trend, the upward trend, and that sideways trend where all that decision is going on. All right, guys, what's a buy? What's a buy? It's literally going long. So to simplify it as easy as possible, when you hear somebody saying I'm buying or I'm going long, you're literally entering at a lower price point, exiting at a higher price point, and taking that money in between. That's it. Don't overthink it. Selling, going short, it's literally the opposite. You're entering at a higher price point, exiting at a lower price point, and you're taking that money in between. Okay, there is nothing else that you need to think about. Oh, but somebody's losing money or this. Who cares? Do you know who that person is who's losing money? Do they know you? No. Technical analysis says to sell, to go short, that's what you got to do. That is your job as the trader. The other very, very important thing is market orders, right? Basically, when a market order happens is you're telling the market, I'm a total amateur. I don't know what to do. Oh, wait, the market looks like it's going in my direction. Oh, I'm going to go in. I'm going to go in. Boom. So the market immediately knows, okay, this person is a total amateur. I'm going to find them, which is called slippage. A lot of times you lose immediately 20 to 25% of where you wanted to enter in the first place. Guys, if you want to be pro, you got to act pro. And what does that mean? You got to be putting in your limit orders. You are in control of what's going on. You tell the market, this is where I'm entering. This is where I want to be filled. And it goes the same for the stop limit. You are telling the market exactly where you want to get out. That is where your risk is. I'm not risking anymore. That's it. That's the stop limit. Don't just go out whenever, because again, it's slippage. You're going to end up losing money. And you're telling the markets right away that you are not 100% pro. You're an amateur. You don't know what you're doing. All right. Technical analysis, guys. I'm going to just simplify it for you as simple as possible. And it could be used on any instrument that you decide to work on, because technical analysis is the language of the market. Areas. I'm sure you guys have heard of these areas: resistance and support areas. What's a resistance area? It is when the market is going up and it starts to hit the ceiling. It's literally a ceiling over and over and over again. You need to draw it in, because again, you need to have a real area drawn in, not a mental resistance area, and seeing where it comes to, because it's an area the market is respecting, and you want to stay out of it until it either breaks through it or shifts direction. The exact same thing with a support area. It is the floor of the market. It is the floor of the market. All right. It's when the market is hitting over and over and over again, multiple times. All right. Reversal pattern. What is a reversal pattern? Guys, this is probably the most beautiful thing ever, and it's free and it's so simple to understand. Reversal patterns, double tops, triple tops, head and shoulders, double bottoms, triple bottoms. These are so beautiful. They're free and they can be spotted on any market at all on your chart. Divergence. I personally live for divergence. What's divergence? As you can see here, my price action is going up, and I personally use the MACDs. My MACDs are going down. What does that mean? It just means that there is divergence in the market. It's divergent, and that means that the market is losing its strength. I want to be in the market that has full-on strength. So I want to be staying out. And finding divergence is really simple, right? If you know what to look for, you could stay out of so many bad trades and get into so many good ones simply by spotting divergence. Without a doubt, my absolute favorite thing to do. So before I continue, please go here. makingofadaytrader.com. Go and get your cheat sheet, everything that I'm talking about, and a lot more. makingofadaytrader.com. All right, guys, I want to just do a really quick putting it all together, because a lot of times we hear about these really powerful trades, but because we are not looking for the right thing, we don't have that structure, we miss it. And the biggest one of all is breaking out of areas, right? Finding that breakout. Because the breakout trade is without a doubt the most powerful and probably the most simple one to spot when you know what you're looking for. When you have seen the area, right? You have either the resistance or the support area. When you see the breakout, when you see that whole move, right? And that you could spot with the indicators, right? The indicators help you understand, because the consolidation area, that's that sideways market, right? That is that sideways market. And if you understand how to do it, you know how to avoid it and also stay out of all those bad trades. All right. So we have to be able to spot it. And again, it's all about spotting it. It's about placing in your limit order, telling exactly where you want to be filled, but looking at your, is there divergence? Is there movement? Is there strength in the market? All of these things put together, and boom, you have the green light to go and get your trade. And then you already have your profit target in place and your stop, right? Because that's what it's all about. All right, I just want to go in really fast here and show you how I personally use all of this information that we did, right? So this is the chart right here. I just want to show you a perfect example. We have had a beautiful downward market today. And look at this incredibly powerful support area, right? And you could actually even mark it off as a channel. So here it tried to go continue out, and then it totally flipped direction and did a transition. I draw these in, boom. This is where I'm seeing how the market is moving up and going in the opposite direction. And I'm already ready for that next area right here. And now it's showing me that it's moving upward. Okay. And right here, by the way, it's showing me a perfect double top with massive divergence. So what is that showing me? It's showing me that the market is starting to slow down, and I need to sit out and wait to see exactly what's happening. And interestingly enough, it's also showing me a wedge. Okay. So these are just indicators, super basic indicators that you can easily follow along with. Okay. And that's literally just understanding what is right in front of you. Hang on just 1 second. Oh, okay. Nicole, can you please email me the traderchick@gmail.com and I will send that to you. Sorry for the problem. I'm happy to send you guys the cheat sheet if it's not opening for you. The traderchick@gmail.com. Okay. And I will be happy to send that over to you. All right, guys, here's the thing. You have absolutely everything you need to take action, right? You have the YouTube channels, YouTube people. You have presentations, books, podcasts. You have absolutely everything you need to take action. But how do you know that you are doing it right? How do you know that you are doing it right? Who is there to help you understand if that is what you're doing, right? Because all of this is great, but the real question really is, how do I get started? How do I even begin? And this is not from the beginners I get. Actually, the majority of these times I get this asked by seasoned traders, people who have been trading for years and are still not consistent, are still losing money. And they ask me, what can I do to turn this around? How can I be profitable consistently? Right? And honestly, a lot of the times it's literally just lacking the basic understanding of the basics, right? And also focusing on that one instrument and truly just understanding the basics. I always say we cannot be putting in windows without walls, right? They're just going to keep on crashing. And that's literally what it is. What is a wall? It's the basic foundation for beautiful windows that you could be putting in, right? And that's exactly what I find to be a real, it's just something that we overlook, right? It's like getting in the car. Today, when you guys get in the car, because you've been driving for so long, you forget that you at one point learned the basics. Where's the steering wheel? Where is the clutch? Where is the brake? Where is the accelerator? Where is the shift? Where's the windshield wipers? These are basics. Now, imagine someone who has never, ever been in your car, hops in the car, or in a car, sorry, in any car, hops in the car, and you're like, all right, put on your seatbelt, buckle up, it's going to save your life. And they're like, buckle up, seatbelt, oh my goodness, what is that? And it's going to save my life. And now, and it's such a basic thing, right? We all know what a seatbelt is, but if you were never taught that, how would you know, right? And that's exactly what happened to me. I spent thousands and thousands of dollars on my own training. And honestly, I was still struggling because I never was taught the basics. And every time I asked, can somebody please help me with what is divergence? What is a reversal pattern? What is an area? I would either be completely ignored or treated as if I was supposed to be born with this information. And none of us are born with this information, right? It's the super basics. And that's the beauty of it, because basics are quite simple. And once you learn them, they're amazing. And because I lacked that basic knowledge, I ended up losing a lot. And actually, I ended up losing almost $4,000 in 5 minutes. And that's when I just simply decided to quit. I couldn't take it anymore. I was quitting nonstop. I was losing nonstop, and I just quit. I quit. I walked away. But here's the thing, and I know that everybody in this room has the same thing. We are all bit by the trading bug. We are all bit by the trading bug, and it never stops itching. And do you know why? Because deep down inside, we know that we could do this. I was watching others, and I'm like, if they could do it, I know that I could do it. I know that I could do it. And what I ended up doing was this. I came back. And what I did was I used to have 3 monitors. I literally took 2 high definition monitors, put them outside for my garbage man, pretty much donated them to my garbage man. I removed all of my indicators. I had like 10 indicators. I was constantly in stress and paralysis analysis constantly. Okay, I was in constant freak out mode. I removed all of my indicators. And what I started to do was I started to put one at a time, right? The thing is, we have this misconception that if one person says to use this indicator, another one says to use that one, that we need to be using all those indicators. I was constantly under this impression that I needed to be using the Fibonacci's, the Kettler bands, the Bollinger bands. And once I removed them and started to use the ones that really work for me, I cannot even tell you the relief that I was getting. And I was finally doing really well, like succeeding and constantly hitting my target profits, my profit targets. Okay. And one day, a while back, a couple of years ago, one of my students came to me and he was like, your teaching method, Marina, is really similar to Coach John Wooden. I'm like, who's Coach John Wooden? I never heard of the guy, right? So I went online and of course I looked him up. And if you look him up, you'll also find what I found. This guy was a legend, a dynasty, right? He was one of the greatest basketball coaches ever in history, I think up to today, right? And his entire philosophy, when in doubt, get back to the basics. And I mean, this guy was incredible. Like his accolades outnumber anything you could imagine. 88 national championships, 10 NCAAs. I mean, this guy was amazing. He trained the top of the top as well. And the thing is, here's the reality. Every time they started a new season, he would get back to the basics. What does that mean? For instance, he would make them learn how to tie their shoe, how to roll up their sock, how to dribble the ball, because it doesn't matter all that you think you know, the beautiful windows that you want to put in. But if you are on the court and your shoe isn't tied properly and your shoe falls off and you sprain your ankle, guess what? You're sitting out for the rest of the season. So you got to get back to the basics. And today, for you guys only, for only people that are arrived, I have a very special offer. My introductory course, Bootcamp for Day Trading. And you can do this on any apparatus, on desktop, laptop, tablets, phones, you name it. You could use it there. All of this for one-time price. One time, this is not a recurring price, one time of $97. Now, I want you guys to go here with me right now. Bootcampfordaytrading.com. Go into your navigator, put that into your browser, put in bootcampfordaytrading.com so you can follow along and see exactly what you guys are going to be getting for $97. Because here's the thing. What can $97 really bring you the same as the return on investment as you will get here? Let's go over that. Do you guys like to play golf? Because when we first lived in Guatemala, when we first moved to Guatemala 14 years ago, me and my husband were playing golf and we used to go, and it was like $27 per person. Before moving to Barcelona, per person, it was $119 to play golf, and that was in Guatemala. So I can't imagine how much it costs where you're living. Oh, you like to go out to lunch or take your family out? Today, $97, maybe will buy 2 decent meals. Maybe 2, right? So you're talking about just you and a friend or your partner, right? So you can barely do anything anymore for $97. So let me break down what you will be getting in bootcampfordaytrading.com. First and foremost, we will be going over the entire setup of your chart so that you do not need to worry about how to set up the chart or anything like that. We go over, I have a tutorial for you. I help you set it up so that you are ready to go and trade, because trading is the most important part for you to actually focus on. Next, what we're going to be doing is the market anatomy and really dissecting those trends, right? To really understanding the upward trend, the downward trend. And remember what I mentioned about the sideways trend? That's where we lose the majority of our money. But learning how to avoid it will not only help save you a lot of money, but also be able to put you into really profitable trades. And we go over all of that really in detail and really focus on the magic telltale signs, the reversals, the divergences, and all those other incredible things that are easy to spot. But if you don't know what you're looking for, you're not going to be able to do it. Then we're going to really get into the areas, support, resistance areas, and divergences. Like I mentioned earlier, divergence to me is my holy grail. It's definitely my absolute go-to. And when I could see divergences, I already am staying out and waiting for more confirmation. And that's when I really go in and take the most profitable trades. And what are they? They are the breakout trades, guys. If you don't know what you're looking for in breakout trades, you're going to miss the breakout trades, or you're going to end up losing before you can get to the breakout trade. So we go over all of that, how to spot that, and how to avoid getting into a fake out breakout, because they do happen and you can avoid the fake out breakouts. You can completely avoid getting into those types of trades. And you'll also get unlimited access to the curriculum. All of this is valued at $1,600. Remember, you're getting it all for $97. But wait, there is more. I've got some really cool bonus for you right now. All right, so this is everything that you guys are going to be getting for $97. And here's what some of my students have to say. And I have students from all over the world, because that's the beauty of trading. You can do it anywhere in the world. Here's what Michelle had to say. Best money ever spent. I just finished the boot camp. Best money ever spent. Derek, this mentor, you are the only mentor that truly checks the work. that all the work that you do. I'm so grateful. Adrian, I am enjoying your boot camp so much. I am learning every day. Now, let me share something really, really important with you. Do you remember what I asked you guys at the beginning? How do you know that you are doing it right? How do you know you're doing it right? How do you know that you're looking for a long when instead it's actually a short? How do you know that there's a resistance area? So one thing that I know for a fact is that the most successful people in the world, they work with mentors and coaches. And I am including a mentorship with me included in that $97. 1 month mentorship with me, unlimited feedback, unlimited coaching in that month, $97, nothing extra, you're included, because working with a mentor is what can truly take you to that next level. And that's the most important thing of all. And I have the best for last. I have a live chat room that it's me, no administrators, no moderators, it's me, and that I'm including a 30-day free membership in this one-time $97 fee. Okay, all of this valued at $2,600, you guys get a special price for $97. So let's go here right now. Bootcampfordaytrading.com. Go and put it in your navigator, and into your browser, for bootcampfordaytrading.com. Here is everything that you are going to be getting for that $97 one time. Everything in the course. 30 days, one-on-one mentoring and coaching with me. 30 days in the live trade chat room. Okay? And here's the reality. I know for a fact, I've been doing this for over 11 years, we don't even put in $97 for an average trade. We normally put in between $200 to $400 for an average trade. This course is less than the average trade, and it can bring you 10x on your return of investment, all that you're going to be getting inside this course. So you could go out for 100 of these amazing dinners from this course alone. But here's the thing, because of my mentorship, I am only able to take on 25 students. Only 25 students, and there is a full room, and I know that it will be filling up really fast. So I recommend going to bootcampfordaytrading.com. So put in right here into your browser, bootcampfordaytrading.com. Bootcampfordaytrading.com. Okay, guys, so I have a few questions here, I think. Let me just see here. Oops. Is that made a stochastic propriety indicator? Oh, you mean like no, that's my MACDs. I personally use the MACDs. That's my favorite indicator of all. Oh, yeah, so, right. Andrew, where find the cheat sheet? Oh, okay, Jeff sent that to you. Thank you, Jeffrey. Send the link. Okay, right. Unfortunately, James, I'm not going to be able to take your email here. Can you please email me directly to thetraderchick@gmail.com, and I'll get that out to you. So can you please send that over to me, because I'm not going to be able to put that in. All right, guys. So please go here, bootcampfordaytrading.com. Go to bootcampfordaytrading.com to get this special deal. Honestly, this deal, I'm only offering it to you guys here today, and here it is. So you can go in to your browser, bootcampfordaytrading.com. Bootcampfordaytrading.com, and this is where it will take you. And you can see one-time payment of $97. If you do want to do a payment plan, I do offer 2 payments of $59, but $97, but you automatically get access to everything that we were talking about. 30 days mentorship with me and being in the live chat room, plus the entire the curriculum as well. So go here, bootcampfordaytrading.com. And if you guys have any other questions, this is definitely the time to ask. And Jeffrey, I don't know if there was any questions from YouTube or from other places that I am not able to see, I'm happy to answer everything.
Here's a hot one. Just came in.
All right.
Carlos wants to know, how do you know what stocks to look for? Do you have a scanner?
No, Andrew. Oh, sorry, Carlos. I teach how to read the charts. It's very different when you have a scanner, when you're paying for a scanner, or when you already know which stock you want to. You have to know, once you decide on the stock, you have to know how to read the chart, right? Even with a scanner, you need to understand what your chart is telling you. Otherwise, you're still going to go blind because it's somebody else doing the scanning for you. This way you have full control. Okay, and that's what I teach. I'm teaching you how to read the charts, how to be able to take those profitable trades. Okay. Andrew sent a request. Okay, super, Andrew. I will definitely respond to that once I am at my email. Are there any other questions that I can respond to or answer? Please let me know.
Comments. We had somebody say, day trading versus investing, the difference is day trading versus investing, the difference is interesting to know, and many don't know it. That came out of the YouTube. And
I actually always say, when people hear that I say, oh, I day trade, they're like, oh, I really want to learn to invest. And I always tell them that we day trade to invest. They're very different, even though they're under the same umbrella. But yes, very important to know the difference.
Cool. And that's, let's see, and then we had another positive comment, but I've got to order these correctly. But great job. I'll give you one. Great job. Appreciate your comment. So if you're interested in that, do you specifically, here comes a new one from Kishore.
Okay.
What specifically do you trade when you're trading? That's a really good question.
Personally do the E-minis. I love the futures ES minis, which is the S&P 500 on the futures market. I find it to be the most high volume flowing market there is. That's my preference that I personally.
All right, very cool. Thank you for coming in, Marina. I appreciate it.
Yeah,
and
thank you.
We will see you again soon. So the website for that is bootcamp4daytrading.com. And
thanks to everybody. Thank you. Bye, everybody.
All right, very cool. Do this. Push some buttons over here. Okay, and then I think we're good. Screen's on, mic's on. Okay, everything looks good. All right, very cool. People, it's now time to help me. What I'd like you to do is, if you're watching on YouTube or if you're watching on GoToWebinar, give me a number. So the number that we're going for right now is between 1 and 11,239. The number you pick is going to be the lucky winner of our next prize. So again, you can pick one. Actually, don't pick one. That's probably me testing to make sure everything looks right. But anywhere between 2 and 10,689, give us a chance, give us a number, and help us pick the next winner. And while we're doing that, I do want to say thank you to Stocks and Commodities and CMT and AAII. And I'll talk a little bit about AAII this time. AAII, a brand new sponsor of the MetaStock events. They've been doing a nonprofit organization since 1978. They've got 4 million traders that they've helped over the years, and they do a great job. They do courses on trading. They do reports. They do some market metrics. A huge organization, lots of huge good respect from them. If you are interested in finding out more about AAII, go to AAII.com. So there you go. Looking to see who the winner is. I'm going to take this one out of YouTube, 5,050. Okay, let me pick the prize real quick. So let me go ahead. I've got a list of prizes. And let me tell you what number 5,051. This one will be the weekly market video report by Jake Bernstein. So every week, Jake will go in and he'll do a technical market commentary using his trading strategies and tell you what he's thinking about in the futures market, including and cryptos. Normally, it's about $495 is the prize value. Jake's a really good technician, and this is a really, really good prize. So what I'm going to do is figure out who the winner is and then make a note of it so that I know who it is later. So Jake Bernstein. Okay, so 50-50 is Warren E. Okay, Warren E., you have a email address that's autopacific.com. I believe that's probably pretty specific too. So Warren, congratulations. If you're listening, type in something so we know you're here. You don't have to be present to win, you just have to register. If you're listening to us in GoToWebinar, you've already registered. If you haven't registered yet, well, Kelly behind me is going to type in the metastock.com/traders-conference address. You can go register and you'll be available to, or you'll be in the drawing to win valuable prizes that we'll be giving away all day. So while we're doing that, I do want to say thank you for everybody that's come today. I want to remind you that we're MetaStock. We've won the Reader's Choice Awards. Only 30 years. We're going to go for 40. I love MetaStock. I wouldn't trade without it. It helps you scan the markets, test trading ideas, forecaster. Scott talked earlier this week about the forecaster and the patented technology that goes in there. Pricing starts at $69 a month if you're in the US and $59 if you're out, not looking for US data. What we're offering as a special to try our award-winning program during the conference is if you pay for a month, we'll give you a second and third month for free. That'll bring your cost for the software that's been rated #1 in its price category for only 30 years in a row to about $23 a month. So I encourage you to try it. I'm going to use it here all day long, but I always use it every day I trade. I love the scanning. I love the scanning. But the testing and the forecaster is such a well-balanced tool. Give us a call, 800-882-3040. Visit us online at metastock.com/conf promo or metastock.com/sales chat. So thank you, Tushar, for all those great questions. You've been great. You've been I think you've been here every day, right? And always have really good questions. So appreciate that. Troy, thanks for the number. Carlos, thank you for the number. And Doug, thank you for the number. Let's see. Jack, thank you for the JSEC, not Jack. JSEC, thank you for the number. All right. Our next presenter is another great technician. Let's go ahead and talk a little bit about him. I have a lot of extra slides in there for some reason. I better go check the rest of them. Peter Voss, our next speaker, he comes with us with decades of experience. In fact, one of our most successful subscription add-ons ever was called Forex Traders Advantage. It's what he was kind of working on and very, very popular, maybe a decade ago. Over the years, he's also created another refinement of that called the Magic Trader Elite, which is also another popular package within MetaStock. He's going to talk a little bit about the ingredients that he uses for success. So Peter, let's go ahead and bring you on there. How you doing, Peter?
Okay, can you hear me? Yeah.
I can. You're coming through good. Let's make sure we have a screen share. We're running a little bit behind. I don't want you to be too worried about coming in within 15 minutes. I think let's get you through your presentation, but we are running a little bit late, and that's common for us. So I can't see your screen now.
You could see my screen?
Yep, and you are ready to go. I'll get out of the way. Go.
Let me test it out. Okay, testing good.
Yeah,
all right.
It's advancing.
Thank you very much, Jeff, for
Thank you.
this introduction. Thank you for having me on this event, which is one of the best events. And thank you for everybody who's attending around the world. So good morning, good evening, whatever time zone you are. And we're going to have a good session, and we're going to talk about a lot of things today. And as Jeff said, I don't have to worry about time, but I will still try to stay focused on time. And later on, Jeff is going to talk about it. But these are the topics we're going to talk about it. So it is self-explanation, what we're going to cover. We basically focus on 5 patterns, or sometimes we call them as 5 ingredients, but they have simplicity with that and easy to spot on a chart. So we don't have to go crazy looking for whatever the traditional stuff is, and kind of designed to fit in a lifestyle. I have it, so I could make decisions very quick instead of having 3 hours spending in different trading plans. And that's how it was invented while we were traveling together, me, Jeff, Kelly, and other people's back in days, because I don't have time and I got to run business. So figured out a better way of doing things, and that's how Magic Trader was invented. But before we go too far deep into that, our lawyers requires us, and I'm registered with CFTC. Even my company is also registered. So we need to have a disclaimer, which is kind of more than normally you see it. So I will be very quick. You could get a copy from our website, themagictrader.com. You will have the recording of it. You could read whatever the disclaimer says. In short, do not trade something which you cannot afford to lose. So that's what it means at the end of the day. But I will point it out some important points in each slide. So there is no guarantee for making profits or freedom from loss. No trading system has ever been devised, including Magic Trader, that somebody can guarantee or say that consistently making money, even though it is true. That's the way law says. So I'm not investment advisor. I'm not a lawyer. I'm not a chartered accountant. So you better hire somebody to give you the advice. What we do chart interpretations based on my technology. That's what we're doing it. So I took out my hat being a money manager to do this thing because I can't be doing both and still stay with good side of the regulators in a way that the time commitment I need to give it to the clients. So for time being, I'm doing education about my technology to all of you. CFTC Rule 441 basically says that there is a lack of liquidity in the market, higher bid and ask spread with because of the liquidity. So you can't take this performance from day to day and repeat yourself. If somebody says, oh, I'm doing it, I don't know what to say, but I don't, because that's what the regulator wants us to clarify. Nobody can make a statement that it is possible or is consistently going to perform the same day and the next day. It doesn't work that way. So please be mindful about it, be realistic, and my software also does not guarantee you that way. Now, I do trade options. Software has option symbols, so we're going to talk about it. Options are risky. Some strategy you could lose more money than you even started with. So you got to be very, very careful trading options, such as like naked calls, naked puts. Back in days when I was young, I was doing too. But today, do I do that? No. Especially in this market, no. And there is a best education source is Option Clearing Corporation. Please take this number, call them up or Google them and get those supplement and all the risk disclosure. And it's pretty good education wise. Our lawyer says, okay, I'm registered with the government as well as my company. So we got to have company's disclaimer, more or less selling the same thing. We are not giving anybody advice and we are working in a capacity to evaluate the chart, including my company. So we don't give buy and sell recommendations or hold recommendation. Again, we have a lot of patterns, service mark, trademark. So please respect that. I don't want to get into that, but we've been having patents since 2003 on both of my products. So please respect that. And this thing came up with previous administration. So please try to be mindful. And we hold intellectual property on every single thing you see here or going to see here. Again, this is my registration number. We required by law to tell you this is my company's name. And here I want to clarify. Sometimes I discuss the trades I'm going to tell you that I'm in that trade. Otherwise, I am not going to guarantee because I also have other people trading for me while I'm doing these things based on Magic Trader. So I cannot just make a blindly statement I'm in there or not there. But physically, if I'm doing it, I do make this statement that yes, I'm in the trade. Again, testimonials, we tell everybody don't hype it. Tell as it is, you could make money and lose money with this software. So this way, we cannot say that only we could make money. And that's what normally the regulators really don't like it. You have to balance it out. Again, we developed this method, we have a trademark, and we have all this happy stuff of intellectual property. But that has helped us to bringing down drawdown almost to zero or many times zero. Hard to believe, but people in alert room, if they are here, they could put it in there. They have eyewitnesses in a live trading, not just hypothetical trading. So, but we cannot still guarantee anything. That's how it works. Again, now we go back to the basics. We're going to talk about what we're going to discuss today. So I'm going to show you how to trade with Magic Trader. That's everybody wants to do. And how to use simple trading strategy. And the methods about these 5 patterns and the combination of that has, I cannot tell you, unlimited, but they have a substantial amount of trades get generated if you know how to use them. And they are very easy to identify on the chart. And you could also have situation where you have the best opportunity in minutes. So what I did it, all this traditional way of technical analysis, and no disrespect to anybody who's teaching them or who's practicing them, but I figured out a way where I could save time and I could spend time with my family. That was the whole purpose. And I could still travel whatever I was doing before, and I could still have a better life. That was the whole purpose of it. And you could also do the same thing. And what we're going to do, we're going to show you some tricks so you could boost your confidence. In matter of minutes, you could start trading. However, I will warn you, this software is a massive software and there are many inventions there. So we took a route which we do not need to follow traditional stuff, and I created things from scratch so I don't have to follow anybody, and still I could get in my institutional experiences right into the charts which retail traders can get benefit out of it. That was the whole purpose of doing it. So I'm going to explain to you very briefly, right? And then we're going to go back to where you could get those few patterns, in this case, phi on a bull side, phi on a bearish side, and utilize them. So this is what we call health window. So it is representing health of the security. So what is going on inside the security? So we're going to use some of those lines into our method of doing the interpretation before you want to pull the trigger. So these colorful candles represents the price sectional risk, which I have the pattern for. So basically, this was one of the best thing I figured out. So you say when you buying, it is not just buying. There are 3 major buy areas into the trading. Similarly, on a bear side, it is 2 different areas where different kind of institution and the retail trader joins in. The same way, it goes into bullish side also. So these color candles has those meanings to that. But we also try to focus when you're ready to enter into the game. So pinpointing, so the bull, right? So you are go to bullish side. Here is the bull for you, and that has it's its own interpretation, and I will give it to you. That was not the purpose of this webinar, but I will give it to you because there are some of the traders have joined Magic Trader and some of the experienced traders are there. So YB4 means I could tell you on a multiple time frame without looking at 15 minutes, there is a buying coming into the security and is building up daily. That's what it means. So it has a lot of stories to tell every symbol. And you could see here these blue circles and bunch of numbers underneath them. It is based on the risk and forecasting. So it tells you here, we're going to go to long, and it has an attachment of call options. So if you want to buy, you could buy the call options. You pull out your broker platform and look at the implied volatility, whatever you feel comfortable. But it is telling we're going to go higher. And it has been performing since 2006, 2007. So I use it personally. This is one of the things I love it, right? And it let me have my confidence that I could add more lots if it was a euro or whatever it is, or buy more stock. So I don't have to worry about asking my friends on Wall Street, what are you doing? I used to do that when I didn't have this software. No more. All right. Then it is also explained here. When you get these slides, you could look at that. Then yellow bar is also here. We call it a catalyst because that's what you need a fuel to the fireworks here. So that's how we use them. It's easy to spot. These two lines are not the lines you are used to. They are specially made, and it took a long time to do it. First line, the green line, took me 6 months to program it. That can tell you the story. And this simple looking lines has a lot to do with that. It took me 2+ years to do it. All right. And MetaStock programmers had a good time for a lot of months to do whatever they need to do to protect all this, my intellectuals. So there's a lot into that behind the scene. Now, what we're going to do, we're going to discuss one by one. What do you need to trade in order to go in a bullish direction? How to spot it? So this vertical line, long vertical line on the health window is the number one pattern I look for, or you could call that the ingredients to cook the food. So basically, it's very easy to spot. Anybody who has gone to at least high school, they could spot it, right? Or some people in kindergarten. No, I'm just kidding. you know, Earlier stage of their learning curve, they could spot the green vertical line. Green vertical line means the direction of the security software automatically figures out we going long. That's what it means. So in your trading, you got to spot this line. Then there are three important lines. They are stated here. One is the purple line, then one is the blue line, and one is the dotted line. Dotted line has a value 0, which you could see on a chart right here. Then one value is also available right here. And the last line on the top is number 4. That means +4. So your basic concentration, is it above 0 line? Yes. It is parallel? Yes. And the values are automatically, you could determine right on the right hand side of the chart, which is 4 and 1. And you're good to go. That means we are okay. Health is good. That's what you need to understand it. The third one is a green spike. It's an entry spike. So it is a triangle. And I want to clarify, a lot of MetaStock existing user, these spikes are not the same which you are used to. This was also breakthrough how we figured out. Okay. And they work differently. And I want to give you, we call it anchoring or stabilizing. When it's stabilized here, then you go to enter it. However, it comes earlier than this date and tells you we're going long. So this was my biggest problem on the institution side. How I know that I need to do short covering, and all traditional indicator did not like me, or probably I was not too good about it. Who knows? But we were all using that, right? Everybody. Same thing. I said, I got to figure out a way. So I'm alerted that we got to do short covering, not my friends telling, oh, short cover everything. Buy some clip. Clip means 50,000 shares. They were asking us to put it in. That's what they kind of nickname on the floor. Buy 10 clips. So that means I got to buy 500,000 shares. Okay. But when? As good as everybody guessed was mine. Oh, MACD looks good and this looks stochastic. Do you have a time? No, I want to execute the trade. So this line comes in halfway in the scanner, or physically I'm looking. I am having my eyebrow up, short covering, and you could see what transpired if I did not do that. And that's easy to spot. Fourth one is a pure hell. So instead of interpreting all these things, I want to the point. So we have this thick vertical line, which is a green color, shows up. That means I'm in. I got to go, right? And this is your last call to do short covering. another way. So it is coinciding. So it is also true the software lines them up in a way they all line up or partially line up. Then you just have to make that decision. You want to go in or you want to do whatever you want to do it. If you want to get chicken out down, pull the trigger. No force, nothing. Then the last one is the ribbon. And I will again tell you this is not the same. We're using MetaStock, great infrastructure, so we don't have to reinvent the wheel. But this is based on the risk which are time sensitive. So there are thousands of risks which I don't want to get into, but this software is based on the risk exist and the clustering they do it just in a spiritual life, energy clusters and all other happy stuff. It happens here too. And actually this was designed based on what I started learning and it clustering of the energy. So all the energy lines up, they all line up. And in a matter of minutes, you could scan it and you're good to go. So what I did is I put them all together for your understanding. Easy way to remember. 1, 2, 3, 4, 5. So all checked in, right? Vertical line is a direction line. Police health lines, they are 0, 1, 4, or you could even remember 4, 1, 0. Then dotted green spike, that means we have entry and a pure health. So we're good to go. It's healthy to go along. And green ribbon. So this is how easy way to spot them on any chart. If they don't line up, don't go for it. And you could scan all these things which we're going to talk about in a few minutes. Now, what I did, I put all these different circles, which 5 patterns, numbering system on the chart. So this way, you know how the chart should look like after all these things you saw earlier. So again, vertical line, which is direction line, we are in. Number 2, this is number means 4 plus value, and this is 1 plus value. That means we're good to go. Parallel, health, we are okay. Third one is the entry spike. It's starting to go. And as I told you, at the base, it get anchored. So yellow bar form, so we good to go. But we were notified in a scanner or physically on a chart have spike. That means we cannot stay any more short. And people who are existing, especially alert room people, look at here what we've been teaching you there. Does it make sense why minus pi is there now and what happened here? So I'm not going to go into detail, but existing alert room traders got another confirmation. And we just started going into very advanced stuff. And now their face is smiling, I guess. So again, yellow bar is there and number 4 is there and number 5. So the catalyst allows me with a confidence to enter in. And it is earlier stage I could enter in. Suppose we miss the boat. These are the forecaster as we showed earlier. You could go, but as you go away from these magic lines, risk is higher. So I myself, right, will make a decision based on whatever vertical I've identified, or you will see symbols, right, in a different chart to get out. However, some people wants to say then either you get out and take the profit and re-enter right here because forecasting telling me we're going to go to the moon right here, right here. So you could see here, I enlarged this one, how it looks like in real life. 3, circle 3, that means it's forecasting. And number 3 is the risk on a scale of 1 to 6. So we're good to go, right? So entry with the forecaster can help you to add more stocks or re-enter the trade or whatever you want to do with that. Don't please short it at that time. You're going to get hurt. But it can turn around too. This market is choppy. So basically, this is what the chart looks like. And I will show you later on how to get out too. But let's stay focused on that. So let's see what it looks like in a bearish patterns. So similar concept, pattern 1, 2, 3, 4, 5. Same way, but the color red. So you identify red color line. Here is a little bit different. We are below zero line and has a value of -1, -4. They are parallel. We're good to go. Red spike is an entry spike at the base. I feel good, but we got alerted. Suppose you were long and the spike started coming in, get out. Take your profit and run. And pure health, internally, security is not doing good while you are there, get out. And if you are looking to buy put option, it's a good place to do it. And it will tell you when you buy the put option. And ribbon is a horizontal time risk. And I will tell you on a both side, as you go horizontally on the right hand side, risk gets higher and higher. So I want people to keep in mind in this market, 3-4 days, market cannot be stable. They go out of fashion. Either they go sideways or they go reverse. And you could see intraday, even today, right? So it's lunatic. Okay, so let's see what we learn on the chart. So here is the bearish direction line. That's number one. Number two is two lines which are parallel to each other and they are below zero line. So that means we are good to go. Where? Short. And this value of blue line is -1. This has a value of -4 and it is stated right here and right there. So that's what you need to understand. Nothing too complicated. So this is number 3, which is the direction line. So we going on a base and I had a bear came in. Oh, Peter, we didn't see put sign before. Now you see, because we have few expert coming with the software. You like to trade option. Here we go. And it tells you plus. So it's stronger. And results are very obvious, right? That's what I do. You don't need to be a scientist, and then you look at your Thinkorswim platform, and later I'm going to show you a slide very quickly how I know where it's going to go. All the magic zone lines, which are not the traditional Fibonacci. It took me a while to figure them out. And these are the adaptive, and they tell you way in advance where we're going to go. They have a forecast capability. They are flexible, dynamic, and more tradable than traditional horizontal lines you are used to, which was one of my biggest problems, where to take high and low and how to do it. Everybody talks different, right? So, okay, I don't need to do that anymore. We're going to have software adapt these market changes and tell me where I should be targeting. I'm going to show you later. So now here is the bearish entry because indigo candle color. Put is the one. If you are a put buyer, then buy the put. And these are advanced price perceptors, and they said buy the put. They are far advanced. So how I know? I learned this thing on the institution side. When institutions say, okay, this is my trade setup. This is where I will take the risk or I will put more risk, right? In that case, I need to know. I don't need to ask them or we don't need to ask them again, ever. You too. And these are the things I don't just say. I have data coming from a lot of institutions and also CBOE 16 action data plus dark pool data. I have a fun showing those into my alert room and tell them, look what they're doing. It shows here on my chart. All right. I used to do that in the beginning, calling all my friends. No more. I don't need to talk to them. Chart tells me this story. But that's what I did. I transfer my institutional knowledge, prop trading knowledge into the chart. And as I tell you, these are the two colors. I know institutions are keep buying in this get puts, so or keep shorting. All right, and forecasting. Look at that here. This is an E candle we call E preceptor, and -5. That means it has a juice. And even though it is on a put side, a little bit riskier, right, compared to this prices, but software telling go and short it. And I will take the additional position on my put. Or sometimes I've missed the entry. So what I do? Sit here doing nothing? Okay. This tells me I interpret it, I'm going to go in there. As I told you, as we go longer, the horizontal time risk, it becomes risky. So -6. That's it. I am not interested in keeping the position. I'm out. So we made few bucks, but there is no guarantee every time you're going to make money, even on a put, because put also has a different parameters such as theta and gamma and all kind of stuff. So in this market, take your money. You could always take that money and re-enter it. So now you don't have to worry about losing. And there is no commission or so-called no commission, except broker charge you on what you option trade, very minimal 50, 60 cents per contract. So you have to pay some money. But start, they're getting paid by the order flow. So these are the scanner, comes with the software. MetaStock did a great job. I love it and saves me a ton of time. And I did it for security, and you could see the results, right? So this is for the bullish side. So this is the scanner I do use, and this is the scanner I use for short side. So let's dive into that. So they're going to tell us. So this came in the scanner, and then you could match if 5 ingredients you want to use it, or 5 patterns you want to use, or if you want to use less, then it's fine too. But you got to know that if it is 5 lined up, you have a more chances to go in the direction you're scanning. If it is a 4 and 1 catalyst, I will go for it. And there is a method to the madness. But perfection is 5 ingredients. That's what beginners do when they come in to play here. So we're going to pick up one of the security. This one we did it in the last webinar. So I said, all right, keep it in. So some people can write it down and go and check it out. What happened? 417, there were a bunch of securities. So in this case, we showed people JFIN and LUNG. That's what was discussed in the last webinar. So I kept it here. So we're going to show you the charts at least, so you could get a little better confidence. So here we go. This is this week, all right, or on a 5-5. So again, vertical line, 2 lines parallel, about 0 line. Then we have a spike, entry spike. The base is yellow bar, catalyst is there, and number 4, pure health is good, and ribbon is good. And another thing I taught at the last webinar, switching the horizontal risk. They are in a hurry, so you should be in a hurry to pull the trigger. So here from red ribbon, they switch it to green. They shift the gear. So what we are doing here, we're going long. And yellow bar, look at this here, from a grassroots, money is coming from 15 minutes. That means I know from experience, and I was one of them. Trading desk has been advised, keep buying on a 15-minute chart traders, or you could still do 60-minute also. But it tells me the flow coming from 15 minutes. This was one of the tough tasks. We got it done. So that was all the dream team. And some people say, what's going on here? These are the things they do. And I was one of them. Keep buying. When you say this green color, they keep buying, and look, retaliation. And then it's also bought by the institutions, and then they drive it up. But you don't need to worry about all the games right now. You worry about matching, and then your life will be easier. Simplify. Then JFIN on a 17, look, same concept, matching. 1, 2, 3, 4, and 5. This is also catalyst, and we went to moon, right? And this is percentage-wise is a good amount of movement. We don't like to talk too much about profit because of regulator, but at least movement we could talk about it. Let's see lung, how the charts were doing. So this came from scanner, right? Now 1, and you could see individually all these items are there into the scanner. So you don't need to be skeptic. You need to be practical. So it shows here, it will show on a scanner. and scanner shows more than what shows here. So a lot of hidden surprises will be in your favor. Sometimes you will see yellow bar and turquoise bar, and here it shows yellow bar because that's the priority I choose it and design. But that doesn't mean the turquoise bar isn't there. So if there is a turquoise bar, whom you waiting for? And this candle become fiery. It has a power. So look at here. Pull is there, and again entering into 15 minutes on the trading desk. Again, let's talk about bearish guys because we like to see both sides if it works. So again, same way, all these different items you show on the charts are here. And if it is one mark and you're all matching here, we're good to go. Right? That's how simple it is. We do not need to make a big project. As the previous speaker said, keep it simple. So this is how simple it gets it. Only this technology does not exist on a regular way because Google cannot help you. These were done from the scratch. So all these things, only way you could find to read it, you got to register on my site. A lot of efforts has been put for last 17 plus years. And also when you get this software, the manual, Jeff will tell you, it is abnormal size because a lot of things you do not ever even knew exist like this. That's why it's called pattern and inventions. So all these items on a chart are more or less here. And this all is explained into the manual and trainings. So I put this chart, I love it. So I looked, I missed the board, gap down. But it had a what is a bear here, big bear, plus, and said buy put. And if you really eyeball it, just eyeball, it's around $400, right? And you eyeball it, and then look at the results, 362. And later on, I'm going to show you where my forecasting levels are there. So don't kid yourself because what happens when you put all this stuff there, it squeezes the chart. And when I put it on a PowerPoint, it squeezes further. But there is a lot of dough there. So you have to have a confidence of trading. So let's see here. Here is 1, 2, 3, 4, and 5, and catalyst here. So as soon as you get into the 9:30 opening, you buy the put option and good to go. So it's a lot of things. Yes, there are certain things you do not do at the open, but if you are shorting it, what are you waiting for? Buy the put option. Or you could short it on an uptick. So what you do, you drill down to the smaller time frame to get the right entry and use scalp swing method. So let's see what happened here. So this was a little bit out of line. Direction line comes later sometime because it verifies so many things. So it's okay. You have an anchoring here, and this was happening. So suppose this base is here. So what, right? Then you go with your gut. It's below that. Your upticks will be resolved here. So that's what we were used to do. As it goes up, I keep shorting because I know it's going to go down. So this is the institution. Keep shorting, right? And you could take some profit, but it's telling we're going to go down. But hey, this is spike coming. So get out. You don't need to have an ego. I want to stay in a trade. And even if you stayed in a trade, you got a chance to do it. But I do not take chances. As soon as -5 comes in, I'm out, to be honest. I'm out. I don't want to stay because I know spike is going to come there. So depends, right? And there is also some secret how to trade with that, which we teach you in a alert room. So now a lot of people did not expected me to show these things. So all these lines, we don't have much time in this setup, but I could show you on a what do you call? Hold on a second. Anyway, see, let me see if I could get that. It doesn't let me do it for some reason. Okay, if I could. Okay, later on because I got to take this PowerPoint up. Okay, so what in short, even if you don't have time, these levels were forecasted way on the left hand side and they become horizontal. So I have a painting, so some kind of greenish color here and indigo color here and gray color in the middle. That's it. So now it was forecasting days before, at least from 21 and earlier, that we're going to have this level. So that's your forecasted level. There's no guarantee, but you're going to see, right? And today you could see here it's going towards that. There is no reason to believe, oh, it's going to, because I cannot guarantee anything to keep regulators happy. But it does forecast it, and people who are using, they know. And you could also, same way, do on a 240 minutes, 60 minutes, depends upon your tolerance level. So the entry was here, so now you also know where is the security going. So far, at least from 400, it is at whatever the level 360. So it's about 10% plus it went down already, even though it had a gap down. So that's one of the questions people had it for me. So I give it to them. Oh, what happened here? On a weekly chart, look, we just started and it's selling forecasting. We're going to the digits. And here is a triple spike combo. Holy cow. This is weekly chart. And now you see if, if this continues where we could go. No guarantees, but it is forecasted last week. We're going to go down. We are going down. So this is how we use things. Again, this was shown last week, no last presentation on a YouTube. So same principle, 1, 2, 3, 4, 5, and we need indigo catalyst. That doesn't mean you cannot take or offset. You could, because this thing came earlier, anchoring happened here, so we got a couple of days here. So that's how I believe. So in this market, whatever you could make it, take and run. I'm going to say something about my daughter who played a role in many things I do, and she helped me in the design. I wrote formulas and she put all the colors and all these manuals. It is unbelievable amount of work has gone into. And she's involved with, or she was involved with all businesses I run at the same time. So you could see from here, asset management, business, we develop companies and have a history in New York City and overseas and many other places. I build companies. That's what I love. Risk management, risk analysis, emerging market, overseas we do, and we had business overseas also. Real estate, some people in this room knows, they've been doing things with me on a real estate, property rehabs, underwriting. This girl has gone through all the items of business in her younger life. And I give her a lot of respect, not because my daughter, she sacrificed her young life for me to develop all the companies, right? And she has a lot of talents. For compliance reasons, I cannot tell you. She got married, but now she works for one of the largest company in the world in the wealth management section. And she's still licensed, just like me. I will tell a little bit about me. I started trading way before I come to United States. Then, I was a long-term investor, and then I gave people, all right, 500,000, I'll give it to you, and go and make me money. And my experience is not great. Then I went to Wall Street because we were doing construction, and I'm helping a lot of people in different aspects. So I wound up helping travelers, people behind the scene, and then they become Citigroup, and I was fortunate to work into elite people in that group, right? And I learned a lot of things, how to raise capital and blah, blah, blah. And I wound up getting my Series 7 663, otherwise they won't pay me. I didn't know. So I said, show me how to get the license. So they filed for me, and I had only 10 days to get Series 7. I was crazy. But otherwise, I won't get paid. So we are doing business. So I got it done. So long story short, I have a history on Wall Street for last 30 years. I dealt with so many people, different behind the scene, so many law firms, right? I learned a lot of things helping people, to be honest. Right now, Series 3 and 34. I grandfathered 34. I went to Series 3 in 2005, something like that. I still have it, and I'm on an exemption. So I'm not managing money, no brokerage, nothing. Simple. So I could do my job here. Again, we send you with no string attached. We normally do not solicit magic trader there, but I do write analysis of market since 30 plus years. And at least I have written and people have seen the proof that I have forecasted major crashes. And 2006 was one of the biggest event. I started telling people get out on all markets. People think I'm crazy. Last time, right, and I saved people's financial life. I had no money from them. I just help people. So if you want to be on a list, right, you have to learn the lingo I'm putting so I don't get in trouble with law, but you will get the message. And 2020 crash, I was in Chicago in a public speaking, Atlanta public speaking, and I showed them how I'm anticipating with my magic trader 18,000 some level Dow is going to go. And people were shocked. How is possible? I said, you're going to see. Rest is the history. It's already written. So where this came from, magic trader? I'm not a god. Or some people have questioned, can we do this and that? Every single thing, Refinitiv gives data feed. We could plot it. And I'm not going to say nothing. In pandemic, we use magic trader to forecast that the people in charge are inaccurate. It's not going to go away. So where that came from my magic lines and forecasters. So the software has some histories in humanity that we don't want to talk about, but people are going to hurt. So don't. So I was trying to help people to stay away from these things. Don't go out, regardless what somebody says. Again, these are the instrument at least you could use, or whatever the say, crypto, as long as Refinitiv gives you thing. Again, the software is based on risk. That was the reason why this was created, because I become crazy about managing the risk drawdowns. I can't tolerate. I'm no more gambler. As an investor, you gamble practically. I'm a trader. I'm not a gambler. I will let opportunity go, but not meeting my risk parameter. People can take the position. I'm not against that. I am not. And the biggest help is my risk forecasting. I show you some power of that. And those are the things saving me out of the trouble. And this was my real reason. I miss my children growing. I was traveling with all the MetaStock staff week after week, sometimes 4 cities per week. And I missed all. My poor wife handled all these school meetings and whatever complaints we get sometimes from principal. she took care of, and I regretted all these things. I should be there. Now, after 6 o'clock, I take it easy. I spend time with her, watch TV or whatever. And weekend, I do research, right? That's what I love. So I will be up 2 o'clock, even though it's weekend, and people have seen me. And some people in my room are also participating early in the morning. I don't want to call out the name, but this is what we do. Again, no disrespect to traditional indicator, but this is not for me, and I don't use them. I reference it because I train all these traders. So they ask, I will draw the trend lines, I will show them, right? But not the reason. So sometimes I test my skill after 16, 17 years. The other day we were talking pennant, how far I could forecast is going to go, and people had a fun ascending triangles. So I didn't forget that because I trained thousands of traders. But I love my software because it makes my life easier. What Jeff is going to do, take it over from there. He's going to talk about certain things, the what do you call the expert advisor, right? So he could show whatever he wants to show, and we could be still stay on time a little bit over. So Jeff, can you please take it over?
I absolutely can. I actually promised we'd look at a couple stocks, or maybe just one or two. I know we're kind of running a little bit late on time, but I did promise that, and we do have one that was requested. So,
Okay, so
do you want to look at it with me?
yeah.
Okay.
Let me see if I could get my magic trader here. Okay, before we go there, Lars, can you see my chart?
Let me check. Yes, I can.
Okay, so before I start, there is no buy, hold, and sell recommendation. I will do interpretation like I am going to trading, right? But that doesn't mean that you got to pull the trigger because you could get hurt. Or I don't want people to get hurt.
Yeah.
So, and you have to hire your own advisor or learn at your own. So let's go.
Yes,
So,
we don't recommend any bias. We're trying to help you understand how we look at
you know, Lars will really reprimand me, so I don't want to get into that.
Let's take a look at PHM.
PHM?
Mm-hmm.
M for money?
I think it's Pull It Heart or something. P, Papa, H, Henry, M, Mary. Yeah.
Okay, give me a second. I want to move a little bit. Okay. And by the way, I'm using 18. All right. And
cool. So I love 18.
So it makes life easier. Right. And I will tell you honestly, there could be a bug. So what? Microsoft had a bug since 95 version. Right? It took them 4 years to fix it. So MetaStock beat them up, I guess. So don't complain. And I was also not happy because I want perfection, but you got to take it. What is the best for you and how you could make money? That's what you should focus on. So this is where I analyze. First of all, I look at the monthly, and it doesn't take me too long. Where are we going? Up, forecasting, and there is a room there in a heart, right, on a health indicator. Good to go. Here, it is 4 and look 1. This is a very strong stock and had a turquoise bar on top of that. Yes, risk is there because we're going too far. So put a tight stop. And look at here. This has some pullback and it came in. So it's telling some story. We're going to take a pullback here. So it could be shallow pullback, all right, because it did not go to -4. But if you are in a trade, if I was in trade, I will be looking at this thing as a precaution. I don't want to stay in a trade. So what I do, I wait for it come to mean risk reversion area, which is kind of here, right? Otherwise, it is risky. Or go back to technicals. It has to break these levels. It's making new highs this year. You could see that. I don't need to look for making new high. It is right in front of my face because this is the yearly orange line. If it is above it, this started in January. So this year high is here. There's no other place. So it has to go up or down, right? So this is the high, right? Whatever the high is here, 68.73. If it breaks it, then as a technical. Now what we're going to do, we're going to be playing cute, all right? So when I want to see where daily is going to go, right, I use opposite. Oh, it is making new. Okay. So then this is universal line. As I said, look at correcting dynamically, right? And once it's stabilized, those level goes for a while. So let's see what monthly was doing. And hopefully we have enough data. Data means this securities for a long time. Here also, right? So let's enlarge it. So I want to give something good to people, all right? Yep. So they also understand it. We could do 50 analysis like this, but let's see something. We call it just shifting, and they are really shifting the whole money flow in the future risk. Let's see something here. I want to see something here. I'm squeezing. We normally don't talk, Jeff, right? This thing. Look at this squeeze here. And this is the expansion number 2. It's getting riskier based on what I know, but they're making new highs. If I could go further, I got to put more data, but you got the point here. So this shifting is also part of our pattern process, right? So there is a lot of into this, and we have also technology which doesn't come with that, but I just want to put it out there. And we have shown before the release, so I don't get in trouble from MetaStock. It can give you what the levels will be before it happens. We have that capability with Magic Trader. There's a different set of Magic, what you call trader expert, but it is possible. But what you need to know, it is making new highs. So put a tight stop and whatever. Look here, it's negativity they're buying into. You could see in a 60 minutes, very strong. That's my take in this security. Good pick, whatever. But there's always risk. You got to be careful and look at the counter cycles, very short-lived. And this was the last time it came in here in this cycle. And they're making, in a technical way, higher lows. So it's a matter of time. If S&P future going strong, this will rock. And the way to do it, I'm going to take these lines up. I want to give you an idea so it's more clear. We could always put back. Easiest way to identify the good security on a long side is one way. It's easiest way. You see this magic line? They are not the traditional lines, so don't compare with that, please. Right? It has nothing to do with the traditional looking lines. Look at and also slope and those things is okay. I could make this one horizontal and the slope will not look like that. So there's another way I have discovered how to judge it. But basically, look at this. It's going to the moon, going to the moon, going to the moon. And this is also, we call as an extension. So I know what daily, so I don't have to put magic lines for 60 minutes. We know it. So extensions are from daily chart. So this security is such a bullish security. And tight stop, if you want to put it underneath here, or if you get out, then hopefully it does not break this one. Otherwise, anytime if close below it, all bets are off. So that's how I interpret these things.
Yeah, it's been a really good stock. And the add-on,
But
I
no
really like how
recommendation,
clear everything is. Yeah.
Yep, no recommendations.
No.
Yeah.
Actually, Kelly's going to put up the legal disclaimer right now. All right, Peter, unfortunately, we're out of time. We have you coming back in a couple weeks to do a webinar, and I look forward to seeing you again. Thanks for joining us today.
I'd love to do it if I have more time.
Yeah.
No disrespect to people whose questions were not answered. We'll come back, keep all the questions ready. Me and Jeff will spend enough time until you get tired.
All right, very cool. All right, thank you very much, Peter. And I'm going to kind of just talk a little bit. I do really like how clear the ingredients make everything. And this is a very, very all-inclusive add-on. So it includes 58 indicators, 47 explorations, the expert advisors, the templates, the manual. When I learned about it, it was a brand new product, and I read the manual, and that's how I learned about it. But there's other resources to help you get started as well. We include a very, very comprehensive boot camp to help you get going. But just looking at the ingredients and the way things are pulled together, it makes it very simple to read them. So from that being said, yeah, it's a very, very big add-on. That boot camp training is included. There's also some other training that I want to talk about that is part of the package we're offering today, and that's the fundamentals of Magic Trader recording. In addition to the basic training that you're going to get, you can elect to get 20 hours of recording. And I don't have time to read this whole slide to you, but there's a lot of training. You know, he talks about all of the ingredients, the spikes, the warning candles. You know, he went into just very, very big details in terms of how this works. And normally this by itself would be $199. So the Magic Trader community is free. I included the link to kind of sign up for that a little bit earlier. But what we're going to do today is normally the cost of Magic Trader would be $199 per month. We're going to give you 3 months of Magic Trader. So that's a value of $597. We're going to give you the recorded training, the boot camp training for no cost. In addition to that's normally a $400 value. The education portal is always free. And you can get those recorded trainings. Normally that would be $999. The total value here would be $1995. But what we're going to do is we're going to give a bit of a discount. If you sign up for it within the next week, we're going to give you a discounted price of $799 for 3 months of Magic Trader, the access to those basic trainings, the access to the community, as well as all of those bootcamp trainings. So $799. This is the extended trials for first subscribers only, but if you want to get the training, if you've been subscribed to Magic Trader for a while, you can call us and we can still give you the training at that discounted $799 price. But you can get the whole package today. 3 months of Magic Trader, the recorded trainings, the bootcamp, everything for just $799 instead of $1995. So do that. It's only good until May 18th. You can give us a call at 800-882-3040 to get that package. You can chat online with us at metastock.com/saleschat. And you can also take advantage of that at metastock.com/conf-promo. So thank you again, Peter, for coming in. We really appreciate that. Everybody's been spot on. Eugenia says, hello, Peter and Jeff. I don't have any questions, but I just wanted to say today Peter sent out messages with the free market analysis, and they were good. I'm paraphrasing a little bit. I cannot make it up. Eugenia has always been a big fan of Peter, and for good reason. She's the people that like Peter really, really like Peter. And I would encourage you to like Peter. He does a really good job with the analysis. So metastock.com/conf-promo, 800-882-3040, or metastock.com/saleschat. Thank you, Peter.
All right, thank you very much to everybody, including all MetaStock staff. Work very hard for this conference, and they always work hard. So I appreciate all the staff, including Jeff and Kelly. So thank you very much to everybody to be here on whole week event. Yeah, it's a lot of work. All right, thank you very much, everybody. Thank you.
All right. Okay, let's do that. Yeah, 800-882-3040. Thank you again. All right. Let's see. Let's do CMT this time. I do want to say thanks to Stocks and Commodities, CMT, and AAII.com for all sponsoring the event. CMT has been a sponsor of the conferences for a little bit now, maybe a year or two. We love working with Tyler Wood, and he's going to come in tomorrow and talk about how having a CMT as a designation next to your name can be helpful. And I would encourage you, if you want the CMT designation or you want some accreditation, go to cmtassociation.org or call them 646-652-3300. So from that perspective, let's do this real quick. And we're going to try and kind of stay on time today. But if you're watching now on YouTube or GoToWebinar, give me a number between 1 and 11,239, because I'm going to give away a prize. I'm going to go ahead and pull up the prize list. I needed to hurry about it. I should have asked for it a little bit, but send me a number, 1 and 10,689. 1 and 10,689. Give me a number, guys. The prize that we're going to give away while you're typing is, let me go to the prize list. We're going to do this is going to be Vlad Karpel's aggressive power trader. Okay, it's an AI-powered algorithm. It's continued to bank winning trade after winning trade. He says there's an 85% winning record on it. He uses it with his list. As a prize winner, you'll get a watch list of the stocks he trades with every day before he trades them. And you can just watch what he does, or you can trade with him, whatever you want to do. It's called Aggressive Power Trader from Vlad Karpel. And then, thank you for all the numbers. Al Lefko says 777. Al, I just doxed you, didn't I? Al. Let's go ahead and see who 777 is. Thanks for the numbers, guys. Okay. That is Clifton L. In the USA with a Gmail account. So if that sounds like you might have won. I'll send you an email. Or actually, Vlad will. Vlad will send you an email. In any case, we're MetaStock. We've been talking about MetaStock. all day long. And we do an extended trial. I've told you about it. Our next speaker is Daniel Sinnig. Daniel has developed some Daniel's a great programmer. We love having Daniel in. He's very, very good at talking about things and showing things. He's also a super good programmer. And so Daniel, I can see you over there. How are you?
What's up? I'm good, Jeffrey.
Good.
How's it going?
Good. Whenever I say, hey, how are you doing? And then there's always a little pause. And I'm like, oh, are we going to have an audio issue? But I can hear you. So we're not. Let me go ahead and make you the presenter. I'll let you know we can see your screen. I know we're running about 10 minutes late. So that's just how it goes. I don't want to get
compact. Yeah.
You don't.
That.
Yeah. Don't just try not to add to the extra 10 minutes. You know, we're saying that times are a suggestion this time around. We've been running late all week. So, in any case,
Perfect.
Did you get the screen control?
All right, yeah, let me do this. 1 second. And Jeffrey, I should say it was great meeting you in Las Vegas 2 weeks ago for the first time. Yeah.
Yeah. I have to say that you're quite taller than I anticipated. It's difficult to judge height when you just see somebody through a computer screen, right?
That's right. Yeah. Can you see my screen talking about it? Yeah.
Mm-hmm. I can see it.
Perfect.
I'm going to get out of the way. I know we're a little bit late, and I want to let you go. So.
Perfect. Thanks. Okay, well, welcome everyone to my presentation or our presentation. And I think I have something special to show you, which is the the fruition of 2 years or 3 years of research and hard work and optimization and trying out things and trying to be as innovative as possible, because we have come up with a technology. It's an AI, artificial intelligence powered technology, which has the potential to really revolutionize the way you trade, to find better trades for you. And how this works is going to be the topic of this presentation. As you will see, it actually works great with MetaStock and especially the MetaStock scanner. So I'm super excited to be here today at this great MetaStock event. So let's jump right into it. And I'm going to go a little bit backwards today. I'm going to show you something. This is my trade of today. And of course, again, this is my trade. This is the trade I put out for my own trading this morning. And it is a long trade of GXO Logistic. Symbol is GXO. It's a stock trade on the New York Stock Exchange. And I put in a buy stop entry order at level 56.50 with a target around 65.50 and a stop loss at $52. It hasn't triggered yet, but I'm quite confident that it will trigger this level and then hopefully continue to the bullish side. Now, in this presentation, I will show you how I picked this particular trade and why I picked it, and where the AI part, the artificial intelligence part, comes in, which helped me, in fact, which did most of the heavy lifting to determine this particular trade for me. And this is going to be the topic of this presentation. So I'm going to come back. I'm going to circle back to this very chart at the end of this presentation. Hopefully, at that point, you will see the rationale that we use, that I have used to identify this trade, and how our tools and how MetaStock helped me identify or pick this particular trade. All right. But this is like 45 minutes out, so let me detour a little bit and talk about something different. Let's talk about poker. Why not? So poker used to be hugely popular 10 years ago, maybe 8 years ago. Now, not so much anymore, but I bet that most of you have seen a broadcast, a TV broadcast similar to this. So here, for example, we have 2 players left in this hand, and 4 cards have been dealt. And before the 5th card is going to be dealt, every player has the chance to wager. And of course, depending on how confident the player is to win this pot, to win this hand, he will either wager more if he's confident, or wager less or fold altogether if he is not confident. But what the player does not know, of course, is what is the other player's hand. Because if the player knew that, he could calculate the odds of, of him winning this hand. But since he doesn't know the other player's hand, he wouldn't know this. Let's just assume for a second that the player has a card sheet. He knows how to stack the deck, and he can figure out what his odds of winning are before this card is being dealt. So just imagine, how would you play, or what would you do? And I bet you that you would say now, oh, well, I'm only going to wager if the odds are in my favor. And if they are not, I'm probably going to fold. This just makes common sense. It doesn't guarantee you, because we're still talking about odds, that you will actually win this hand. But in the long run, if the odds continue to be in your favor, chances are that you will have an edge and probably win the tournament. Now, why am I talking about poker? Well, because about 2 years ago, or maybe 3 years ago, we asked ourselves the question, is it possible to bring the same concept of having odds to the world of trading? We asked ourselves the question, can we calculate odds which will tell me before entering the trade whether I will win this trade or not? And this was the question we asked ourselves 2 years ago. And in this presentation, I will show you our conclusion to this. And I'll give you a little preview. It is looking pretty promising. So that these odds are actually calculatable. You can identify these odds, and they're insightful as well. All right. So now, if you knew what these odds were before entering the trade, I'm going to ask you the same question. How would you trade? I think the answer is quite clear. You'd only enter the trade if the odds are actually in your favor. And if they're not, you'd stay away. And oftentimes, not taking a trade is the best trade advice that you can get. All right, so I think this is fairly obvious if you knew these odds. All right, now, before I get into this, just a few words about us. So my name is Daniel Sinnig. Thanks for the intro, Jeffrey. And I'm a managing partner of tradingindicators.com. And as the name suggests, it's an online store. It's an online website where you can find our latest versions of our trading indicators, which we designed to help retail traders, educators, institutions to make better trading decisions. And over the years, we've built over 500 different indicators for various platforms. We've built automated strategies, we've built dashboards, we've built trading apps, and so forth. But what is perhaps a bit interesting about our history is that I didn't start off in trading. And in fact, for the longest time, my career objective was to become a teacher, professor in software engineering. And so, I did all the things that you would typically do towards the school. I did my master's, my PhD. I did a postdoc. I published papers in the area of software engineering. I was teaching at various universities as a lecturer. And but you know what? I even have a profile on Rate My Professors. If you're interested, check me out. Look up for my name, Daniel, and you can see my profile and see how much students evaluated me. But you know what? I was always fascinated by trading. I did this as a hobby in the beginning. And, I tried things out. I placed trades. And of course, I made all the mistakes, or most of the mistakes that most traders do when they start off. I overtraded. I took too much risk. I revenge trade. I traded when the odds were not in my favor. And after donating quite a bit of money to the market, I came to the hard realization, man, trading is not easy, and I need help. And for me, as a software engineer, it was clear, I need better tools that will help me make better trading decisions. So I rolled up my sleeves and I started programming. And this is really how the story behind tradingindicators.com started. Because most of the tools, most of the indicators in our store, they were written primarily for ourselves to help us make better trading decisions. And only then when we thought, oh, wow, they're actually quite useful for us, perhaps others will find them useful as well. All right, so by now I'm not alone anymore. We have a full team. My partner Homa's online as well. She's manning the chat today. But in addition to Homa, we have mathematicians on board, we have programmers, we have traders on board. And our objective is, as I said before, to write tools or indicators to help you guys make better trading decisions. All right, but enough about ourselves. Before I get into the topic of today's presentation, a real quick reminder that, as you know, let me just go back. As you know, trading can be risky and may not be suited for every investor. If you trade, make sure to only use risk capital, which is money that you can afford to lose. And should you lose it, it will not affect your lifestyle. When it comes to hypothetical performance or backtest results, keep in mind that these are not necessarily indicative for future performance. All right, so now that the lawyers are also happy, let's get back on topic. So if you remember, we asked ourselves the question 2 years ago, is it possible to calculate odds for your next trade before entering this trade? So this was the first question we asked ourselves. Can this actually be done? The answer is, the conclusion of this was, well, yes, it can. We are capable of displaying some sorts of statistics, some sort of odds directly on the chart, or in case of MetaStock, in the expert commentary. So for example, here we could say that based on historical data, we have what we call a long win rate or long efficiency of 91% and a win rate for our short trades of 87%. All right, so this is possible. And this is possible because we can analyze historical data. So basically we can perform a real-time back test as the indicator is applied to the chart, analyzing all the signals that the indicator generated to see if these signals were or would have a result in a winning trade or a losing trade. So this is definitely possible. All right. Now, but okay, we can show these odds, but the real question is, what are these statistics actually telling me? Are these actually insightful? Because they're based on historical data. So is there any value in these odds moving forward, looking into the future? And if you remember, I just read the disclaimer. I told you what that backtest statistics or hypothetical performance is not necessarily indicative of future performance. So am I contradicting myself here? What am I actually saying? And you know what? We asked ourselves the exact same question. So we started investigating to see if there's actually any value in using in calculating these odds based on history. So what we've done is we have conducted a very comprehensive test with the objective to figure out if there's any value in these odds. So what we've done is we have created a swing trading system, which was supposed to be applied to the 1 hour chart. And it ran for approximately 9 months, from the beginning of 2022 all the way till September 2022. And it was really a swing trading system. So the average trade duration was about 1 week. The trading system generated more than 6,000 signals, both in the long and short direction. And it was run as a portfolio test. So we ran the system on 84 big US stocks. So we had a big variety of different symbols. And in the first version of this test, we traded every single signal. So 6,827 signals would result in 6,827 trades. And this was the performance we have received. And as you can see here, doesn't look too pretty. So in fact, this would have been a losing system. So yeah, at the end in September 2022, this is when the test concluded, we would have lost money. And as a reminder, this is where we would have taken every single signal. But then we thought, what if we don't take every single signal? We only trade or take the signals where at the time of the signal, the odds are actually in our favor. And this was the result afterwards. This was the performance where we only took what we call the sweet spot trades, where the odds at the time of the trade were in our favor. And as you can see here, the difference is quite substantial. So out of the sudden, we do have a performance which shows promise, which has actually quite a nice equity graph. And at the end of the back test, we would have gained money as compared to have lost money. So this was super encouraging to us. And just one word on this, as we didn't cheat. So let's say a signal occurred, say in April 2022. We looked at the hypothetical performance, or at the odds as of April 2022. We didn't use hindsight information. We actually looked at the odds at the moment of the trade. And this difference, this significant increase in performance gave us so much motivation that we concluded, yes, these statistics, the way we calculate them, they are actually insightful. and they can make a difference between a winning and a losing trades, because they will allow you to trade when odds are stacked in your favor. So this was super encouraging. So we decided to move forward. And what we've done is we have created a set of self-aware, we call them self-aware because they look at their own performance. So we create a set of self-aware indicators which use a built-in intelligence to predict the odds of the next trade before you enter into this trade. And this is what this presentation is all about. And we're going to show you some examples real quick, so please stay tuned. So what are these 3 indicators? Well, we've bundled them up in their code name called Power Bundle 360. And we've chosen this code name purposefully because we believe by having 3 different indicators, one for trend trading, one for identifying reversals and pullbacks, and one for trading breakouts, we really cover every market cycle. So we give you a 360 coverage basically of all the market conditions that are possible. So that's why we chose that name. Now, real quick, and I'm going to switch over to MetaStock in just a minute. What are these 3 indicators? So the first one is called 1, 2, 3 strike. That's our trend trading indicator. That will give you an entry signal if 3 things come together. First of all, we need directionality. So price needs to either go up or down for quite some time. We need to be in a trend, basically. Secondly, we need to have an increase of volume. And third, we need to have an increase in volatility. And if all 3 things come together, an entry signal is generated because a strong trend, a trend that's likely to continue, has been identified. Okay, so that's our trend trading indicator. The second one is called divergence cloud. And I think most of you might have heard the concept of divergence, which basically refers to a disagreement between price move and an underlying indicator. And if they don't agree, if they're off, this can be a telltale sign that something is changing. And oftentimes, this can be a telltale sign that perhaps trend is reversing. It won't continue anymore in the same direction, or do the opposite, or perhaps there's a significant pullback. And this is exactly what this indicator is looking for divergences to identify these pullback and trend reversals. All right. And thirdly, we have an indicator called Volatility Crusher, which is designed to detect what we call strong breakouts. And to us, a strong breakout is a breakout where price will continue in the direction of the breakout for quite some time. You may imagine how this can benefit you as a trader, because you can simply enter in the direction of the breakout. And if price continues, you can benefit from that. All right, so these are our 3 indicators. And I think it's enough theory for now. Let's check out some charts. I'm going to switch over to MetaStock. And of course, if you have questions, please feel free to write them into the question section or the comment section, and Homer or Jeffrey, they will look out for them and either answer you directly or perhaps bring them to my attention. Okay, so let me pull up MetaStock. So let me just drag this in. Let me make this a bit bigger. So what do we have here? Here we have a daily chart of Boston Scientific, stock symbol BSX. And we have applied to this chart our 1, 2, 3 strike indicator. Let me quickly explain to you what you see on the chart here. So the first thing you can probably notice is that some candles are colored reddish and some candles are greenish. And this is just a simple indication of whether the indicator believes that we are either in a downtrend if it's red, or in an uptrend if it's greenish. All right, so that's the first thing you can see. The second thing that you can see is that some arrows are a bit bigger than the other ones. Like, for example, this green arrow here denotes what we call a long entry, buy signal, or perhaps this big red arrow here facing downwards is a short entry signal. All right, so these are entry suggestions generated automatically by our indicators. But you know what? Everybody can just enter into a trade, and that's really only just one half of the story. Because once you're in a trade, you need to also manage it. You need to eventually get out of the trade. Yeah? That's the whole point. So you need to get into it, but also get out of it. This is why all our indicators, they will also give you exit suggestions. And these are these smaller arrows in the opposite direction of the initial entry. So for example, for this long entry, we have one partial profit suggestion here, another one here, and another one here, and then a final exit over here. How many partial profits you want to book, you can customize in the settings of the indicator. And the same thing for our short entries. Here we had one short entry, a partial exit here, a partial exit here, and so forth. And all our indicators work the same way. So they give you entry signals, but also exit signals. All right, so, but you may say now, there's nothing really new here so far. Okay, I've seen this all before. I've seen indicators which give me entries and exits. All right, so let's take it one step further. Let me pull up the expert commentary in MetaStock. So I'm going to Expert Advisor and go to Commentary. And this will open up a little sub-panel here. What we can see here is our statistics. We actually see now directly, okay, what was the win rate so far of this indicator in both the long direction and the short direction. And we can see here for the long direction, we had a win rate of 60%, and for the short direction, a win rate of 69%. And given the fact that this particular indicator, or for this indicator, typically winners tend to be much bigger than losers, this doesn't look too bad. But perhaps we can actually improve it, shall we? Let's see if we can improve this further. So I'm going to go to the settings of this indicator, just up here. I'm going to play around a little bit with its parameters. Maybe we can, make it a little bit better. So I'm going to go to the settings of 1, 2, 3 strike. That's the indicator on the chart. A quick double click. And I can now, change some of the settings. So perhaps I will change my volume period to a value of maybe 45, and perhaps also increase my volatility period to maybe 38. Now let's see what this does. And by the way, I will not have time to explain what these parameters actually do. But if you get hold of our indicators, we have recorded master classes and documentations and knowledge bases which explain every single aspect of them, including these parameters. So don't worry for now if these are not clear. So I'm going to click OK. And let's just observe the statistics here as I reapply the indicator. So we used to have 60 and 69 before. Let me reload the indicator of the new settings. And once the calculation is done, let's see what happens. All right, so now it's back to the chart, and we can see, oh man, it was worse. So this parameter change was not in our favor. So this may seem a bit disheartening, but I tell you what, it's actually also incredibly insightful, because now with these statistics, you get instant feedback of whether a change was in your favor or not. Otherwise, it would be up for guesswork, but now you can actually have some hard numbers attached to it. Okay, so this was not really good. Let me maybe go back one more time and play around with the settings again. So we increased those values at first. No, maybe let me put them down a little bit. Maybe this will make this a little bit better. So maybe 25 or perhaps 22. I click OK, I close it. I reload my chart. And let's see if we perhaps made this indicator a bit better for this particular symbol. So I'm doing it again. Oh, better. 70% now in the long direction and 51% not bad for the short direction. Okay. Maybe one more try, shall we? Just real quick. So I had increased my values to 25 and 22, or I decreased them. So maybe decreasing it even further is even better. So maybe 12 and perhaps here, I don't know, maybe 10. Let's do this. And this is the last try. I'm going to close it. I'm going to, again, reapply the indicator to the chart. All right. And let's see what happens. So we're at 70 and 51. And now let's see where we end up once this indicator has been reapplied to the chart. Just a second. Oh, 51, 56. We're back to worse performance. Okay, so maybe you're going to say to yourself, oh man, this is tedious. This, well, finding the best parameters on the per symbol and per time frame basis, that can be quite a challenge for me and probably for most investors and traders out there. And you know what? You're absolutely right. It's not just a challenge, it is also incredibly tedious and boring. I'll tell you what, if something is too tedious, too boring, if it's not fun, chances are it is not sustainable. You will not keep on, tweaking these indicators over and over again, because it just takes too long to find that sweet spot. And we realize this as well for ourselves. This is why we have come up with a technology which we call auto-optimization. And as the name suggests, it will find the best settings for you, so you don't have to fiddle around with these. And we have included this technology in the latest generation of our indicators for MetaStock and also for other platforms. So let me go back to the chart one more time. And this time, I will apply the auto-optimizing version of the indicator to it. So attach, when I change. This was the previous version. Now the new version is 123 strike AO, and AO stands for auto optimization. I click OK. It will now be reapplied to the chart. And now let's have a look at the statistics once this is loaded. So I'm going to scroll down one more time. And we can see now here that, where are we? That we now have a long efficiency of 100%. So basically every signal resulted in a winning trade. And at the short side, we had 63%. And this is with the optimal settings. And we can also see what were the parameters used to get this performance. So a volume period of 30, as it turns out, was ideal. And a volatility period of 20 was ideal for that value. And the indicator will tell you exactly what these values are. So you can perhaps reapply them, or maybe take note of them, or share them with your friends and colleagues. And this is our latest feature of our indicators. They will determine automatically what are the best settings. And guess what? As you change symbol, as you change time frame, the optimization will recalculate and redetermine what are the best settings automatically in the background, so you don't have to. And this turned out to be a huge time saver, because now you don't have to fiddle around with these parameters manually anymore. The indicator will do it automatically for you. And this feature has been so useful to us that I'm not even going to talk from now on in this presentation about the non-optimizing version of the indicator. I will only apply the auto-optimizing version, because why should I do it manually if there's a tool that does it for me, which does the heavy lifting for me? All right, real quick, a few words about the auto optimization. We still have some parameters we can play around with, but they all, are centered around how the optimization is supposed to work. For example, and real quick, we have different optimization modes. By default, we use the simplified mode, which tests around 144 configurations of parameters, which is the fastest one. And it's useful just to, click through charts and change timeframes, because the indicator will load very fast. But we also have two different modes. We have standard and we have extreme. And these are chosen, the indicator will actually test way more configurations. It will take longer to load, but you know what? Oftentimes the way I use it, I use the MetaStock scanner, which I run overnight. In these extreme modes, for example, it will take much longer to scan, but since it's running overnight, I don't really care. This is why we have these different modes involved. And some of the other settings that we have, so how many bars should be taken into account for the optimization. By default, there are 1,000. Or perhaps I want to optimize for a particular trading style. Maybe I only want to trade long, so the optimization should only take into account long trades. Or perhaps vice versa, I only want to take short trades. I could set it as well so that the optimization would only take short trades. Okay, but back to the chart. Let me change symbols a little bit. And as I do this, I should mention in this demo, I will primarily use daily charts, but our indicators, they work for any time frame. So whether you are a scalper using the 1 minute time frame, or perhaps an investor using the daily or weekly time frame, there's no problem. They are time frame agnostic, so you can use them on any time frame. And the optimization will also work across all the time frames. Same for the equity class. So our indicators, they work on any asset class, equities, futures, cryptos, FX, it doesn't really matter. All right, but let me change symbols. Let's see what else we have. Let's perhaps open up MCore, another stock on the daily time frame. And let's just observe the signals a little bit. So here again, we have our short entry signals, we have long entries. And as you can see here, with the optimization, the indicator gets into the trade quite nicely. So oftentimes you can see price following through almost instantaneously. Here we had a nice short trade, which where price went down. Here we had a long trade, which worked out nicely. Here a short trade again. So the indicator is really able to pick up the swing of this symbol very nicely. And of course, the auto optimization helps with that because it finds the best parameters which are dialed into the characteristics of that indicator. Perhaps let me change it up one more time. Let's see, what else do we have? Perhaps Live Nation, another stock, again on the daily time frame. And as this loads up, just make this a bit bigger here. Yeah, we can see here, for example, that again we have our long entries, short entries, and so forth. And let's have a look at the statistics real quick one more time, because I wanted to point out one thing. So we can see that this indicator seems to work again quite nicely, but I've done one thing here. So let me quickly go to the settings of this indicator. I'm going to open it up real quick, and we can see here, for example, that in the settings, this indicator is set so it optimizes both long and short trades. But perhaps let's make a change. Let's make this indicator only optimize for long trades, because perhaps that's the trade direction I'm interested in. Maybe my account only allows me to go long and not short. So why should I bother with short trades? All right, let's do this. So I'm going to say trading style is long only. Yeah, one long only. I'm going to say OK. And I will reload this indicator to the chart. All right, it's reloading. And now, as we observe the statistics, we can see. So it's just a little pop-up here. Let me close this real quick. Oh, there we go. OK, so let me go down. And we can see here that now, well, first of all, the long efficiency has improved over the version where it trades both directions, which is not very surprising, and that the short efficiency is now 0 because short trades are no longer taken into account. And this is exactly how you can further dial in the optimization process to your trading style. And perhaps real quick, one more example, just to demo to you that our indicators, they indeed will work on different asset classes. Let me open up perhaps Euro CAD. On what time frame do we have here? Let me quickly see. So as this is opening up, on the 50-minute time frame, again, 1, 2, 3 strike is applied, and you can see here the signals. They work the same way, whether it is an intraday time frame or perhaps a longer time frame. They work the same way, and you get your short entries, your long entries, you get your exits, and so forth. All right. So this is 1, 2, 3 strike. Let me show you the other indicators, and I'm going to hide the expert commentary below because this slows down the loading of the indicator a bit, and I want pull up charts a bit quicker from now on. So let me go to a different symbol, and let's open up. Let's see, what do we have? Let's open up Vulcan Materials. And in this case, our second indicator is applied to it, which is called Divergence Cloud. And you may see right away, okay, again, we have bar coloring. That is true. We have greenish bars sometimes and reddish bars. But in this case, these bar colors do not denote trend direction, as it was the case for 1, 2, 3 strike. They denote either bullish divergence or bearish divergence. So red if it's a bearish divergence, and greenish if it's a bullish divergence. As mentioned before, these are telltale signs that something may change. And look how this worked out here, that we had, for example, here we were in a downtrend. Then we get a bullish divergence, a telltale sign that something may change, and a long entry signal was generated, basically telling us this downtrend may come to an end and price may reverse to the upside. Same thing here. We're now on an uptrend. We had a short entry signal. And the beauty about this indicator is that it can give you very, very early entries. Yeah, when there's really just a hint that things may change and the regime of the trend may perhaps reverse from an uptrend to a downtrend or vice versa. And of course, also with this indicator, we do have our statistics built in. So they again are in the expert commentary. And if you scroll down here, you can see, first of all, which settings have been used for the indicator and what was our efficiency.
Hey, Daniel.
Yes.
Can you hear me? Helmut is trying to ask you a couple of questions. We do have a couple of questions in the chat, and I'm sorry to interrupt.
Yeah, go ahead.
Okay? All right. So Lori wanted to know, what is the reason the sell signals are at 60% for the auto optimization? Is it because it's an uptrend?
Oh, that was for the previous symbol. So when the optimization is configured to optimize for both long and short trades, it looks for the highest average of the long efficiency and the short efficiency. And that's why sometimes you may have a lower short efficiency if the long trades are very high.
Neil says, Neil wanted to know, your technique is interesting, but how does it differ from the amazing and super fantastic and awesome system testing that already exists in MetaStock? I added a few adjectives, but that's the gist of the question.
First of all, it's directly on the chart right away. So you don't have to run a system test, and because this can be also a bit tedious, right? And if you change time frames and symbols, you get it right away. What are the best settings? And the real kicker, and I'm not even there yet because I'm already running a bit late, but I hope I get to it, is when it comes to scanning. So this is going to be something that's yet to come, so please bear with me. But once we come to the scanning part, you will be see another huge advantage of this technique over the built-in system test and MetaStock.
Perfect. Those are the questions. You're caught up. Thank you.
Great. All right. Okay. So so this is our divergence indicator. Let me just quickly change symbols one more time just to give you another example. Let's go to Stephen Madden, the equity, and let's see what we have here. So once this opens up, and just one interesting thing here, I found this morning, is we actually currently do have a brand new short entry signal. This came up last night. I found it this morning, but as market closed last night, this entry signal came up. And I just wanted to explain to you how you can now act on this if you wanted to. So you could, for example, wait until the market opens, and then if your manual analysis, in addition to this signal, comes to the conclusion that this could be a good short entry, you would enter, when the market opens the next day, in the direction of this signal. And this is an example of a symbol which happened to have an entry signal on the close of yesterday. And perhaps one more example, again, an FX pair, just to show you the intraday part of things. Oops, go to window. And we're going to open up GBP, GPY. Let me see which time frame I've chosen for this one. Oh, again, the 15-minute time frame. And you can see here again also our divergence indicator. And in fact, all our indicators, they work on daily charts, but also on intraday charts quite nicely, as you can see these signals here. So they are able to pick up the motion of the symbol quite nicely for most of the time. Okay, so one more indicator to go through, which is called volatility crusher. And I should tell you, this is my favorite one personally, because some of these indicators here, they keep you on the trade for quite some time, which is great because it may work out really, really nicely.
One more question, Daniel.
Oh, yes, Jeffrey.
Let's see. Are probabilities / odds assigned to the individual signals? That is the question.
They are assigned to the overall chart, but applicable to the last bar. So if you have a signal on your last bar, these are the odds at the time of that signal. So I guess to the individual signal, which is the last signal on the bar.
Here we go. Here's another one. Do you have any papers describing your backtesting methodology, since your approach is focused on tuning and parameters? I'm interested in exactly how you avoid pitfalls of over-tuning. Good question.
Okay, how do you avoid what? Curve fitting?
The pitfalls of over-tuning.
Yeah,
basically curve fitting. Yeah.
Yeah, okay. Yeah, good question. And we get this question every single time. So curve fitting basically is a phenomena where you know, in your optimization, you cut out all the big losers and keep all the big winners in. So you find the right parameters where exactly this happens. And this can happen if you know, in your optimization approach are taking into account how big a winner is, for example, or how big a loser, so you can exactly navigate through that space. We don't do this. Our optimization is a bit more generic. We optimize for the win rate. We don't really care whether how big the winner was or how big the loser was or how small it was. We just optimize towards getting the best win rates for the long and short direction. And I believe by following an approach like this, we avoid some of the pitfalls of curve fitting because we don't really take into account you know, specifics of a trade. And another thing that made us very confident that we do not do curve fitting is that in our portfolio test, we exactly traded these optimized signals, and they made such a big difference in terms of performance. So 2 reasons why we believe this is not curve fitting.
All right.
Okay.
You're caught up again. I promise.
Thank you. Okay, so let me quickly talk about the last indicator. This is going to be very quick, which is called volatility crush. I'm going to open up another stock called First Energy. And as mentioned before Jeff asked the question, this is my favorite indicator because, first of all, it has the highest success rates of all 3 of them. The first 2 work great as well, but this one has even higher success rate. And this is rooted in the fact that winners tend to happen very quickly, and you get out of this trade very quickly. So for example, here we had a long entry signal, hit our target 1 and 2 fairly quickly. Here another long entry, bang, bang, we're hitting our 2 targets. So we're not staying in this trade for too long. I personally have a bit of a nervous trading personality, and this style of trading just you know, fits my my trading style quite nicely. And you know, I personally like to have multiple winners in a row, and perhaps every once in a while a bigger loser. But at least this gives me going, it keeps me motivated. Some of you guys may be the opposite. You're very comfortable of having multiple losers in a row and then waiting for the big winner, which may be not as often. I'm more the opposite. This is why this particular indicator fits my trading style the best. So here we had a couple of long signals. Let me see if I can find some short entries. And I should switch off the commentary, otherwise the reloading. Yeah, here we had a short entry, for example, hitting our both targets. Here, a long entry. One hit the target. Here we got stopped out afterwards. But as you can see here, it tends to find these trades quite nicely. It has a fairly high win rate. And real quick, one more example, and I'm going to go back to my slides because the best part is yet to come. So hopefully I'm not going to be too late. Here we have Hershey. Hershey is another equity on the daily chart. And you can see one more time how the indicator was able to get into the swings of the stock very nicely. Here with the long entry, we hit both targets. Another long entry here, both targets ahead. Here again, and so forth. All right, so this is how this indicator works, and this is our breakout indicator. Now, let me go back to the slides because the highlight is yet to come. So we've looked at how auto optimization works. We've looked at lots of examples. We've seen that most of our indicators all of them give you entry, but also exit signals because getting out of the trade is just as important. I told you and showed you that they run everywhere. So on all time frames and on all asset classes. So it doesn't really matter what kind of trader you are. They will be useful. We have our stats built into every single indicator, which will help you to make informed trading decisions, because then now you can only take a signal if the stats are actually in your favor. And all indicators have auto optimization, which is like the hugest time saver that you can imagine. But there's one more question, which I guess you may have asked yourself: how do I know which symbol currently have signals? And perhaps more importantly, which of the signals are the most probable one to follow? And the answer to this is, well, it's the MetaStock scanner, which is my favorite feature of MetaStock by far. It's so awesome that I need to talk about it just a little bit more. So we have supplemented our indicators with pre-built explorations. This is how MetaStock calls their scanning utility. So once you have our indicators, you can see, it just takes a little while to load up. You can see that you have these pre-built explorations. Just go up here for all our indicators for 1, 2, 3 strike, for divergence cloud, for volatility crusher. And of course, you can use these to run your scans. And this has become my daily routine. So once the market closes, I run my scans on the symbols I'm interested in. So typically the S&P 500, you can pick it down here, the NASDAQ 100, the Dow Jones Industrials, and so forth. So all the big tickers are typically included in my scan. I did the same thing last night, and here's what I saw. So this is basically a scan result, and you can scan for all 3 indicators at the same time. Yeah, as I mentioned to you, this may take a while, but I run my scans overnight, so I don't care. Yeah. And I can see now in my scan results, for example, here, for 1, 2, 3 strike, we only had 2 symbols with signals. For divergence cloud, let's say, we had more, maybe 12, 20, I don't know, 15 symbols here. And what's really cool is that you not only see which symbols, for example, currently have long entries. These are the ones here where long signal is 1, these ones here. But you also see directly in your scan results, what are the odds of the signal? What is the win rate of the signal, both in the long direction and the short direction? And guess what? This is very powerful because it allows you to rank your symbols directly in the scan results. So what I do, I basically sort by my efficiency. I focus on the ones which have the highest one. So in this case, for example, we had a long entry signal on divergence cloud for this symbol here, CEG. So let's check it out. So what I do then, because this one has the highest win rate, so I focus on that one first at 100%. That seems pretty awesome. So let me open it up. So I open up the chart, and I hope it will open. There we go. We have this chart here. So first of all, we can see, wow, yeah, we actually do have a signal on the last bar. That's pretty cool. And we can also see that, yes, our signals are actually working at a perfect performance for the symbol. And this makes it so powerful because you can now scan using MetaStock, not only for symbols which currently have signals, but you can also then rank your scan results and focus on the symbols with the highest statistics. And this is what makes it so powerful. This is what I believe, this scanning technique blows away everything else that you may have seen before in terms of scanning. If I quickly go back to my slides, I believe this is generation 3 scanning, which is way more advanced than generation 1, which is just scan for plain old signals, because you can't compare the signals in terms of quality. So what we've seen here is that we scanned for signals and we were able to see which signals were the most profitable one, historically speaking. So you can rank them and sort them and focus on the ones that are the most promising ones. And there's one more thing we've built into our scanning for MetaStock and for other tools as well, is that we are not using the same parameters for every symbol when we scan. We are using the optimized parameters. So for every symbol we're going through, we're using the optimal settings and see if with these optimal settings, if there's an entry signal, yes or no. This is what we call generation 3 scanning, because we show you the odds of the signals, and we're using optimized settings on a per symbol basis. And I think this is really something else, and possible with our technology, of course, and MetaStock's really powerful scanner. So we call this generation 3 scanning. Now, one more thing to say, and before I wrap up, so are we happy with this? And is this the end of the story for what we're going to do with these indicators? Or is there something else? Well, so what's next for us? Well, guess what? There's one more added dimension which we have achieved for these indicators. We call these super signals, because we asked ourselves the question, what if we have a symbol, let's say IBM, and maybe 2 of our indicators will give you the same entry signal on the same bar? We call this confluence, because multiple indicators are forecasting the same price move. And we call this super signals. We have different levels in our super signals, bronze, silver, gold, and platinum, depending on how much confluence we need. For example, bronze just requires that the two indicators agree on the same price direction. Gold, for example, requires that two of the indicators must have an entry signal on the same bar. In platinum, as you may guess, all three of our indicators must have an entry signal in the same direction and on the same bar. Of course, this is super, super rare, but if it happens, good things may happen for you because the forecasting power of this kind of confluence may be even greater. All right. Now, we call this a trade when the good stars align. So real quick, I know, Jeffrey, I'm running out of time, but real quick, let me show you how this looks on the chart. So back to my chart here. Let's close this up and let's open up Pool Corporation. And I have already applied our super signals indicator to it. Let me just quickly show you. I'm going to hide the expert commentary real quick. Let's see what we can see here. So here we can see, for example, here we have a bronze signal. Two indicators agreed on the same price move. Here a bronze long signal. Here a short. Here another bronze signal. You can see already the bronze signals are working out quite nicely. Every once in a while we have a different color. Here a silver signal. I had a nice follow through afterwards. Here another silver signal. Let me see if we can find even something better. Here a bunch of bronze signals along the way. Here a gold signal, meaning that two of our three indicators have an entry signal, a short entry signal on this particular bar. Here a gold long signal. Two of our indicators have a long signal on this particular bar. And you can see here how much forecasting power this can have when applying these what we call super signals to the chart. Now, this is something we have just added. And if you stay with me for maybe 2 or 3 more minutes, we have a special offer for you where you can get access to these super signals in a complimentary way. As a super special thank you for listening to me speak and for spending your time with me. Now, so please stay tuned. But I promised you my trade of the day. And how did I identify this trade? GXO Logistics. I told you I was looking at going long at this level here via a buy stop entry with a target at 65.50 and a stop loss at 52. So how did I identify this trade? Well, I should tell you, I have used MetaStock scanner to scan for super signals. So I ran this also last night. And let me pull up, I won't show the scan results right now because this will take too long, but let me pull up this stock real quick, GXO Logistics. All right, so we can see my levels here. And now let me apply to it our super signals indicator. So I'm going to go down to super signals real quick. All right, we apply to the chart. And guess what? We have a gold signal on the very last bar. I was able to find it. These are super, super rare. They don't happen very often, but I was scanning for it. So the scanner found this one for me, so I don't have to go through all these symbols myself manually. We have this entry signal here. And not only this, the efficiency statistics of our, the expert commentary of our super signals for the symbol. Oh, what am I doing? Sorry. It's time to wrap this up. Commentary, of course. All right. The efficiency statistics for the super signals have been very high, 95 for long and 97%. And this was the main reason why I picked this particular stock to trade. I didn't follow it blindly. I never do. I always like to look at it manually as well. And this is why I came up with this particular entry move. Because I do see a resistance zone around here. Price bounced off at this level. You can see once again and prior to it before. So I do want price to power through this level here, to power through this zone of resistance. But this is why we have this buy stop entry at 56.50 here. But if it does, I believe this stock will continue to move higher, primarily because we do have a gold long entry signal. I'm looking for a target of around 65.50. My stop loss is just below this recent swing low here. And this is exactly how I identified this trade. Actually didn't do much. All I did is I configured my MetaStock scanner to scan for super signals. And this one was identified. And I was happy because most of the time I don't even have a single gold signal. But last night I did. And this has become my trade of the day. Another things I also look at when I determine whether I want to follow the signal is whether we are consistent with the overall trend. As you can see, the price has been moving up, so I believe that is the case. So things come together, and this is why I put out this trade on my own account this morning when the market opened. All right. Whew. So now, to wrap things up, if you're asking yourself the questions, are these indicators for me? Well, it doesn't really matter whether you're a day trader, a scalper, swing trader, investor, or some other trader. The answer is yes, these indicators will be for you because they work on all time frames, all chart types, and on all asset classes. So whether you trade equities, FX, futures, cryptos, it doesn't matter. These indicators will work on all these. And if you're a little bit like me, a bit of a geek, and if you believe that smart tools can make your trading life easier, then these indicators will definitely for you because they do a lot of heavy lifting for you so you don't have to. Just look at the auto optimization part. You'll find the best parameters for you. You can scan for signals, thousands of signals overnight, and just look at the results in the morning. You can rank those results. Only focus on the ones that are the most promising. So if you believe that this can make your life easier so that you can focus on your trading instead of the tedious stuff, then these indicators are for you as well. Now, we do have a super special, and Jeffrey, I'm going to explain it real quick, but perhaps you can say something about this as well. For this event, we do offer our power bundle with auto optimization for a special price of $9.95 instead of the regular $1,495. And this is for life. So once you make the purchase, there will not be any subsequent payments. But this is not all. So you will get 1, 2, 3 strike, of course, Divergence Cloud, Volatility Crusher, our 3 indicators, with auto optimization, of course, with our statistics. You will also get our masterclass on how to use the power bundle to your full advantage, where we explain every single thing, every single parameter, everything you need to know. We also have a boot camp, which is specific to how to use them on MetaStock, how to run your own scans and so forth. Also, of course, included. And just as a really special deal, this is a one-time thing, we will include in this package our super signals. This is not even on the MetaStock page. I'm just throwing it in here. So if you commit to this, you can contact me and you will get our super signals indicator, which will look for confluence for free. And one more thing, you will also get our trend radar indicator. I didn't even talk about this yet, also in a complimentary way. So lots of stuff as a really special thank you for being here with me today. And real quick, Trend Radar is this awesome heat wave, like a sub-indicator on your chart, which will allow you to identify short-term, medium, and long-term trends at a glance very quickly. And I use this indicator to identify what I call healthy pullbacks. See, here we are in a downtrend. See, it's primarily red. But every once in a while, we have this greenish area, and it gets red again. These are pullbacks, healthy pullbacks. And if you're a trend trader, you can take advantage of these because these are great entry opportunities to enter into your short trade because you're getting in at a much better price. So you don't want to enter into a trend trade at the opposite end because then the move has already happened. You wait for the pullback. And this indicator allows you to identify these pullbacks very nicely. All right. So if you're interested, here's the deal for $9.95 for life. All our power bundle, including super signals. This is really a super special. It's not even on the MetaStock page, and our trend radar indicator. Now, Jeffrey, are there any questions? Or Homer?
No, we got them all. So that's good.
Awesome.
But it's such a good package. I actually had the price is $2 higher. We'll go with the $2 extra discount too, as part of the super bundle. But let me tell people how to get it.
Yeah.
And I just love the indicators. I really appreciate your coming in and your work on them and putting them together and making the optimization is a fantastic job. So let me show people how to get it.
Thanks.
All right, let's do this. I'm gonna make me the presenter here. Could go ahead and show the screen. So if you do want to get that at $9.95, I'm gonna give an extra $2 discount here. $9.97 is the price that you'll pay here. It does include the everything that Daniel listed on that big screen, as well as a 30-day money-back guarantee. If you don't have access to MetaStock and you want to be able to use it for a scanning engine or the tester or the expert advisor or any of the really cool things that MetaStock does, we will include a trial to MetaStock. To take advantage of that, there's 3 different ways you can do it. You can call us, 800-882-3040. You can chat online with us at metastock.com/saleschat, or you can visit us online at metastock.com/conf-promo. A great add-on. As you can tell, Daniel really put a lot of really good technology into it. We appreciate that. And so let's go ahead and hurry and move on. I appreciate everybody for coming in here today. I do want to say very quickly thank you to all of our sponsors, AAII, CMT, and Technical Analysis of Stocks and Commodities, of course. You can take advantage of any of the offers we've had today. metastock.com/comp-promo, metastock.com/saleschat, and then 800-882-3040. Thank you, Daniel. Thank you, Homa. You guys are awesome. Our next presenter is also very awesome, John Thomas. I remember we brought John Thomas in initially at right after Trump got elected. And I remember him kind of going through a lot of charts and kind of a lot of what that meant for the market and that kind of stuff. But I was super impressed with him. And so we've had him back many times since then. So John, how are you doing today?
Hey, I am excellent and actually feeling kind of awesome now that you said so.
Okay, very good. Well, let's see. I just turned over the presentation for you. We are running a little bit late. And we have been all day. So
well, I'll try and shorten my life story from 10 minutes down to 5.
Well,
I don't know if I can cram 70 years into 5 minutes, but I'll give it a try.
Take your time. John, I'm going to go ahead and get out of the way, though. It's yours.
Can you see me?
I can't see you, but I can see your screen.
Okay, that's all that counts right now.
Okay.
Hello, everyone. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from the beautiful shores of Lake Tahoe, Nevada, where the lake clarity this morning is 115 feet, the best it's been since 1866. Let's get on with the show here. Take out your pen and paper, take notes, or start typing in your smartphone, which is what people do these days. For I'm about to tell you will blow you away and change your life, for I'm in the early retirement business, your early retirement. Why listen to me? Well, 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 15 years publishing the Diary of a Mad Hedge Fund Trader. I also happen to be a fighter pilot. Oops, there goes where'd my airplane? I got shot down already. Let's go. Here we go. Nope, doesn't want to go. I always have trouble with this on. No, Jeff, you got any hints here? Try the play arrow again.
Yes, I would say. Looks like it's going.
All right, that was me doing my renewal of my aerobatics license with the Royal Air Force in England over the White Cliffs of Dover in an 83-year-old Spitfire. I can't think of a better way to spend an afternoon. Clearly, being able to move 6 .303 caliber machine guns around the air anytime you want is how they won the Battle of Britain. Of course, the other reason to listen to me is performance. The last 12 months, as of yesterday, we are up 120.45%. That's our trailing one-year return versus 3.67% down for the S&P 500. And our maximum drawdown for the past year has only been 5%. It's mostly flat up, flat up, flat up onto early retirement. So if you're going to spend some time with me, who is John Thomas? My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in the old days but hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned how to fly and jump out of perfectly good airplanes. As the war wound down, I became a foreign correspondent for The Economist magazine in London, and when they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And this is all I got for 10 years of government service, a box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. Okay, let's go this way. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and yes, this is my original ID card from 1983. Yes, the years have been cruel, and that's me losing the All Japan Karate Championships in Tokyo. Never enter a karate final with a broken wrist, but it was fun. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane around Europe, go marlin fishing, and collect vintage Rolls Royces. That's my entry at the Pebble Beach contest a few years ago. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008, just as the financial crisis was beginning. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you guys. If I can take a $50,000 account, turn it into $500,000, that's more job satisfaction than I ever get anywhere. However, every silver lining has a cloud. This is my 2021 tax return, which showed $22 million in trading income and owing $8.2 million in taxes. Yikes. Thank goodness I can pay that and not have it make a dent in my lifestyle. And the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So there is a method to my madness. The debt ceiling debacle has temporarily frozen all risk markets, driving volatility to 2-year lows at 15. Even bonds have narrowed to a range too narrow to trade between 335 and 355 on the 10-year. This could go on for another month or more. In the meantime, seasonals have turned sharply against risk-taking. You've all heard of sell in May and go away. This year, it may actually work. Trading volumes are shrinking by the day. Summer will present the best buying opportunity of the year. Put together your buy list now, and we can help you do that. Precious metals and commodities should be at the top of your buy list on top of technology. In this market, patience is a virtue. Let the market come to you. Don't you dare chase it up here. Global economy is going from hard landing to soft landing to hard landing to soft landing. And guess what? Half the stock market is discounting a hard landing, commodities, oil, and precious metals, while the technology is predicting a soft landing. Who will be right? We'll find out soon. Fed has raised rates 25 basis points. It's likely the last such move in this cycle. Futures are now discounting 3 interest rate cuts by year-end, 25 basis points each. Non-farm payroll jumped to 253,000, another hot number. Headline unemployment rate of 3.4% is a 50-year low. Any economic textbook will tell you this is impossible with 5% interest rates, including all the ones the Fed uses. AI is making a difference, creating jobs far faster than it is destroying them. Anybody you talk to, AI is taking over their business. Almost all business forecasting models do not account for the hyper-accelerating growth of AI. That is what the stock market is missing. Tightening of bank lending is a concern, so commercial real estate with elevated valuations should be avoided. Consumer inflation expectations drop. Europe eked out a 0.1% growth in Q1 versus a 1.1% in the US, and new car loans are falling off a cliff. Stocks have the dead weight of the debt ceiling until it is gone. The stocks are priced for a soft landing. If we don't get one, i.e. this debt ceiling crisis goes on for months, look out below. And let me tell you the 3 indicators to watch for the end of the debt ceiling crisis. Number 1, the Treasury announces they're no longer sending out Social Security checks. Number 2, the Defense Department announces they can't pay military salaries. That's $4 million a month. And number 3, the market drops 10 or 20%. And when that happens, the big donors pull their funding of anybody who's opposed to a deal, and suddenly deals fall out of the sky. Regional bank crisis is spreading. Consensus SPY earnings are currently $220 a share, giving you an expensive price earning multiple of 18.77. We get a recession, you could lose the expensive part very quickly, get those multiples back down to 14 or 15, which means a 25% drop in the stock market. You've only needed to buy 7 stocks so far this year, as the rest are going nowhere. That includes Apple, Google, Meta, Amazon, Tesla, NVIDIA, and Salesforce. And we've been in and out of all of these many times this year, which is why we're up so much. Watch out for the next rotation, broaden out to the rest of the market. All technical indicators now turning red, volatility's at 15. Look for a flat first half and a very strong second half. Take us to S&P 500, 4,800 by year end. So this is the bull case for stocks. What's in the market now? High inflation, an oil shock, a COVID spike, labor shortages, supply chain headaches, Fed interest rates, quantitative tightening, poor earnings, plunging gas prices, plunging commodity prices is coming next, stabilizing supply chain, record low 3.4% unemployment, better than expected earnings, 1.25 trillion in stock buybacks, soon to fall interest rates, and a weak dollar. In other words, all of the things that are in the market now are market negative. All the things that are coming next are all market positive. So this is an analysis from our in-house algorithm, our market timing index. And this shows we continue in this range into the summer, but eventually we hit a bottom, breakout, and blast up to new all-time highs by the end of 2023. Worst case scenario, this is the no deal or the extended debt ceiling crisis. The lowest we get is 3,550 in the S&P 500. And I'll talk more about this later when we get into how we use our algorithms. So we run barbell portfolios. Half of it is in big tech, which accounts for 2% of the workforce, 25% of the market capitalization, and 25% of all U.S. earnings. The other half goes into domestic recovery stocks, including railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. The domestic side of the equation has been going nowhere this year. This year has been all about tech, which means the domestic side of the equation is now looking kind of cheap. Boeing Aircraft has moved virtually nowhere this year, despite getting a 450 airplane order from Air India, a 300 plane order from Ryanair, and soon to get a 1,000 plane order from China. Stock going nowhere, time to buy. And our target for the year is $250. We also like banks. We absolutely loaded the boat at the bottom of the banking crisis in March, and that brought in some really big performance numbers for us. This is the quality value play, JP Morgan, and we're looking for a target of $200 by the end of the year. Visa is the no-lose play in the credit card processing area. During inflation, when prices rise, credit card fees automatically rise. They don't give you a discount because the inflation rate is 9%. And 15% of all credit card charges are for travel, and we're about to see one of the record travel summers of all time. Buy Visa on the dip, we're looking for $300 a share there. Union Pacific, any economic recovery, you need to move lots of big stuff, lots of commodities. Union Pacific is the preeminent east-west railroad in the country, and it's basically a technology company these days. Federal Express, you also have to move lots of small stuff in an economic recovery. The stock has also been trending consistently upwards by FedEx on the dip. We're looking for $300 a share here also. Berkshire Hathaway is our one-stop barbell portfolio. It's right at the high of the year after posting a 12% gain in earnings in the first quarter. And we love their balanced portfolio, their heavy weighting in financials, and their big position in Apple. Looking for 400 in Berkshire. Second half of the barbell bets on a massive drop in interest rates and a global economic recovery to begin in 2024. Tech stocks come alive, but some of them are now 50 to 90% below their last peak. focuses on the highest quality stocks, makes a great counterweight to domestic recovery companies. You own domestics, you own tech, you always have something that's going up. We could spend years rotating between tech and domestics. NASDAQ, we're looking for another 30% gain here. We've been buying every dip ever since October. Microsoft has been a lead because of their head start in AI with the purchase of ChatGPT for $13 billion, and we're still a buyer of Microsoft. We're targeting $400 by the end of this year. Apple, another big winner, a giant cash machine. We're targeting $200, and they have $250 billion in cash, so they're the largest buyer of their own stock. Amazon, another big AI leader, perfectly poised for an economic recovery, increase in retail spending. We love Amazon. And Google also just had a big leap because of their new AI tools. We're looking for $150 in Google by the end of the year. Salesforce is the dominant player in customer relationships management. Looking for $285, keep buying on the dip. And good old Tesla, in the middle of a price war, but they are the overwhelming dominant leader in EVs. I've been driving Teslas now for 13 years. I'm on Tesla number 3, and I'm somewhere on the waiting list of 1.5 million people for the Cybertruck, which should come out at the end of the year. So watch for the stock to really ramp up going into the Cybertruck, where they're doing a fundamental redesign of their entire platform, bring in 48-volt electronics and so on. Bonds, default fears are the name of the game. Treasury Secretary Yellen has warned of an economic catastrophe if the debt ceiling is not raised, which is true. Congress has raised the debt ceiling 98 times in 106 years, meaning there isn't really such a thing as a debt ceiling. It's just an antiquated housekeeping measure which has been turned into a political weapon to pay for spending that's already been completed. 10-year treasuries are back up to 345. Keep buying 90-day T-bills, now pushing 5.2% risk-free yield, and buy them direct from the government. That way, if your broker goes under, you don't take the loss. We're looking for a 2.5% yield by the end of the year. Keep buying TLT, call spreads, and leaps on dips, but only on dips. When it's doing nothing, don't touch it. Junk bonds are also looking like a great high yield play with an 8% payoff. Here's TLT. We started buying at 92 last October, and we're really buying every dip right around here. We're targeting 120 by the end of the year. And there's the yield. We see the yield going all the way down to 250 by the end of this year. Foreign currencies, we want to fade every dollar rally. Japan inflation is at a 41-year high at 4%, and we are expecting another interest rate rise in Japan. So you want to buy the euro, the Australian dollar, the British pound, and the Japanese yen. China slowdown will keep the yuan relatively weak. Strong currencies will also deliver major bull markets in emerging market stocks. Here's the Aussie dollar. We see that going to 1-to-1 in the next few years, and that's a 40% gain from here. Australian dollar is basically a call option on the entire global economy. Euro is recovering from the Ukraine war. Next to happen in Europe, big reconstruction effort, financed by Russia, as it turns out. Emerging market currencies, another great weak dollar play. We're looking for 40% gains on the currency this year. Energy and commodities are at new lows for the year. The oil price collapse is signaling a recession. This is the part of the market that's saying there's a hard landing coming, not a soft landing. And it's not just oil that's weak, it's all commodities. Even lithium has been weak. Texas tea has plunged 22% in 3 weeks to a new 2-year low at $62. It's one of the worst performing asset classes of 2023. Widespread EV adoption is finally making a big dent as the price wars help people get into new cars. And 10% of all the new cars sold in California are now EVs. OPEC 500,000 barrel production cut unable to stand the decline, buy oil on dips through the USO, and also LNG. We expect a big spike in LNG prices by the end of this year as China comes back online. Here's oil. It's been a horrendous asset class to invest in, hit lows for the year last week. We're getting close to dip buying territory as soon as the debt crisis ceiling ends. How about that? But oil, not a great long-term investment. It's basically going to zero over a 20, 30-year time period. And this could be one of the greatest double tops of all time, a 15-year double top. And even the oil companies are slowly trying to get out of the oil business. Nat gas absolutely crushed from overproduction in the US, huge conservation in Europe, and China, the biggest user, being in a multi-year recession. So we really love leverage long plays in natural gas. And we have plenty of recommendations in that area. Precious metals, we're long-term precious metals bulls. Chile just nationalized the lithium industry, the world's largest producer. The official reason is to make the industry more efficient. The real reason is so they can skim off money for themselves and their Swiss bank accounts. Gold is headed for 3,000 by 2024. Silver will do even better. New drivers are soon to fall interest rates and no more competition from crypto. Russia and China are also stockpiling gold to sidestep international sanctions, and a severe short squeeze in copper is developing because of the EV boom. And that's me in the Istanbul gold market, doing a little bit of early Christmas shopping. Gold, been a great performer this year. We're buying every dip, and that could continue for years. We could see gold 3,000 by sometime in 2024. And you like gold, you want to buy the world's largest gold producer, Barrick Gold. We see even more leverage than that. Gold miners usually move at 4 times the rate of the underlying metal because they have so much operating leverage. Silver will do even better. We see $50 silver, possibly by the end of this year or next year. And of course, we're a big buyer of silver ourselves. So don't play with matches. You can probably do okay just buying all the stocks above and forgetting about them. However, the reality is the conditions on these companies are changing every day. They are all viciously competing, trying to put each other out of business. You don't get daily updates on the fundamentals. You could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full-time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundred. And that's me sending you a trade alert from the coast of North Africa while it's 120 degrees. The hard truth is you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Often they're just trying to sell stuff they already own, they want to get rid of. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that is get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. You know, that's not a bad thing when the Dow is going from 6,000 to 36,000. I tell my investors all the time, work in, money out. And of course, the work is learning and educating yourself about the markets. The profits will spill out accordingly. You need a real pro to guide you through the market maze. The market is not monolithic. 95% can be completely ignored. There are a few great sectors, a lot of awful ones. You can earn a 10x return on the great ones, get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our secret weapon, the Mad Hedge Profit Predictor. This is an artificial intelligence-driven algorithm that analyzes 30 different economic, tactical, and momentum-driven indicators. Took a team of mathematicians 1,000 hours of calculations to create this, and it has an accuracy of 95%. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. Does the work of a seasoned 100-man research department in seconds, runs real time, and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. I'm not the only one using algorithms. Some 80 to 90% of all current trading activity is algorithm driven, and that's me sending you another trade alert from Marrakesh on the edge of the Sahara Desert. We send out trade alerts almost every day of the year from all over the world. This is 3 years of profit predictor performance. Notice that at extreme market sell-offs, we get tons of buy indicators. At market tops, we get a lot of sell indicators. Buy, sell, buy, sell. It's like owning a printing press for $100 bills. This is the last 6 months of our market timing index, and this said sell going into October, buy the October bottom, sell going into the year-end rally, then buy the beginning of the year in January, sell in February, and again, we're looking to sell right around now while the market is relatively expensive. You can track this against your own trading and see how you did. This is our average annualized return for the last 15 years, 46.84%. That is 2.66 times the S&P 500. And this is how it breaks out every month for the last year. Notice that all 12 months are in the green. We brought in a blockbuster 20.85% profit, buying the absolute meltdown day of the banking crisis. Everything went straight up after that. That carried into April. So we basically made 36% off the banking crisis. Thank you very much, Silicon Valley Bank. I'd open an account there if you still existed. May, we're up 75 basis points, and that's because we're almost all cash right now. Last year, we brought in 84.63% compared to down 18% for the S&P 500. Our year-to-date so far this year is 61.76% versus a gain of only 8% for the S&P 500. We are up 658% since inception. That is on a non-compounded basis. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $1.5 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough money to send 3 kids to college. And this is another one of our subscribers who just came in a year ago, and he'll tell you about it.
This is Bob. I live near Denver, Colorado, and hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
So what do we do about all this? Stocks, you want to buy the next big dip. 10% would be nice if we can get it. Bonds, you want to buy smaller dips. Commodities, buy the dips. We're at the bottoms now. Energy, you want to buy dips there too, especially natural gas. Currencies, you want to buy every foreign currency out there with both hands. Precious metals, buy the dips. If you were not up 120.45% in the last 12 months as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. Up 120.45% in the last 12 months and 48.86% average annualized return. We are up 62% so far this year. This is how we did it. In January, we bought big tech, energy, Tesla, and bonds. In February, we sold short big tech, Tesla, and energy. In March, we bought all the big banks and brokers at the absolute bottom. In April, we bought copper and ran longs in big banks and brokers. In May, we kept our short in the bonds and big tech, and those are going to expire next week with the May option expiration. This is a list of trades so far this year, and it only covers the first third because we ran out of space. But you show that here we went long Apple, made 19.19%. Here we went long bonds, we made 4.8%. Long the triple Qs, made 0.72%. Long fixed income, added 3.2% to our portfolio, and the list goes on and on. TLT, gold, wheat and precious metals, Berkshire, Tesla, Occidental Petroleum. All asset classes, all the time, long, short, that's how you make the big money. You get those kind of numbers, you get to do things that other people can't do, like take the Queen Mary from New York to England. When you get to England, you can take the Orient Express to Venice. You have to bring 2 tuxes because every dinner on the train is black tie. And when you get to Venice, you can island hop in your own personal helicopter. This is the very long view, and this is where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and 2030s will be the easy one as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers like me, a drag on the economy, fade from the scene. That'll create an economic boom that will last another decade starting this year. And that's me watching climbers on the Matterhorn from my chalet in Zermatt. You may think I am smoking California's most popular product, but this has all happened before. From 1982 to 2000, we went 20 times up in the Dow average in 18 years. Are you ready for a replay? This was a stock market performance. The last time we had a demographic tailwind identical to the one that's starting right now. If that happens, the Dow goes up 20 times from the 2009 bottom in 18 years. That takes us to 120,000 by 2030. Except this time it's different. We're already 2/3 of the way there. We've already gone from 6,000 to 36,000 on the way to 120,000. Only one more 4-bagger left the next few years to get the same return. Except this time we have the tech AI turbocharger. Tech is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers will be a big plus. Major computational challenges will be solved. All human diseases cured within 10 years. Barbell stocks do exceptionally well in this scenario. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new economic drivers. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry. Follow my research and market-beating trade alerts, and you will rake the profits in. Let a Marine Corps combat pilot steer you to dig big profits. And no, that is not the plane I flew in Desert Storm. That's a 1932 de Havilland Tiger Moth made out of Irish linen and Norwegian spruce. Notice the design flaw. The gas tank is directly over your head. In an airplane, it's prone to flip over a lot. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. It's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up going into the end of 2023. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch rainbow trout, which I caught in northern Nevada. Here's how our algorithm works. It predicted an upside breakout was imminent in Tesla, so we sent out a buy signal on the stock. And this is what it looks like. Buy Tesla at 67 or best, opening trade, portfolio weighting 10%. That buys you 149 shares. What happened? Stock went up 63% in 20 trading days. Do we just sit around and pat ourselves on the back? No. We send out a sell alert, take profits at 109 or best, and on this particular trade, we made $6,258 in 20 trading days. Did we abandon Tesla after that? No, we kept buying every dip, which is what we do. We get buy signals from our algorithm here, and here, chase it all the way up to 1,200 on the pre-split adjusted basis. So here's a history of our 10 baggers. We got Zoom, got a 10 times return on Zoom when it just came out. We got Lam Research up 10.6 times. We got NVIDIA at $38, kind of sounds like a good price now, up 16 times. We got Square up 25 times. We got Moderna up 40 times. And of course, the granddaddy of them all is Tesla, up 180 times, in at the original split adjusted price of $2.35. Today it's trading around 160. With my Mad Hedge Global Trading Dispatch service, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, and I have 3 in Florida just next week. More education videos and webinars you can consume in a lifetime and access to a 14-year database. And I'll even give you the name of a good surfing camp in North Africa. Warning, it's a lot harder than it looks. This is the one-stop shop. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. And it's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up starts. This is what we include in the package, our global market comments, which are in your inbox 5 days a week before the market opening. And 5 times a week, you get Mad Hedge Hot Tips, 5 most important things that happen today and what to do about them. I'm not going to charge you $100,000 for this service. That's what we do charge our big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number. And I'm not going to charge you $3,000. That is the lowest price on our website. Today, only through this webinar, creating this product cost me millions of dollars. The best customer service in the industry, running it cost me millions more. Today, only through this webinar, $997 for 6 months. That's a $997. That's a 66% discount. Just click on the chat box on the right. That'll take you to a dedicated sales page, which is good only in today's webinar. We only take 25 new subscriptions at a time, so we don't overwhelm the market with too many buyers of the same stocks. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. Let me make the money for you to pay for your subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Here's the offer you can't refuse, 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success. You can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 95% of these trade alerts make money. And just to give you a tease, here's the chart for the trade alert I'm about to send you as soon as you subscribe. I'm not going to tell you whether it's a buy or a sell, though. You have to go through 1,000 charts this good, 1,000 charts to find one that's good. So it's time to go flying again. Okay, so when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars, and I promised not to tell who. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading and dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built up a fleet of 16 flying aircraft, which are today worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane is 83 years old, we managed a brisk 250 miles an hour over the countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt Bf-109s, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between 2 big fluffy clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed 1G limitation, or the wings might fall off. Spitfires can dive like crazy, and all you old pilots out there know exactly what I'm talking about that. We dropped from 8,000 feet to 2,000 feet in seconds, then was back to Biggin Hill for a perfect 3-point landing and the traditional pint of beer. Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 15 years. I look forward to working with all of you. So here's the offer you can't refuse. 6 months for just $997. And I see a lot of you have already clicked through to the sales page. Let me go into my email address and see how many have come through. Okay, just a second. Let's check this. Okay, got that. Got that. Got that. Okay, what have we got here? Okay, here's one. Ian from Cambridge, England just signed up, probably because of the Spitfire videos. Thank you very much, Ian. Promise to work hard for your money. Check your inbox. The trade alert should be there already. If it's not, check your spam folder. If you're a brand new subscriber, that's where the trade alerts go sometimes. Seth in New York City signed up. Thank you very much, Seth. You just made the wisest investment decision of your life. We have Judy from Memphis, Tennessee has come in. Let's see who else has come in here. Let me open up a few more of these emails. Okay, let's see who this is. This is David from Oak Park, California. I don't know where that is. Must be out in the countryside somewhere. Thank you very much, David, and enjoy the beautiful weather today. We have Jeff from Plattsburgh, New York, site of the former Winter Olympics. Thank you, Jeff. More emails are coming through. It looks like we're going to hit that 25 limit pretty soon. If you're sitting on the fence just thinking about it, go ahead, click through, get your subscription, because the store will shut down automatically at 25. Okay, we see if we got more coming through. Let me open the emails. We have Michael from Corpus Christi, Texas. I bet things are hopping down there today. We have Tracy from Grand Junction, Colorado. Thank you, Tracy. We have Frank from Columbus, Iowa. Thank you very much, Frank. And any of the new subscribers, any questions on how to execute the alerts, just email or text me and we'll answer you immediately. Okay, another one here. John from Douglas, Georgia. Thank you very much, Doug. And what else do we have here? Adam from Durham, South Carolina. Thank you, Adam. Okay, last chance. Click on the chat box on the right for the sales page link. We know it's working because there's still more sales coming through. Jeff from Mill Valley, California, I think that is. Jeff. Yeah, Mill Valley, California. I know where that is. Okay, that is it. And Jeff, I have made up 10 minutes for you. Thank goodness I took the extra 4th cup of coffee this morning so I could get this done in short order. And great to see you in Vegas last month, and look forward to getting together with you again.
We do have a couple questions, if that's okay.
Fire away. I'm all yours.
BB says, good advice, Mr. Thomas. What is your cancellation policy?
100% full refunds for anybody who asks.
Okay.
If the product's not for you, we want to free up your slot and hand it off to the next person.
Mary wants to know if this is the offer for the Global Trading Dispatch.
It is. Global Trading Dispatch. You'll see on our website, $3,000 a year. We're offering it today for $997. And that gets you
oh, sorry, go ahead.
10 a week, basically, the hot tips and the Global Trading Dispatch.
Okay. And then Mouse Trust wanted to know if you had any examples of drawdowns.
I showed you the performance chart a few slides ago. We have a very rigid stop loss policy. As soon as a trade is losing 1% of capital, we stop out as quick as we can. It's a lot easier to dig out of a small hole than a big hole. And this is where a lot of new traders get hung up. They keep wishing for things to get back to their cost. They keep wishing for a turnaround in the market. Let me tell you, wishing is just not a trading strategy, as I have learned the hard way myself. So that's why we tend to keep drawdowns to less than 5%. That's what they've been for the last year. I think maybe 8 years ago, we had a drawdown of 13% when the flash crash happened, but then we made it all back the next day. So it was just a one-day hit.
Cool. Last question. What do you trade? Big cap stocks and ETFs? That's what BB is asking.
We do big cap stocks, ETFs, and options on all of those, both long and short. We have thousands of customers. The only way you can execute alerts is to deal in the most liquid stocks on the market. And of course, you know who all those. There are lots of trade alert services out there that specializes in small caps, but no one can ever get anything done because there's no liquidity. I've dealt with large clients my whole life, the DuPonts, the Rothschilds, the Rockefellers, and unless you can put 100 million into a stock, they're not interested. They don't want to hear about it because it's too small for them to buy.
And then Mary had one more question. What's the advantage to getting this over the Hot Tips subscription? Thanks for the question, Mary.
Hot Tips don't include trade alerts. Only the Global Trading Dispatch that we're offering today includes trade alerts.
Well,
Hot
that
Tips
sounds nice.
give you, market impacts on all the economic data point, which way interest rates are going to go, hard news events, important earnings reports, all that kind of stuff. But to get the trade alerts, you have to go with Global Trading Dispatch, and for $997, that's the deal of the century. My staff has been begging me to raise the price like everybody else, but I'm trying to keep it cheap so as many people as possible can get in. By the way, I want to thank John Kreita from Claremont, Florida. And John, go to my website and see if one of my lunches next week is near you. And I got another thank you here. Okay, we got that one. We got that one. And we got one more here. and that is from Eric from Flagstaff, Arizona. So great talking to you, Jeff. Thank you very much for inviting me. And,
we love having you.
Good luck.
Thanks for coming.
Okay, bye-bye.
Bye. Okay. Okay, there we go. Okay, let me push all the buttons. It gets me going again. All right, and then this one. All right. Hey, okay. Let's see. Okay, let's move a little bit quickly here. Real quick, before I say anything else, I want you to pick a number between 1 and 10,689. And you're going to help me pick the prize winner. So I've got YouTube chat open right here. I've got GoToWebinar chat up here. Pick a number, pick a winner. I'll tell you what the prize is going to be. Okay, hold on a second. Let me get to the prize list. We forgot to give one away, and that was my fault. We're getting a little bit behind, but the prizes are important. So with this particular one, we're going to give Don Fishback's odds historical return histogram. Jennifer, very fast with that number. Kelly, no numbers from you. You're not allowed. Peggy, thank you. Okay, so with this one, what we're going to do is, whether you realize it or not, the price of an option is determined almost entirely by the expected probability distribution of the underlying security. So it's critical you know whether an option model accurately reflects real-world market action. Odds historical return histogram software performs this analysis in an instant. Armed with the analysis this program provides, you'll know the hidden truth about options. So that's Don Fishback. Don Fishback spoke earlier in the week. He's a super smart options trader. He's giving data away as the prize. And Jennifer picked the right answer. Becky, I'm sorry if you can't hear. Kelly, if you can see that, will you just type her to tell her to refresh her browser? Well, help her get back in the room if you don't mind. All right. So the winner of that prize is number 8222. Thanks to Jennifer F. Almost. Let me say, I'll tell you who that is, and then we will move on. Okay. And that is Edgar F. In Canada. Edgar F. in Canada, congratulations. Going to mark you down as the winner for that. Thank you for all of the Vincent, Peggy, Doug, Jennifer, Neil, Mary, Dawn, Jill, Terry, Peggy, Lucho, and BB. Thanks for all the numbers. Appreciate that. Will you type to Peggy? She says she can't hear and go to webinar. Just tell her to join us on YouTube or hit refresh. I'd tell her, but she can't hear me. It's not going to help. So, all right. I do want to say thank you to all of our sponsors, CMT Association, AAII, and Task Magazine. They've been great supporters. CMT, if you're interested in managing money and or you do manage money and you want more assets under management, or if you want 3 really cool letters, CMT behind your name, you can look at the CMT Association. They're a hugely well-respected, well-reputed organization. You can find out more about that at cmtassociation.org, 646-652-3300, or you can come back tomorrow. We're going to have Tyler actually talk about all of the benefits for doing that as well. BB wants to know a question. How does our raffle work? I've got a list of everybody that's been registered here. And you give me a number, I just pick a number off the list, a name off the list. It's that simple. BB, since you're in the GoToWebinar room, I know you're registered, so you're part of that list. But if you haven't registered already, what I'd like you to do is, if you're watching us from YouTube and you haven't registered already, go to our metastock.com/traders-conference. We'll type that in the link for you. And when you do, you'll be registered to be part of the raffle. Thanks for the question, BB. Of course, we're MetaStock. I'm going to move straight to Melissa. We've talked about us all day. We're awesome. I really, really do like MetaStock. Love scanning. Wouldn't trade without it. Already ran scans in addition to running everything today, and decided I wanted to buy a stock. So, you know, it's super convenient to be able to scan and find, identify opportunities. Our next speaker, though, is Melissa Armo. She has a really, really good, interesting gap strategy that she likes to talk about. And stay tuned. She's going to tell you about it right now. Melissa, how are you doing?
Can you hear me?
Yeah, there you are.
Wonderful. Good afternoon.
Perfect. Let me go ahead and make the presenter you. We are running about 8 to 10 minutes late right now, so I don't want you to be too worried about time. It's a suggestion today. So your turn. But I can't see.
We have to get you a step and repeat type background that says MetaStock. I'm looking at your background and it's just a black screen. We have to get you some fancy charts from MetaStock and put them in the back.
Are you throwing shade at my background? No, I'm just kidding.
He does these things now on TV where they have their company logo in the background.
Yeah.
It's like on a, it's projected somehow. We got to get you these because you're doing these webinars every day. Every day you're doing them.
I'm going to paint one. It's going to look awesome.
That would really be.
Well, we can hear you really well, Melissa. You're coming in great.
Let me try. Is that any better? Can you hear me now? I have the microphone right next to my keyboard. Can you hear me better? Okay. I want people to be able to hear me. Thank you so much, Jeff. Thanks for having me here at MetaStock. It's nice to be here today, and it's a beautiful, beautiful spring day here in Manhattan. And for those of you that don't know me, my name is Melissa Armo. I own my own company called The Stock Swoosh, and I started trading in 2008. And then I thought, oh, I'm going to figure this out super duper quick. And then all of a sudden, 6 months go by, a year goes by, and it took me 3 years to develop my system. And one of the most important thing about charts, like Jeff was talking about, is it helps you make trading decisions. So I would never, ever trade if I didn't have charts. I basically would be like trading blind. And, a lot of people out there, they want to look at fundamentals, they want to look at economic data, and that's great if those things help you combined with the charts to make good trading decisions. But in this type of environment, right now, 2023, and even in 2021 and 2022, when you're looking at some of the economic data, and you're looking at it and you're saying, okay, if you're making decisions based on that, again, looking at the fundamentals and not really looking at what's happening in the price action, you may lose money in trades because ultimately things don't always add up. Occasionally the fundamentals will add up with the charts and make sense, but not all the time. So sometimes I will short a stock and it may have a great earnings report. Sometimes something will have a bad earnings report and I will actually go long the stock. So they don't always coincide. So I think charts are essential in order to be able to make trading decisions. And we're going to talk about charts today, but mostly we're going to talk about shorting. And we're going to talk about shorting stocks for winning trades. And this week has been a great week to short. This morning we did Disney. I didn't take a look at where it was right now since I jumped on here, but we did a fast trade in that today. Disney had earnings last night. I did not have time to put that chart in here, but you can take a look at it yourself. It fell. Okay, so we shorted Disney this morning. We got in and out very, very quickly. And I think in this type of environment, in this type of market, which has been back and forth since the beginning of 2023, the best thing that you can do if you want to be profitable is to get in and out quick. And again, I'm talking about day trades, or even if you want to do options. I do weekly options and I do puts for shorts. Okay, put is a short in an options trade, but I'm doing the weeklies because again, I want to get in and out very, very fast. Fast meaning an option 1 to 2 days, maybe 3, but that's even a long time. If I'm in something 3 days, it probably didn't go right the first day. If you have any questions, you can email me at melissa@thestockswoosh.com. You can also call me at 929-3200-GAP. You can follow me on Twitter, Facebook, YouTube, as well, and Skype. I appear on TV. I try to put when I'm going to be on TV on my Twitter or my Facebook. I appear on Fox News, CBS News, News Nation, which is a new channel that's been taking off as well, and Cheddar. And so I talk about the economy, I talk about the stock market, but it's been interesting times right now with the Fed raising interest rates as much as they possibly can, actually. in the last 9 months. And a lot of people are under the impression that the Fed is going to back off rates for the remainder of 2023. I happen to think that they are not going to do that. And if we have time, we will discuss why. But, you know, last year, particularly the majority of the year last year in 2022, we really shorted and had so many big shorts. You could have held shorts, you could have held them for longer, but you couldn't have shorted everything last year. Last year, you could have said it was a bearish year for the market. I don't think it was a bearish year for the market, but there was more shorts that I did in the QQQs and the SPY, which are the ETFs for the overall market, than I did probably in any other year that I ever traded. I'm talking about the market specifically, okay, not just individual stocks. It was a great year to short, okay? But you can make money shorting in any market environment, bullish, bearish, or even sideways if you look for individual stocks, like I just talked about Disney. Another big one we did this week is PayPal. That was really the gap of the week, and we're going to talk about that one too. But you have to know what to short, when to short, and obviously you have to be selective. I put in here the stats for last year for our year-to-date results in the live trading room. I also have 2023 year-to-date as well, but this is an average risk of about $2,800 per trade. These are trades on margin for the whole year, and most of them are shorts because I mostly do short. Results for the year were $651,079. And again, this is all of 2022. Now, I did take some time off last year because I moved. I took about 2 weeks off, but overall, it was a great year. So far this year for 2023, again, we've been doing sometimes the market short, but we've also been doing selective stocks, which we're going to talk about some of those specifically today. And then I also have a gap options newsletter, which is separate from my day trades, which I risk more. So my average risk for my options trades is about $8,000 a trade. Now that's a lot of money. You could risk $1,000 a trade, but this is a mix of calls and puts. Even though I do prefer to do puts, we did a mix of calls and puts last year, but we did the market a lot, and we did the market a lot to the downside. Okay. So there was a very active year last year for the options newsletter because there were so many opportunities to trade momentum, which we're going to talk about today. Again, we are going to focus today on shorting, but we made over $3 million last year doing options with an average risk of 8,000. Again, you can risk more, you can risk less. You can take one contract and do an option. One of the reasons why people like options specifically is because you don't need a margin account to trade options. I like options because I can hold overnight in an option. And I did that with the PayPal, and I got a bigger move holding the PayPal, which was a put. Again, we will talk about that trade in here today, but I got a bigger move by holding it, and I don't want to hold margin trades overnight. So this doesn't have actually the last 3 weeks in here. I have only until April, the middle of April. But I do have the trades we did for May in here. But we were up to April 14th, 185,435 this year for the 2023. So far this year's been on track pretty good. We'll see how we go this month. So far, it's been good. We've had a lot of volatility in the market. I see that we're rallying here this afternoon. We did drop off yesterday at one point and the day before. So again, if you're looking to trade the QQQs or the SPY every day, you're probably really getting chopped up. While I do the market ETF some days, I do not focus necessarily every single solitary day on the market. I like to do individual stocks, individual picks, and what I focus on is gaps, and we're going to talk about what a gap is in a minute. But, and someone's saying something about a big city. I can't see that whole comment. I have to scroll up. If you do have questions, you can take a look. Where's my background? That's New York. That's New York, actually. That's not the background I'm looking at right now. I'm looking at Central Park. So that's a Midtown background. I did move. I stayed in New York, and I moved from Midtown to Central Park. So I'm very, very happy here. It's like living in a completely different city, actually. I can't believe how long I've lived in New York, and I never enjoyed Central Park, but it is absolutely, absolutely gorgeous. And if you've never been to New York, I'll just say this really quickly. You must go to Central Park. You know, it's beautiful right now in the spring. It's going to be beautiful in the summer. I can't wait to the fall. We didn't have much snow this year. I only saw one day of coating of snow in the winter because we had a very light winter this year in New York. But Central Park is absolutely spectacular, and I'm just amazed actually that how beautiful it is. It's like 843 acres, and it really is an oasis in the heart of New York City. But anyways, getting back to what I was saying here. Nothing in life that is great comes without taking chances or risk. So, for a lot of people, once 2020 hit with COVID, a lot of people then started to reevaluate their life, their career, their life path, their relationships. A lot of people had babies after COVID, and then a lot of people got divorced after COVID. So, during the lockdowns 3+ years ago now, here we are, May of 2023, people started evaluating their life and what they want out of life. There's always time for you, no matter how old or young you are, to change what you were doing, to change your circumstances, to better your life, and actually to start a new career and do something different. And so I was at that point in my life when I was doing mortgages, because it became very difficult in 2007 and 2008 because it was hard to get loans approved. I would never want to be doing mortgages right now. Again, getting back to where we are right now with interest rates are very high. So if you go back, and this if you've been looking to buy a home, interest rates 12 months ago, 18 months ago were half what they are, more than half of what they are currently. So again, I would never want to be doing mortgages right now. If I hadn't made the career shift and the career move that I had, 15 years ago, I'd probably be looking to do it now. So a lot of times, if you're one of those people that you're not satisfied in your career, that even just listening to me today. And it's up to you to make decisions about your life, take it upon yourself to make those decisions. And ultimately, it does very often involve risk, because you don't know what the future holds. You don't know what a new job is going to be like. You don't even know when you take a trade if you're going to win or lose, okay? When I take a trade, I try to evaluate what I'm doing based on a rating system that I try to put the odds in my favor per using the rating system that I created, which I'm going to talk about today. But if I wouldn't do that, it would be a 50-50 crapshoot. And unfortunately, that's how many, many, many traders trade. There's a difference between risk for risk's sake and calculated risk. And a lot of people just, again, they're looking at it, well, it could go up, it could go down. It could go up, it could go down. Listen, that's not good enough. 50-50 odds really isn't good enough to make money in any market, let alone this market right now. And what do I mean about this market? This market, since the beginning of January 2023, has been sideways. While the range has tightened and widened and tightened and widened, even today, while we're rallying, we're still within a range, okay? So whether we break up and out of the range or break lower into the range or stay range bound between now and the end of 2023 remains to be seen. But you have to be very, very picky when you're taking trades and you're risking money, and 50-50 odds aren't good enough. Now, I was talking about this in a webinars that I've done ever since this whole bank collapse started, which has been going on now for, I guess, 2 months really. What's one important takeaway from the recent bank collapses? One of the takeaways is that things can happen that are out of your control, and that you have to be prepared for that, okay? So what can you do? And again, the great thing about trading, once you learn how to trade, once you learn how to make money in the market, is that no one can ever take that information away from you. Once you get good at it and once you know how to do it, no one will ever take that information away from you, or the skill set, once you learn the skill set of how to make money in the market. So I have a skill set, and I use that skill set every day. I'll always have it forever and ever and ever. And no one can ever take that away from me. So the frustration that people have when they see banks go under, and of course people lost their jobs, or they see things happen like interest rates going up and then it affects things they want to buy, or when they want to borrow, like whether it's a car loan, whether it's a mortgage, they feel like things are out of their control. While there may be things that are out of your control that you cannot control, okay, the outer circumstances of life, you can control the things within your own world, the choices you make, the decisions you make, what you want to do for a living, and also where you want to invest your money, where you want to risk your money, whether or not you want to trade for a living, where you have your money deposited, and all of these things. So you can't feel like you're a victim to all these circumstances that happen outside of yourself, because then you're going to move forward in life feeling like a constant victim. And that mentality is far too prevalent right now in society today. And you can't really move forward and become and evolve and become the wonderful, fabulous person that you want to be if you feel like you're a victim. Sometimes it's harder than you think to make a career change, or even to learn how to trade. Sometimes it costs money. It very often does. Like I just moved, like I told you, it costs a lot of money to move. fact, I didn't really sit down and figure out how much I've spent since I moved. I'll probably sit down and do that over the summer once I'm completely finally done unpacked. Was it worth all the hard work for me to move? Yes. Whatever I spent, whatever amount of time it was, because my life is so much better now. Just moving, up in a different environment, in a different neighborhood. So risk, spending money, time investment, working hard, all these things pay off for you in the long run if you're willing to commit yourself to do it. And what I've found, again, in the 11 years that I've had the stock swoosh, that I've been teaching people how to trade my method, is a lot of people that trade fail because they lack commitment. And they lack commitment simply because they always want the quick buck. They always want the quick buck. They want to make all the money they ever lost trading right now, this week, this day. That's what they want. They have no long range plan really to actually learn how to trade, get good at it, and proceed and use something that they can do for the rest of their life in the market. So I think, it's the commitment that's important. It's the long range plan that you got to have. And then you have to have the type of mentality where you are in charge of your own life. You are not a victim. You can change your own circumstances. And not only that, you can become wealthy if you really want to put your mind to it. It may not happen as fast as you want it to, but it can happen. And as long as you know that, and as long as you understand that, every single day will be a joy to get up, knowing that you're one step closer to fulfilling your actual dreams. If your dreams are actually to become a professional or successful trader, if you're doing it part-time. So as I was saying again, can you do well during these times? Absolutely you can, because there's volatility. We've seen that just in the last couple of hours. We've seen volatility. Market was down, then it was up. We've seen that. You can capitalize on the volatility in the market if you know how to trade it. Anyways, a lot of people work hard and they just never get anywhere where they want in life, okay? And a lot of people think they're helping themselves, but they're really wasting time. The fact is, don't waste your time. You've got to be smart about it. If someone told you could get to the top of the ladder, the top of the mountain, super duper quick, even if it would cost you a lot of hard work and money, wouldn't you rather do that and save time than have it take you years and years and years and years and years? So, I think, again, a lot of people want to put off till tomorrow what they can do today. And if you're not happy with what you're doing with your trading, or you don't have a trading strategy, or you're not happy with what you're doing for a living and you want to change careers, don't waste time. Think about the future now and move forward. Anyways, any questions or comments, you can pop it in the room. I'm just looking over here to the side. Anyways, one individual can trade the market successfully as a career if you have a dependable method, okay? So I just follow one system, which is gaps, which I will explain to you in a minute. And again, I'm even following one directional bias most of the time. I'd say a short, more than 90% of my trades are shorts. And again, they could be puts and options or just day trade shorts. But the central structure to trading results must be a strategy with a solid foundation that's based on accurately reading price action. And I use technical advanced analysis. So what do you need? You need charts to do that, because what is technical analysis? Technical analysis is looking at past price data in order to predict future price data, okay? So it is an important time to set goals for yourself. Again, in 2 weeks from now, it's Memorial Day. So it's the start of the summer. Everybody is off. You can take a long weekend and set your goals for where you want to be between now and 12/31. Between now and the end of 2023, put a plan in place. How much money do you want to make trading? How much money do you want to make in the market? How much money do you want to make a week? All right. And think about what I said today about this concept of empowering yourself to trade the market successfully and not being a victim to other things that are happening. And I say this not to be negative. I say this to be realistic, that we could go into a recession. We're probably at the start of a recession right now, but we could go into a full-blown recession within the latter part of 2023. Despite what the Fed said the last conference, I believe that we absolutely could. And if they keep raising interest rates, that becomes more and more likely. It doesn't mean that times have to be bad for you. Again, what am I focusing on? I'm focusing on shorting, okay? So we shorted PayPal, fell off a cliff. You can take advantage of these downside moves in stocks and downward moves in the market by learning how to short. So you can actually make money on the shorting side of things. Even if we say, for example, cracks, in the market, you may not like that for your IRA or your retirement account, but you can chunk it out as a trader, as an active trader, by taking advantage of the downside moves. And again, one nice thing about day trading is you can work from home. I'm working from home now. Jeff's probably working from home. It's convenient if you can work from home right now. People are doing that more and more ever since COVID, and people are now just doing it even though they have the option to go back to work. So you can trade and actually do another job at the same time if you want from home. And then the nice thing about trading is you can make your own hours. And again, day trading for me, I trade in the morning. I'm in and out and done quick. We were in and out of Disney this morning in a couple of minutes. But it is a full-time pay with part-time hours, which is really, really nice. And again, trading has unlimited income potential, because the only thing that prevents you from making, $3 million a year versus $1 million a year or $100,000 a year is your risk per trade. You obviously have to know how to trade. You obviously have to have a system that has more winners and losers. But once you know what to do and you apply the system, then of course you can risk more, and therefore then guess what? You will make more. Now let's talk a little bit about charts. So do you know the right way to read a chart? If you do not, you should not be trading at all. Charts are vital. Charts are important. When we're done here, Jeff can talk about that a little bit when we're done. You're trading blind if you don't have charts, basically. You don't even know what the price of something is. I mean, you could go into Google and you could look it up and you could say, boom, 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 what's the price of the QQQs right now? But, you can't make any decisions to predict where somebody's going to go just seeing that. You need the past price data to be able to predict the future price data. And it's very, very important. And again, if you don't have that information, you're basically trading blind. How can you make decisions? Okay. So for me, it is all about institutional money. I'm looking at the big footprints of institutional money in the market. I'm looking at what big hedge funds, professional traders, even banks that invest money in the market are doing. What are they doing? Are they buying a stock? Are they selling a stock? Are they shorting a stock? Again, we're going to look at PayPal. What happened to PayPal? Here's the chart of PayPal. This is a daily chart, okay? PayPal fell off a cliff, okay? Now the reason, you could say, what is the reason? The reason was it had earnings. But again, what those earnings said, I did not read up about, and nor do I care. But PayPal the night before here, see where this candlestick is right in here, closed here like around 75 and change, boom, opened in the morning here under $70 and fell and tanked, okay? So again, this red bar here depicts what? Selling, and you had shorts, okay? So we shorted this, I called a put in this, and we also did a day trade in this here, and then we also did one here. So we actually did PayPal 2 days in a row. So from the previous day, okay, before the stock even fell before the earnings, the stock was around 75. And again, within 1, 2, 3 days, it was all the way down at 62 and change. So talking about institutional money, how would you make money in PayPal? You would have had to been shorting PayPal in order to make money. Now, people always say, well, how do you trade options? I do not do complicated option strategies. I'm trading options using the exact same strategy that I use to make my day trade picks or any pick of anything I do. It's based on the gap and it's based on momentum. PayPal is a great example of this because it had huge momentum on the day, huge momentum the day after, okay? So I'm buying calls and selling them, or I'm buying puts in the case of PayPal and selling them for options. So I'm trading momentum, okay? I'm not trading for a couple of pennies when I do options. I'm trading for dollars, and the momentum should come in fairly quickly. Same thing with my day trades. I'm trading momentum for the day trades. I'm in and out quickly, and I'm in and out fast as I can. And again, if I get in and out fast in the morning, in the first half an hour of the day, then I don't have to worry about a Fed meeting or Fed minutes or anything else like that happens. Now, how did I know PayPal was going to go? How did I predict that? Again, I looked at the chart, and I have a system I developed using a rating system, which looks at the gap. And then I determine how many points it has to determine if it's going to continue in the direction of the gap. That is a system I teach in my monthly class. Now let's go over what a gap is. This is a gap in PayPal. So PayPal, first of all, gap is the difference between the close and the open. So the US stock market closes every day at 4 o'clock and opens every day the next day at 9:30 a.m. So this PayPal here was a gap down, okay? So there are gap downs, there are gap ups. What is a gap up? Again, the day before in here, PayPal closed at one price and opened at a higher price. So this was a gap up. So this was a bullish gap. This was a bearish gap, okay? Actually, the day after the PayPal earnings, it had a bullish gap, but it failed and it fell off a cliff. That was day 2. What is today? The 11th. That was the 10th. So again, I look at the gap. Where do you see the gap? You see the gap when it's happening. It could happen at night. It could happen in the morning. I'm not predicting the gap. In other words, I didn't short PayPal here or here or here or here. I didn't know what this was going to gap here. I did not know that at all. So I wait. And then when I see it, I use a system that I developed over 3 years plus, where I will rate the gap on the daily chart and determine if it's going to keep going down, which is exactly what PayPal did, or if it's going to go up. And a lot of people that trade gaps want to do something called a gap fill. Now, I personally do not trade gap fills. Some people do. I find that they do not have a consistent way to make money to work, okay? So I don't do gap fills. While sometimes you might be able to make money doing a gap fill, it's not something that I found is consistent. So again, getting back to the odds, high odds, how do you make money in the market? If you need high odds, you need to have things working in your favor. You need to have more wins than losses. So in the case of PayPal here, the odds were that it was going to sell off, and that is exactly what it did. Now, here was the play of the day that we did, which was also the gap of the week, which is in PayPal. This was not the first day, actually. This was the second day. The second day, we had such a big trade because I had such a tight entry. So entry was 65.05. And again, this is a trade on margin. You would need a margin account to do this trade. 6,000 shares, the risk was 3,000, exit was 63.40. It even kept going after that. I'll go back and show you the chart. This was yesterday, May 10th. Profit was $9,900. Now, this is actually a very reasonably priced stock, I think, as far as the price point at $65 a share. Again, if you have a retail account, you understand margin. If you don't, you can always email me afterwards or ask me questions now about what is a margin account. You can trade options without a margin account, which is one reason why people like to do options. So you could have done a put in this. And if you didn't want to do a margin trade, we actually did both. But I want to show you here, again, this was day 2. Okay, this trade in here was day 2. And I just want to show you here, this ended up breaking 63, going all the way down here. It didn't quite get down to 62. It tried, but a really, 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 really big sell-off in the PayPal. Okay, and just a great example of not only shorting, but also momentum, and how momentum can really come in and just grab hold of a stock, and it can either push it up or it can either pull it down. And again, we're talking today about shorting, all right? And the reason I like to short is because you get fast moves in shorts. Any questions here about PayPal as I'm talking? Now, I do have an options newsletter, which I did send out this trade at 9:21 right before the open. I sent out the $70 strike puts in PayPal. It ended up opening underneath the strike. So you could have actually done a lower strike in PayPal than $70, but this ended up being a really, really huge trade. Why? Because again, of the cost of the option, which I'm going to show you in a minute, and the fact that it fell off a planet. So it was profitable the first day if you got in, got out. It was profitable here if you got in, got out yesterday. And it was profitable also, you'd still be up if you did this trade actually today, because I called this on Tuesday in the morning on the 9th, and it doesn't expire till Friday, although I don't know why anybody would still be in this. This cost of the PayPal was $2.25, an advanced trader risk of 40 contracts. It was $9,000. This is, I sold it yesterday, but again, you could still be in it. I don't even know what this was priced at today, but I know this was still a good trade today. This probably was worth at least over 6 still this morning. Profit was $17,000, return on investment 189% on the PayPal option. Now, if you could have taken one contract of PayPal, you could have spent $225. You still could have almost doubled your money in the PayPal, even with one contract. And again, you can have an options account as a cash account. So if you did a beginner risk, I just have here $1,125, you could have made $21.25. Again, that's in the first day, out the second day. And again, PayPal still could be lower today or tomorrow, but I don't really think it makes a lot of sense for people to hold PayPal where something's up this much money, well over 100% into the last day of expiration if you are up, okay? So PayPal again was the gap of the week. It was the short of the week. It was the option of the week. It was the day trade of the week. It just was a great trade. So, I mean, ultimately, when you're in something and you really love it, you can take it as a day trade, take it as a swing trade, take it as an option, do multiple options in it, do multiple day trades in it, okay? And again, that was a short. So I used my day trading strategy, my gap rating strategy, my option strategy to trade PayPal, all right? And it's just one strategy. It's all about the gap. You just do not need a general overall broad-based view to make money trading. Again, you don't have to read tons of books. And you don't have to do tons of different strategies. Tons of people do that and have lots of information, but they just don't know how to make money. The most important thing for you is making money. If you do not know how to make money, you are going to have a hard time having longevity in this business because you're doing this and you're investing your time. You're sitting down every day, you're opening up a trading account and you're paying for classes and you're spending time in webinars like today all day. You want to spend your time wisely. You want to make money. Otherwise, you may as well just go out and go for a walk in the park. You know, there's plenty of other things to do to enrich our lives if we're not going to be successful. So I try to condense the amount of time that I trade into a very short period of time to make the most money that I can in the shortest possible time that I can, because I value my time and I feel like my time is very important, just like I'm sure you do. So anyways, getting back to the whole concept of the philosophy of trading and shorting, I'm looking for institutional money. I'm looking for institutional money in the price patterns and gaps. And if you know how to do this, you don't need to do anything else because this will make you money. Now, I did start talking about this earlier because I said, where do you want to be by the end of this year? I think it's important to write your goals down. I think it's important to know where you're headed, not flounder, okay, not be wishy-washy about your goals. But I think it's important also, like I said, to say to yourself, you want to be in a better place with your trading, a better place financially in December of 2023 than you are right now in May of 2023. But success in the market is about mastering a skill, and that is how you make large, consistent profits. Large moves happen in the first 30 minutes of each day in gaps, and that is the time of the day that I'm usually getting in. And again, you can't short every gap down. You can't go long every gap up. Just like you can't do gap fills all the time willy-nilly either, okay? I devised a rating system to rate the gaps. I called it the golden gap. And this is the method that I use each morning and I apply to certain stocks that I'm seeing that are gapping or the overall market. And then if I get the rating of 20 points or more using a 26-point rating system, then I will take the trade in the direction of the gap. So my whole system is based on a rating system which looks at charts, okay? I am looking at 26 points on the daily chart of a stock. The rating system is a checklist, okay? This is what you learn in my class if you come and take my class. The checklist tells you what to look for in the price of the stock. The points predict price direction correctly when a stock is gapping. So again, I'm only doing gaps. I'm mostly doing shorts. I'm mostly getting in right away in the first 30 minutes of the day, or I'm not even trading it. And I'm doing options and day trades in both the gaps, okay? Anyways, the points tell you where the money is flowing. So why does this matter? Because you want to know what direction to take the position to profit. The only way you're going to make money going long is if the stock is rallying. The only way you're going to make money shorting is if the stock is falling. It really doesn't make sense any other way. So again, you can scalp for tiny pennies if you want to, or you can look at something and you can actually look at it and say, well, let's just go through the whole thing and try to see, you know, if we can get a really big move in something. Because again, if you have a large move, you can take one contract and make almost 200% of your money. So the whole idea is to take a good sized position, small, medium, or large, whatever you can afford, and make the most bang for your buck and make it as fast as you can. So golden gaps have 80% of their move in the first 30 minutes of the day. Now, PayPal was an exception to that because it continued actually into the close, and the following day, the same thing. That was, again, like I said, a very good gap. But I call this the money move, where I'm trying to get in and out very, very quickly. Again, I don't know where Disney's trading right now, but we did that this morning. We captured probably 80% of the move of that in the morning when we did it and got in and out. We play the day, the move, and the early, quick, and we're in and out and done. And then you can have the rest of your day to yourself to do whatever you want to do, whether it's to go into another job or whether it is to be with your family, or if you're retired, go golfing or something like that. But to make money as a trader in this market, you have to get momentum and you have to get the direction right. And you need to be able to be in a position that doesn't need the market to get your move. If you're in something and you need the market's help to get the move there, whether it's up or down, you're gonna struggle with that, which many people are this year because the market isn't giving right. What do I mean? It's choppy. So it fakes up, then it goes lower. Then it fakes lower, then it goes higher. It's choppy, choppy, choppy. And that has been very frustrating for a lot of people who need trades with the overall market. So again, looking for specific individual stocks is the best thing. Now, this is an overall chart of the SPY. Just taking a look at this here, this is back from March until May. You can see here how we've been sideways. You can see here where we rally and we don't go anywhere up, okay? And then we drop off. Then we do it again. Then we drop off. Then we do it again. Then we drop off, okay? So this has pretty much been par for the course for the majority of 2023. And again, the Fed has been creating havoc in the market, and the market just waits breathlessly every single time there's an FOMC meeting to see what the Fed's going to say. If you listen to the last Fed meeting, which was last week, I mean, it was as if Jerome Powell didn't even know what he was saying. It was the most convoluted meeting that I ever saw him give, where, I mean, you scratch your head and say, wow, these people are in charge. Because he really didn't have the answers. He didn't have any answers. And he really struggled in that press conference in a way that I have never seen him struggle before. They have no cure for inflation. The only thing that they have an idea to do is to continue to raise interest rates. And since inflation is still too high, I believe that's exactly what they're going to continue doing, because they don't know what to do anything else. And in his speech last week, if you didn't listen to it, you should go find it on YouTube and listen to it. I mean, again, they have no clue what they're doing and no answers to the problems. So why people would think all of these problems are going to go away and everything's going to be beautiful in the market and it's just going to scream higher at all, not just now, at any time in 2023. I mean, I don't know why people think that, because people in charge really don't know what they're doing at this point. Which you say, okay, well then what do you want to do? Again, if you're actively trading, you're in and out quickly and you're making money consistently on a daily basis. If you have an IRA or something like that, then you need to sit down with a financial counselor and make some decisions. But you really should have done that 12 months ago or 18 months ago when the market started selling off at the beginning of 2022. But success and large profits come from quality, not quantity in place. One trade a day. That's all I can do. Boom. Today we did Disney. Yesterday we did PayPal. One in and out quick. The more plays you have, then the more potential there is for losses. So quality is key. You don't want to lose money. Okay, you want to make money. Now, why do I trade gaps? Why do they work so well? Why do they pay so well? Because gaps, like I said, are created with large institutional money. That's what makes the gap. And again, I prefer to short, because short moves, downward moves happen very, very fast and quickly. Panic comes into a stock or the market and the moves happen quick. So I like to be in and out of my trades quick, but you can still make money going long gaps too. But the professional gaps that happen and play out in stocks are formed by one thing and one thing only: large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. And again, this is what I focus on. So the philosophy behind my 26-point rating system is to find stocks to trade that have, number one, a high probability of directional bias for the entire day. 2, big moves on the day. 3, early confirmation of my bias, preferably in the first half hour of the day. And then precise entries with follow through and a good risk to reward, which is what I want. Now, here's the month of May. I was off for 3 days since the beginning of May. We did CVS the 3rd. Again, one trade. Then we did AMD. I like that day too. That was the 3rd. Peloton, we did the 4th. SPY, we did the 4th. Apple we did on the 5th. Apple was the one long. That was last Friday. I was off Monday. PayPal we did on the 9th. We did the Qs that lost yesterday on the 10th. And I did the huge PayPal. And today we did Disney. So May has been off to a very good month. We've only had one loser so far this month in May. And again, these are day trades. These are day trades on margin with an average risk of $2,800 per trade. Now on 5-3, we did CVS. I want to show you this gap here. This was back last week. Again, what is a gap? A gap is a difference between the close and the open. So what happened here? CVS closed the night before around 72 and change. Boom, open in the morning. So this is 4 o'clock. This is 9:30. At 9:30 a.m., CVS opened here around 71 and 30-ish. And then it fell. Boom. So we got in, got out, done, shorted it. So this was 5-3. This was a gap. This was a short. Down here's the volume. So this was a nice trade. So entry was 70.10, shares of 2,000 with an average risk of 2,800. We did an ad because I really, really liked it. We took more of it when it pushed back, added in, plopped it on. Average price was 70.30. We got in, got out. I got out too soon in this. I actually could have held this longer. But again, I prefer to get out of my trades fast. This kept going. I just want to show you here where this went. This came all the way down and broke 69. So I like to get in and out quick, but you can hold trades if you want to. You really, really can. Then we did the SPY on the 4th. Okay. Again, this was last Thursday, a week ago. SPY closed here, gap down, fell. Okay. So this was 5-4. We shorted the spot. So you could have bought a put in the SPY if you didn't want to do a margin trade, or you could have done it on margin. Entry was 406.30. Shares was 2,200. Risk 28.60. All of your trades should be the same or equal in risk. If that is not something that you're doing, that's something you should adjust right away, okay? Because your results are going to be all over the place. You'll never know if what you're doing is right. If the amount of money that you're risking in each trade varies too much, it's got to be close to the same in each single trade to compare apples to the trades that you're doing. Exit was 404.15. This was a really good trade. This was $4,730 profit. This was on 5-4. Again, this particular day. Again, in and out, drop. I don't remember why we gapped. I think we had economic data or something. No, that was the follow through from the FOMC minutes we had. This was Wednesday. We sold off on FOMC, and then Thursday was the gap down and we fell. That was last week. And again, this is the SPY. Then we did Peloton on that same day. This was a little tiny one here. Stock close to your gap down. Again, some things we do are cheap. This was a cheap one here. I did not do an option in this. We entered at $7.55 and we made 10 cents on it, $1,200. You could have squeezed a little bit more out of that. I think the low was $7.30 something. But again, once you get to a certain price point, this is actually like a big move for Peloton. 50 cents, 40 cents is actually like a big move for Peloton at this price point. Does anyone remember we were talking about COVID when Peloton was all the way up, rallying? You couldn't even get a Peloton. You were on back order to even buy one during COVID. The stock has done nothing but tank, actually, in the last 3 years since then. And like so many other companies, I mean, who knows what will happen to Peloton? Like Bed Bath & Beyond has gone out of business, declared bankruptcy. So many things have been victims since COVID as well. Any questions here so far? Any questions from anyone? Okay. So how do I use my 26-point rating system? I wait for the good ones, which means I'm looking for high odds. So I have a 26-point rating system. I apply, go through in the morning. I spend about an hour every day doing it before the open. I make a list of what I want to trade and watch in the pre-market. If it rates 20 points or more, then I will take the gap in the direction of the gap. If it doesn't, I don't do it at all. So that's it. That's pretty easy. And it's about learning the points, understanding what to look at. And again, that is critical. And that's the meat and potatoes of what I do and what people come and learn in my class. So the whole philosophy behind the golden gap points is what? Looking for momentum before the momentum comes in, because it's too late afterwards. Okay. Like if you want to go short PayPal now, you're not going to make anywhere near the amount of money that we made the last 2 days. The entry in the PayPal was 5.9 or 5.10. Okay. I'm not saying that PayPal doesn't fall again. I'm saying the good entry was to capture it right away out of the gate on 5.9 and then again 5.10, because again, it's capturing the momentum, getting in before the institutions take hold of the stock, before they push it down or push it up. How do I quantify risk and options? I don't know what you mean by quantify. I choose amount of risk, and I risk the same in every trade as far as cash, if that's what you mean. So if you have an account with $10,000 in it, say for example, a cash options account, then maybe you want to risk $1,000 a trade. Then you can be in more than one thing at one time. I don't know what you mean by quantify. As far as my picks, how I'm making the picks, if that's what you mean, I'm rating the gap the same way that I'm making the trades for the day trades. I rate the gap using my golden gap 26-point rating system. And if I rate it and it rates good, like we've done trades in the market, for example, then I say I can take this as a put or I can take this as a call because it rates over 20 points, and then I do it. So I am doing some things as day trades and options together, like PayPal, or I'm doing some things only as an option or only as a day trade, for example. But the method that I use to make the pick is the rating system for both, if that answers your question. As far as your risk goes, it depends on your cash. And the reason I risk more in options is because I want to hold overnight. But also, many stocks that I've been trading over the last umpteen years were very, very expensive when I started trading options. We were doing Amazons back in the day when Amazon cost, $50, for one contract. Now the stocks have split so much that nothing is at that price point, not even Tesla anymore. But, you might pay $10 for one contract in Tesla, which equates to what, $1,000 for one. So again, if you want to get 9, contracts, then you're going to spend, if you pay $10 for one, it's going to cost $9,000. So I've allowed myself to risk more because back in the day when I started doing these, I was taking things that were more expensive. Now that's not necessary, And again, they've made options so doable for so many people, so many different various price points that they have daily options in the QQQs and the SPY. I'm not doing this. I am not using those, but you could basically day trade options. If I call a short from the SPY, you could buy a put that's the expiration of that day and get in and out. You could. Like the SPY trade that I called in here on the day that we did it, you could have done that. You could have done the SPY expiration option on that day. There's daily expirations now for QQQs and the SPY. That's something new this year. I'm not doing that, but you could. You could, depending on the size of your account, you could do that. Okay, so there's so many ways to take advantage of it. The system I use for both any method that I trade, any way I take the trade, is based on my golden gap rating system. That tells me that the stock's going to fall, and that tells me that I want to short it. However, I decide to short it is up to me if it's a put or an equity trade, and then you can decide that yourself. You can decide that yourself as well, how you want to do it. And again, the options and newsletter, like the emails that I send out, that's a subscription service that you can sign up for if you just want to get the options trades and you don't want to learn my method in the class. But I do think learning is important. I do think taking the class is important. It's just a matter of what works for you. Obviously, you're going to do a lot better if you understand what you're doing and you learn first and then trade. But so many people just want to trade. And so I have people in the options newsletter that have never done the class. But I do think the people that have done the class trade better than people that don't, in my opinion, of the 11 years I've had the business. Now, this was AMD. This was a gap that we did here. This was a short. Stock closed here, gap down, fell, boom. Again, that was last week. I called on May 3rd. I called the 82 puts that actually don't even expire till this Friday, but I got in and out. Cost was cheap, $1.50, boom. Dropped, fell, got out. Made $1 on it, good trade. Made $6,000. If you risked $1,050, you could have made $700. Again, this is getting in the trade and out of the trade the same day, but doing it as an option. Okay, we also did a day trade in that too. So again, there's many opportunities to do day trades and options in the same stock. You just have to look for them. But getting back to what I was saying here, gaps are a bit. And they create a sense of urgency. That's an action is being forced by participants at the stop. This is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power. You're trading on the side of power. Who's in charge? Who's in charge? Who do you think's in charge? The big banks or the small banks? Who do you think's in charge? The Fed or the government? Who do you think's in charge? You know what I'm saying? Like, just think about it, okay? So you know who's in charge. You must play with the people that are in charge. If you try to play against them, you are going to lose. It is a losing proposition. And you have to get on the side of things that are working in your favor. You have to be smart. There's no other way to put it, okay? So the whole philosophy behind the Golden Gap system is to analyze a large time frame to make the trend decision on the directional bias for the gap. All large traders of every kind look at large time frames to make decisions, particularly institutional traders. And then you're using the daily chart to make the decision for the stock pick, which allows you accuracy in the direction. So again, you must have charts. You can talk to Jeff about the charts. You've got to have charts. Otherwise, you're just trading blind and you're going to lose. You can't make trading decisions in this type of market based on fundamentals. Even if you wanted to do that, you're not Warren Buffett and you don't have billions and billions of dollars to weigh on downturns, buy stocks, and let them drop off a planet before they go back up around again. You won't be able to withstand that. Many people can't. Even people that are wealthy don't want to see their positions go down to a certain percentage and then take losses and wait for the downturns. And so I caution people for that. This is not long-term investing. This is day trading. This is active chunking it out trading. You're doing it in options where you're active and you're in and out. And we're using the 1-minute chart, which allows for good risk rewards and accuracy. This was another good one we did. This was Boeing. Again, this has been falling too. We did a trade in this. It fell in here. Boom. I'm going to show you the options we did on the 4th. It was just good timing on this for me. Just really good timing. I called it a little bit after the open, the 190 puts in BA, and it fell like the second that I sent out the trade, it fell. Cost was $225, which is cheap for BA. Sold at 470. This is in and out in one day, 109%. Again, you can day trade options. But again, you could have held this, but when you're up this kind of money, you cannot mess around. Not in this type of market, not in any type of market, in my opinion. Why would you? When you take a trade, you have to use the money to take it. And you don't have this money back in your account and the profit until you get out. So the nice thing is when you book the profit, say you risk $11.25 of $1,225, then the next day you get up in the morning, you've got that money in your account and you got that money back in your account. So you don't really want to be holding stuff that long. Anyways, here's the day we did it. It was just like perfect timing, boom, and then fell off a planet. Now, I didn't necessarily know that it was going to go to 195 that day. I thought it was going to go down that day. It ended up going really, really, really big that day. Here's the BA. That was last week. Anyways, it's important to get a trained eye. This is what I teach in the class. A quality strategy, which is golden gaps, having how to have a good risk to reward. You got to get the right entry. And without a good strategy, you're never going to make a dime in the market. You're just never going to get there. You need to learn what to do in order to be successful. You need a trading account. Again, you can talk to Jeff about scanners and software and charts and getting all of that. You have to decide if you want a margin account or a cash account for options. That's up to you. You can ask me questions, but it is about focusing on the right information, and you must have a plan for booking money. That's the whole purpose of doing this. It's fun when you make money. It is not fun when you lose. And if you're losing money trading, then you should stop what you're doing because it doesn't work. You know, a lot of people want to blame themselves and say, oh, I have a discipline problem. I have this, I have that. Chances are the strategy you're using just doesn't work. If you don't have a good strategy, you're just not going to be successful. So anyways, we talked about working from home, getting the right risk to reward. And we did touch on this earlier about today's economy and really, you know, making decisions to be independent and basically work for yourself. Then you really are in charge of what you want to do. And I do think it's important to focus on success, have goals, set those goals, and empower yourself to trade. Any questions here? I'm just watching my time a little bit here. I'm going to talk about the class and the class dates. So I teach a class. It's called the Golden Gap Rating System, and I teach my class once a month. It's a checklist. And again, I teach this class because I think it's important for people to know what to do. Now, I call the trades live, like the Disney trade in the live trading room. You can go to my YouTube and watch some videos of the room on there and other videos I've done. If you take the class, you are eligible to join the live room. In the class, you will learn a 26-point professional bearish gap rating system. The purpose of this system is to help you evaluate which gap to trade each morning using a checklist. It's a class on how to find, pick, and play professional bearish gaps. And the class for May is May 20th to 21st. Not this weekend, but the following weekend. It's 9 to 5. Class tuition is $69.99. If you're interested, email me. I'm currently running a special. I already had this going on. If you're interested in the combo, it's $74.99. You get the trends and the golden gap. And the special is if you sign up by tomorrow, you get the trading room free through the end of 2024. That's the rest of this year, 2023, and all of next year. This is huge. This allows you, it's an earnings season special. I've been running all week and I'm running it through tomorrow. If you want to sign up for this, you must email me for the sign up forms. It's a good offer. This means you don't have to rush to make the money back for the class. You can take your time in the room, take small size, follow along, learn and trade, and it's a good offer. Any questions here last minute?
You might have saw it already, but there was a question about how you quantify risk in an options trade. And
Yeah,
I don't know if you,
I know what they meant by that. Maybe you can explain what they meant. What did they mean? I don't know what quantify risk.
I don't know if I was, the only way I could say, the way I would quantify a risk in an options trade is if I was buying something, my maximum risk is going to be what I paid for.
Yeah.
So that's paid it for it, right? In the worst case scenario. I don't know if that's what he's asking. So
I didn't understand that question, because if whatever amount you're risking, and you have to look at the size of your cash in your account, and all your trades risk should be close to equal. That's how I quantify it. Other than that, how I'm choosing the trade, if the person meant that, is based on my rating system. Other than those two explanations, I'm not sure how to answer that question or what that person meant.
perfect. Well, I thought you did a great job. Thank you for coming in.
Thanks, Jeff. It was nice to see you, and I will see you soon.
All right, for sure. We'll talk soon. Thank you, Melissa. I do appreciate your time. Cool. All right, let's do this then. Okay. I'm going to go back in here real quick. Okay. Let's see. And you should be able to see my screen, so I just have to do this. Hey, everybody. Let's do a prize giveaway during this break. What I need you to do, as you know, we've been picking numbers. Somebody asked how the raffle works. So if you're watching on YouTube and you haven't registered yet, what you'll want to do is you'll want to go up to metastock.com/traders-conference, or you can click on the link that Kelly's about to post in the chat and register for today's event, and that'll submit you to be part of the raffle. All I do is I say, hey, audience, give me any number between 1 and 10,689. And whoever's the first to give me that number, I check it against my list over here of people, and then we give away the prize. Adrian, it's a quick one. Okay, while we get some numbers, I want to say thank you to our sponsors. Let's go ahead. Task is awesome. CMT is awesome. This time, I think I'm going to talk just a little bit about AAII. AAII, it's a great sponsor of MetaStock. They're joining us today for the first time ever. They started their nonprofit in 1978, and they've helped 4 million traders in that time. They do newsletters, they do market research, they do sentiment surveys, sentiment analysis. Hugely well respected organization. You can find out more about them at AAII.com. So there you go. Lots of numbers coming in. Thank you for those. Let me go ahead one more slide so we can get the MetaStock advertisement while I give away this prize. So let's see, Adrian T, let's go ahead and go with 4637. So first of all, actually this time I'm going to say what the winner is first, and then I'm going to go to, and then I'm going to tell you what the prize is, 4637. Okay, so the winner of this prize will be David A. in the United Kingdom. Let's see, and an AOL address. So David A, UK, AOL. Does that sound like you? You might have won a prize. What did you win? Let's find out. Okay. Okay. All right, looks like you win Larry McMillan's Option Strategist newsletter. This is a 3-month subscription. Larry McMillan, if you don't know who he is has written literally the book on trading options. Very, very good technician. This is his 31st year of publishing the newsletter you just won. The Option Strategist newsletters remains one of the industry's most respected stocks and options newsletters, written by renowned analysis and best-selling author Larry McMillan. So congratulations on winning that prize. Thank you for registering for the event. And what will happen is the McMillan Corporation, I think is actually what they're officially called, will reach out to you sometime next week to kind of help you get that price set up. So thank you for all the numbers, both in YouTube and in GoToWebinar. Let's go ahead. Of course, we are MetaStock. MetaStock's been rated the #1 price software in its price category for 30 years in a row. It starts at $69 a month. If you buy a month, you can get the second and third month for free. You can do that at metastock.com/conf promo. You can give us a call at 800-882-3040. And you can visit us online at metastock.com/saleschat. I personally love MetaStock. I ran a scan earlier, found a trade. I wouldn't trade without it though. It's helpful. It's so easy to go in, say, okay, this is what I'm looking for. Show me all the stocks, and narrow a list of maybe the S&P 500 down to one stock that you really like to maybe buy today. So there you go. 800-882-3040. Take advantage of it. Let's go ahead and move on to Fausto. Fausto! I'm not going to go ahead and turn his mic on. Fausto, I think what I'm going to do, there's two ways I love to introduce you, and you know what both of them are. But Fausto, I can't hear you. Let me try. Did I mute you?
Okay. There we go. That's me.
Yeah. So, ladies and gentlemen, not only is Fausto a great teacher about how to look at level 3 data, which is the only class we're going to do level 3, but I want you to know that one time him and his lovely wife went on a cruise, and he was voted most handsome.
Oh, thank you very much. I thought the other one was a little bit better about the pregnant leaving the wife, so I could finish the MetaStock event and then come back to her, have the baby 30 minutes later, but I'll go with that one.
Okay, we'll do that one next time too. So
how you doing, Jeff? How's everything going? Looks like you had a good crowd today.
Looks like you've got a good 10, but yeah, everything's been going great. The whole conference has been good. We've had some really good questions. The audience, they're smart.
That's good.
Yeah.
I got a little tan because I was working outside. I was building my new garden. I got the home living channel I started. Did you watch the new one, the new video I made about how to make tomato sauce?
Yeah, you showed it to me 2 weeks ago. We watched it together.
Yeah, now we launched it. You can watch it. You got to watch it again. So when you make your sauce, watch it. But now I just made a new garden. This is the fun part about being a trader, Jeff, that you just trade in the morning, you make your money, and like you can come back and you do great events, meet great people, in these events. Because when you get to our age, we kind of have that kind of fun.
Yeah,
but,
for sure.
That works.
I'm sure it's an awesome garden.
Hold on, let me try to get my screen up there and share for you. Hold on. Ooh.
We talked about chickens quite a bit too. So if you guys have chicken advice and you need chicken advice, that's the paid session. It's on Sunday.
Well, listen, with the price of eggs going on with inflation, it's like a commodity. So you got to cut corners somewhere here and there. But anyway, let's get started. First of all, can everyone hear me loud and clear? I know Jeff did. Let's get a little chat back really quick, just to kind of see if everybody can hear loud and clear. Just give me the questions. There's the questions or chat. There we go. All right, good. Could I? Is anyone chatting? I just want to make sure everybody can hear me. Okay, Jeff. Just want to see if everybody hears loud and clear. All right, I think so.
We're getting some positive comments in YouTube that they can hear you.
Okay.
And if you're in GoToWebinar and you can hear, say hi. We want to hear from you.
Good. Well, you know why? Because sometimes I like to start off, to kind of let everybody know, what kind of trader we are. You know what I mean? And one of the big things I kind of like to share. I've been doing this kind of fun now, and I learned it when I bumped into you when we went in Vegas. But just kind of get to know what kind of animals. Does anyone a fan of animals? Are you a dog fan? Are you a cat fan? Do you have a dog? Do you have a cat? Or you have neither? Just want to get to know, to see what everyone has, because sometimes these things show you how you relate with each other. All right, and then I'll break the news what I'm a fan of. Just kind of get to know what everyone has. So while everyone's doing that, let me tell you what mine is. Baby, little lazy bastard. Meet Chloe. This is my cat, Chloe. Chloe helps me trade. She actually bought a stock for me the other day, stepping on my keyboard because she wouldn't stop leaving me alone. But this is my nice little cat, Chloe. Right, Chloe? Say hi. All right. So I'll tell you a little bit about what she bought for me and why you got to be careful keeping your hotkeys and your trade station up and running while you have your animal. Like dogs, I don't think do that, but the cats got to be careful. But anyway, I'm going to talk about what is my favorite tool to use on breakouts. You know, if some of you don't know me or have met me before, I've been doing this for 30 years, as long as basically MetaStock's been around. But I'm going to teach you a little bit of art of trading. Before we do that, just a quick little disclosure. Just let you know, this is strictly for educational purposes only. Oh, there we go. Now we're starting to get people, Jeff, to answer that. We got a lot of cat fans. Love them. Thank you very much, Steve. Troy, got a dog fan from Jennifer. There you go. But the reason why I kind of bring that up is because we all have a style of what we like to trade. If it's, you know, if it's stocks, if it's options, if it's swing trading, everything else. But the big thing you have to understand is you got to know how to play the game of trading. And it all starts by understanding what happens over the course of the day. Now, what I'm going to do is I'm going to teach you what my style of trading. I've been, like I said, I've been doing this for over 30 years. I live here in New York. I was trained by some of the best traders in the world. And before I became a very successful trader, I was a very successful loser. So everything I'm going to talk about at the end of my presentation, I'm going to invite every single one of you to come watch this live. Because what you're about to see, you're going to realize that you've been trading blind or knew that something exists, but you never thought about doing it. I'm going to cover that stuff with you. So stick around, don't go anywhere. Just make sure you have your cell phone with you, because we, you know, now with this new technology with QR codes and AI, I'll give you the QR code so you can register on your phone, or if you want to click the link, you can do that also to get you registered. So, so anyway, I was one of the first schools that started in today's industry of trading. We have a 5-star rating on Google. Imagine that after 30 years. So, you know, been doing that for a long time. A+ rating, Better Business Bureau, everything. We educate for some of the biggest brokerage firms in the industry, like Thinkorswim, TradeStation, Schwab, NASDAQ, all of them, because they know that if they have an educated client, you'll be a client theirs forever. Now, but as I got started, just to let you know, I've known MetaStock for years. We've done trade shows together. I think that's where we actually met. From the day we all started. I'm also a 12-time champion at the Traders Expos and stuff like that. But that really doesn't make you money. What makes you money is, this is all great news, but your question is, could you teach me how to do it? See, everybody could sit there and talk about and brag about the winners. You know what the biggest thing people need to learn? It's how to control the losers. That's what I was taught. So here you are hearing a lot of people talking about winners. How about let's talk about losers, okay? Because losing is really not a bad thing, because if you know why you did it, you're not going to do it again. And that's why I love teaching, because I hate seeing people lose money. I've seen people blow up their accounts over the years, and they think they've got, especially even like COVID right now. I know some of you here probably, you know, remember that, how great it was. And then all of a sudden you're like, oh my God, I didn't know this was that difficult. Yeah, it was easy with the market going up. Try to trade when the market's down. Try to trade what's happening now when the market's flat, okay? But guess what? There's always opportunities to do it. There's always something that is moving. There's always going to be a good deal. So you could sit in the sidelines and wait all you want. But as a trader, you'll know what goes on all the time. Now, also at the end of the presentation, I'm going to give you my book. It's sponsored by Wiley, one of the oldest and most well-known publishers in the industry, the published industry. You can go to Amazon. You could buy it right now for $47, but I'm going to give you a deal. I'm going to give it to you for free. Okay, how about that? Just wait to the end. I'll give you a PDF version. You'll love it. It's a fast reader. It's one of the #1 bestsellers for day trading books today. Now, how did I get here? Okay, well, listen, I want you to understand something, that I was you 30 years ago. And I don't know, and you could say I've been trading for 20 years, 5 years. Yeah, please. Unless you worked as a market maker and knew what Wall Street was doing, and stop playing that you on Main Street, you're going to see the difference. The picture you see on that left-hand side, that was a friend of mine. We were written up in Forbes magazine, a bunch of kids tormenting Wall Street. I was one of those kids, okay? When I started, it was about 1,000 of us. Now there's over 1 million of us trading every day. Now, we used to make money on that little stinky little 15-inch monitor. Now you have people have 6 monitors, 12 monitors. They can't even make money on that. So imagine us be able to do it on that, and we used to do this. The only thing that has changed from when I started till today is you didn't have to be licensed, and you didn't pay $20 a ticket. And we made money then. People are getting tickets for free. They still can't get money. You know why? Because you were never taught how to stop losing money. And that's what it's all about. So how do I know what I learned what to do? Well, my first generation Italian, my parents came to this country, and he said, listen, our goal is, we start families so we could pass on our knowledge for them to do better than us. So one of my things my dad always taught me, he said, listen, if you want to make a lot of money, go find people that are very good at what they do and learn from them, no matter what the cost is. Okay. So what I ended up doing, I didn't listen to him. I was an ignorant 22-year-old kid. I says, that sounds good, Dad. Let me try first and let me see if I like it. Then I'll go learn. Okay. How many of you are doing that right now? Let me try trading. Let me see how it works. And if I like it, then I'll learn. Yeah. Okay. That didn't work too well. And the person did brain surgery, and I don't think anybody will want somebody to do that on them who just learned it on their own. So anyway, after blowing up 2 accounts, I finally took a job commuting back and forth to the city. It stunk. But let me tell you what you're going to learn. What I learned on the first day on the job is what you're going to learn in the next 5 minutes from now. I should have never made my first trade, because what you're going to see is that it doesn't matter what you think. It matters what Wall Street thinks. You want to know think about this for a second. How much better and smarter trading decisions would you make if you knew where 70% of the buyers and sellers are? Now, the MetaStock platform is once again, Jeff told you, ranked #1 platform 30 years in a row. But the platform does not make you money. You have to click the button. You got to go out there and sit there. You got to know how to set it up. You need to know where to look. You got to make sure you don't make those mistakes. Because like I just told you before, I've been married for 25 years. I got 2 families. I tell everybody, my everyday family and my trading family. One of the reasons why I think I had a good relationship with my families is because we love trading together. And that's what it's all about. Spend more time with my family. I could do more things. Like I said, I could build a garden, take care of chickens, and run a home living channel. But I'm looking for people that want to be a new student of CTU. I'm always looking for new traders to trade with us. I'm looking for people to trade in our group, because hopefully if I could teach you how to make money, you'll go out there and teach other people. Like, there are a lot of schools out there that are trading today are students of Cybertrade University. Okay. So, and hopefully sometime you could be that, because when you realize it, you're going to be like, I want you to pass the word around, because trading is almost a 90% failure rate. And if you have any heart or any care and don't like your industry to get bashed, because that's what ends up happening, because it's not good business. It's really not good business when people lose money. Okay. It's really not. You have bad actors out there, even like schools, like trading schools. I'd hate to hear when a school gets in trouble or does something stupid, because it hurts all of us. You don't want that to happen. Okay. So, and in your industry, you want people to be successful. So let's talk about how the trading works. Just out of curiosity, how long you guys been trading for? Are you new? 1 year, 3 year, 5 years? How long you guys been trading? Just out of curiosity. Now, the next question I have to ask all of you, and you have to think about this for a second. How's your trading working? Are you making money? Are you profitable? Are you happy? Are you breaking even? Are you losing money? Are you underwater? Just be honest with yourself. Be honest. And I'll try to answer this question for a lot of you here. There are people that are good traders that never stop learning. Okay. There are, I would say there's some speakers in here listen to me all the time, and I like to listen to them too. Great traders always pick up something. But then there are people out there that are being honest with themselves. That's Chris. This is, I'm losing money, which is probably about 80% of you here. Okay. Maybe even 90%. Because some people are like, what do I need to learn? I know what I'm doing. All right. Well, listen, I could say that's one of the reasons why people are here. So let's get right into it and talk about what happened this week. The average trader is looking at a lot of earnings. Okay. There was so many earnings. It was earnings week that came out. I mean, you could see the list is like endless up there. I mean, Disney came out with earnings. They got crushed. Who else came out with earnings that got crushed? PayPal came out with earnings. They got crushed. GT came out with earnings today. Goodyear stock did pretty well. So there are a lot of good things that are out there. But the question is, why are they going up? Why are they going down? How'd you know that answer? Let's talk about some of the stocks we traded this week. NVAX. Okay. NVAX in one day ran from $7.70 to $11 in less than an hour. Look at Carvana this week. Not only did it run from that $6 price range to 11, but look at every day the stock was up, and up as an intraday. Another stock, NNOX, up 65%. This stock, you could see it, had a big pop going into the close, went from 1060 all the way to 1320, all the way to $17. Listen, some of you here are swing traders. Let me explain something to you. What makes a swing trade work, it's what happens over the course of the day. What makes an option work happens what will happen in a swing trade. If you're options trading and you're swing trading and can't be good as a day trader, chances are you're going to get yourself in trouble and blow up your account. And don't mind me. I'm sorry to be a little abrasive or, disrespectful. I don't want to, but I just seen too many people blow up their accounts because they trade options because somebody told them about this good thing about leverage, and swing trading. Well, I don't want to put the time into it, so I'll just swing trade it. Listen, if you're not going to put the time, go hire someone, let them trade the money for you, because chances are you'll end up getting yourself in deep crap when it comes to trading. So let me tell you how we scan our market. Let me talk about my crystal ball, and then I'll tell you exactly how we follow these orders. First of all, right here on the MetaStock platform, you got a big percentage gainers and losers. People, if you follow me on YouTube, we're live every morning at 9 a.m. Eastern time for 10 minutes in the morning, and we're live at 2:30 in the afternoon every single day going through the watch list to show you guys what stocks are moving. So if you haven't subscribed to our YouTube channel, look us up, Cybertrade University, or you can wait to the end. I'll give you that QR code, and you can come for the week. But definitely subscribe to our channel so you can get the alerts. The main thing what we try to do is this. There are 25,000 stocks that trade every day. Every day, and you're trying to find the one that's going to give you the least amount of risk with the high amount of reward. Now, there's about 5 to 10 of them. You're probably asking, well, how did you find that 5 or 10? All I do is I go through the big percentage gainers and losers, and what we teach our students in phase 1 is what is called tradable. Now, we teach something that I was trained 30 years ago, which is called the 3 T's: tradable, trend, and trap. The first T is to make sure that the stock has a good spread, good volatility, good volume, so you can get in and out of it. Some of you know what I'm talking about. You bought a stock and then you're like, oh my God, I'm making so much money. I'm losing so much money every minute. What the hell's going on? The stock is way volatile than you would even think. And unless someone taught you that, you probably shouldn't have been to trade in the first time. But finding those stocks, is just going through the MetaStock, big percentage gainers and losers. Now, before we go any further, I need to discuss one of my cardinal rules, okay, as a trader. Number 1, we never, ever, ever hold overnight positions. That is the biggest sucker bet ever. The reason why people hold overnight is because they don't want to take losses. Unless you're doing into design, you say, oh, I want to do a swing trade, okay? That's a different story. But most people like to day trade. They like the concept. And all of a sudden, they're like, oh, I can't take a loss. It's like this morning. What's getting crushed right now? Disney, right? Disney is trading at, got destroyed this morning, was at $97. Actually, I'm sorry. Earnings came out yesterday. It was at 101. It went all the way down. It's a pre-market down to 95. It crashed all the way down to 92. It's at the lows of the day. And some would be like, oh, but I like Disney. I bought it. I thought it was cheap. Listen, stocks going lower into the close, that's a very bad sign to go a lot lower tomorrow. If that doesn't, you don't think so? Look what happened to PayPal, okay? Anyway, and I was planning, I lost money on PayPal. I was trying to do a swing trade on it. I thought it hit bottom, and thank God I got out of it, because if I didn't, I would have lost probably an extra 5 points on that. But that's a different story. Next thing I want to talk about is this. Look at Carvana, for example, stock that we were trading. You can look on our Twitter page. You can look on our YouTube page. We found Carvana. We traded the stock, about beginning of May, about less than a week ago. Stock was right around that. What price was that around? Carvana. It was trading roughly around like $7. The stock ran to 13, up about 100%, right? But what happens is that if you didn't keep an eye on it and didn't know the slingshots that it was doing, the head fakes, and you held it overnight and think it was going to go higher and didn't follow the orders, boom, stock goes from 1370 down to 12 bucks like that. And you're like, what just happened? I just was doing great. Why did it reverse? Because you did not follow the orders. I'm going to show you how to do that. Now, instead of looking into the past, what we do at CyberTrade University and what we teach our traders, we teach you how to look into the future. Oops, sorry about that. We teach you how to look into the future. Now, my question to you is this. What makes a stock move in the first place? Can anybody answer that question? What makes a stock move? Think about this. What makes a stock move? Well, if you said supply and demand, okay, you are just getting partial credit, okay? Because let me tell you something. What drives orders are buyers and sellers, iceberg orders. So you need to know where those big orders are. That's the big thing. And the way you look at it, because what you see in the past is not always indicative of the future. The only way it's going to be indicative of the future, what happened in the past, is those orders that were in the past have to be in the future. How could you see that? You probably say right here, these three things. Level 2, level 3, and level 4. I'm going to talk about all four. I'm going to talk about all three of them. All right. Now, how do I know this? Because once again, I was a market maker, and this is what I was taught. And I start with window number 1. Let's start with level 2 quotes. Now, level 2 quotes, basically, let me get my crayons out here so I could draw us, have some fun. Okay. So right here, you have your buyers. Oh, I don't like that color. Got the wrong color. Red. There we go. All right. So these are your buyers. And these are your sellers. That's the bid. That's the ask, right? Oops. There you go. Ugh. So hard to write with a mouse. Now you have 3 columns, 1, 2, and 3. Now the first column is a 4-letter abbreviation of the brokerage firm. Second column is the price. Third column is the amount of shares they want to buy. Now you have exchanges, and you also have exchanges, and you have ECNs. Basically what's out there, or market makers. So basically what you're seeing is people buying it, people selling it. The problem with level 2, it's been outdated since 2000. This is obviously a waste of time. It's pretty, it moves, you see like blinking lights. Problem is, it's not giving you the full depth of market. It is only showing you the best buyer and the best seller. Now, let me change the slide here. And let's talk about NASDAQ Book Viewer. Okay. Now, for some of you, if you don't know me, that I'm also featured. I'm going to be on in 2 weeks. I've been featured at NASDAQ every month, teaching classes, and showcased on Traders Talk about NASDAQ Book Viewer. Now, listen, NASDAQ could do it themselves, but they come to us educators like me because they know that we really try to push and teach this stuff. Very important, because this is how the exchange really works. So here we have something I want to point out, and very carefully. Listen to me carefully, because this is where things are going to get a little bit more fun. Buyers equal support, sellers equal resistance. Now, you'll notice that there's a lot of buyers out there in the stock, and there's a lot of sellers out there. The question is, how do we know where is the big buyer and the big seller? Because that big buyer is going to make the support, and that big seller is going to make the resistance. So let me show what we got right here. Let's look at the stock AI, for example. All right, so got my little pointer here. You could see AI went from $20.32 and dropped all the way down at 10:40 in the morning and started reversing at 1916, and it went back to 1978. Now, how would you have known that the stock was going to stop there and go all the way up to 1970? Well, the way you have to look at it is this. What makes support? Buyers. look at the buy section on the NASDAQ book viewer. And by the way, this is not Fausto software. This is the exchange. There's a 29,000 share buyer right there in 1927. Now, you have to look at it. There are buyers at every single penny. But when you get to that specific price, that's where you're having almost 20 to 100 times more of the amount of shares looking to be bought than at any single price. What do you think happens there? Boom, the stock bounces. Okay. Now, I'll show you another example. We got a few of them here. What about a resistance? Let's look at Uber. Stock goes at 9 o'clock this morning, is it? Goes all the way up. There's a big run up from $36 to $38, okay, in an hour and a half, and then decided having a tough time breaking it. Hit it, came back down to 37.60. Hit 38.30, came back to 37.60. Why did it have a tough time getting past that price of $38, and change? Well, when you look over here on the right, you'll notice that on the sell side, you had a 92,000 share seller. Okay. Now, you got 2,000 share sellers, you got 100 share sellers. I'm sorry, but 92,000? Really? Is that even real? Oh, yeah, that's real. All right. And if you don't believe me, when you come into my trading room, I'll be happy to find one of those and we'll use your money and we'll see how fake it is if you don't believe it. Okay. So the thing is this: follow the money. That's all you have to do. That's how I was trained. Okay. Don't question it. Just understand that unless you can take that guy out, that stock is not going higher. Now, you can have support levels without buyers, and you can have resistance levels without sellers. Now, check out this example like Disney. All right. Now, Disney got crushed today. Okay. Earnings announcements from yesterday. And you can see Disney went from $95 down to $92. Okay. Now, the question is, we need to locate support, right? What do we need for the stock to go up, everyone? I'm going to ask you again. Very simple question. And once again, if you cannot answer this question, you should quit trading. What do we need for the stock to go up? Do we need a Fibonacci? Do we need a MACD? Do we need a Bollinger Band? No, you need buyers. So let's go to NASDAQ exchange and see what's going on. Okay, working our way down the buy side, we notice that we have a buyer right around here for 70,000 shares. There are 100 different orders around the entire world that make up the 70,000 at $92. Now let's think about this for a second. You got 50 shares, 70 shares, 5,000, 270. What do you think is going to happen when we get to 92? What could possibly happen? Because the stock is going down, right? Well, let's follow the money. Let's see what happens. Oh, what do you know? All day today, the stock would not go past 92. Okay? All day. Right? Let me see something here. Here's a day chart from yesterday, from the crash until now. Look what happened here from 10 o'clock on. This is live. All the way till now, never got past 92. Never got past it. I don't know. What do you think? What do you possibly think is going to happen? Until someone takes those 100 people out at 70,000, this stock is not going any lower. Let's go check out another one. Let's go check out IMGN, all right? IMGN, the stock, without even looking at a chart, okay? I'm looking for iceberg orders, and I noticed right away, I said, oh, look, and 62,000 share seller at $12. I don't see anywhere else there's 62,000 shares, but I sure damn see it right there on the offer side. That is, and there's 16 people that make up that 62,000. I don't know. Watching the chart, stock starting was at $6.02. Stock's up 11.60. It's up almost 100%. Okay. Can this stock go higher? I don't know. Yes, I do know. Okay. I mean, it could, but it's got to get past that 62,000 share seller. And you know what? If you didn't get out, look what happened. It ran from 12 down to 940. And you're sitting there and you're scratching your head and you'd be like, I don't understand. They didn't say that on TV. I don't understand. Benziga didn't say that. Oh, I don't understand. Bloomberg didn't say that. They came out great news, great earnings, whatever the news is. I don't know what the news was, but the point is this. No matter what anyone tells you, the only way things are going to go up and go down is by supply and demand. And you had a big supply out there, and what ends up happening? Boom, stock came back down. Let's look at another example. Let's look at Delta Airlines, okay? Delta, another one, got crushed, okay? Went from $34.60 all the way down to $33. Got destroyed, okay? Okay, a question from here from somebody. But what about those hidden orders? I believe there will not show up there. Size and quotes. You will only rely on the bar volume. This ain't bar volume. This is actually real volume that happened. And by the way, let me make a comment. That's a great question. If you feel there's any funny business going on, people hiding orders, dark pools, crap like that, do yourself a favor. Why are you even in this business, right? You're gonna still keep doing what you're doing. That's not working. I mean, how'd that work out for you? How'd that work out for you? Think about it. When's the last time someone taught you and said, "Oh, I can actually see the future"? Don't worry about hidden orders right now. That's the least of your problems. Okay, you are looking at. First of all, you can't hide orders. You could cancel orders. I don't know what you mean by hiding an order. No one can hide orders because it has to get executed by the exchange. It has to get confirmation from time and sales. So there is no hiding any orders. So whoever told you that is just, just giving you some smoke screens. Another important question came is how can we see the volume following level 3? Can we barely see level 2 even? Is there any way volume prop of BWPM? Fausto, elaborate on that. Nima, that's a great, listen, Nima, I'm going to show you that live in the market. Okay. The question that all of you here have to understand is this. Is there a way to follow the big money out there? And the question is, yes, there is. Okay. How do I know that? Because I was a market maker. That's what I did. That's how I was taught. Right. And I'm going to show all of you how that actually works. Okay. And we could see in the market. All you have to do right now is have some form of belief that there are buyers out here, 62,000 shares, and wondering, oh, is that why Delta bounced at 62 at that price at 33.14? And why didn't it, go lower at 33.40 or 34 or down to 32? It's because of these orders. So once again, if you don't believe me, there's only one way to prove it. You got to watch when I bring you to the live market and show you when I bring you there tomorrow. Let's look at another stock. Let's look at AMD. Okay, AMD, this is a pretty cool one. We just took this one today. Okay, AMD had a really good run, right? AMD is doing awesome. AMD's got 167,000 shares. There are 1,512 orders out there at $100. What do you think is going to happen when we get to 100? Now, let me just kind of bring this up really quick here. Can anybody, just out of curiosity, what do you think is going to happen? What do you think is going to happen when we get to $100? Oh, it's $100. $100. You got to be careful at $100, right? So you could see AMD right here had a big run, right? And you got resistance levels here around 102. But look what happened here. Stock had a run. It stopped right at 100 and came all the way back down to 96. Why is that? How is that possible? Oh, because it's the $100. That is that's part of the rule that you taught in that book, which teaches you about the stars. I don't believe that crap. Okay, I'm telling you exactly what it is. It's about that big seller out there. Okay, it's all about that big seller out there, because if you didn't get out, guess what? The stock came right back down. Simple as that. By the way, is anybody getting confused? Did I lose anybody? I mean, think about that. Is NASDAQ View available to the public? Yes, it is, Earl. And not only is it available to the public, it costs $15. And granted, you're not going to see all the volume in the market, but the NASDAQ does control about 50% of the volume of every single stock that's trading. Okay? But think about it, $15. Why would you not pay it for that, right? So I came up with this word called iceberg orders. These big block orders are iceberg orders. I came up with this word after watching the movie Titanic. Sad story. I assume everybody knows about it, you know, but it's not what's on top of the water. It's what's at the bottom of the water. And we all know what happened to Titanic, and you don't want to be one of them. So we have to look for those live, those big block orders. Now, remember, these are orders that are out there in the market, okay? Now, where could you get Book Viewer? Like I just mentioned earlier, once again, you can go right here, the datastore.nasdaq, and buy it from them. I mean, you know, listen, if you use the MetaStock platform, which gives you all the bells and whistles, but I don't work for NASDAQ, okay? I don't get paid by NASDAQ. I don't do anything. I am just here to kind of educate all of you, because that's what Jeff has me here for, is because, you know, if you want to understand the concept of day trading and swing trading, which technically I'm a day trader, or actually, if you read the old books, the Souls Bandits, that's what I basically do. And they want you to learn how to use the platform. Now, like I said, it's peanuts. If you can't listen, if you can't afford $15, you should quit trading. I mean, like, seriously, to see where 50% of the volume is on a stock, how would you not want that? You know. Now, the next question people ask is, can I buy puts and calls instead? How does that work with options? Oh my God, this works amazing with options. Think about this: when AI hit a support level, you could buy it in the money. Calls expected to bounce. I mean, people day trade options too, if you really wanted to. But think about it. If you had a game, I know we have a lot of options traders here too. You want to be a good options trader? I'm telling you right now, you damn well better learn how to trade a stock first, because it's the movement of the stock that makes an option move. And don't tell me, oh, you know, the leverage, forget about it. You're wasting your time. You have to learn how to do it. Adrian, regarding about the dark pools, okay, listen, I know what dark pools are, okay? I basically used to do them myself, all right? Dark pools make up 5% of the volume. Do you really care about the 5%, or you care about the 50%, okay? I mean, think about this for a second. 50% versus 5%, all right? Do you even know what a dark pool is? It's basically when one broker trades within their own house and does the trades in between each other. It's not, you know, big deal. All right. I'd rather do this more than anything. And trust me, I used to teach dark pools, and I'm basically a king of dark pools. And it's got a great story, but what you really want to follow is the high frequency trades, the algorithms. That's what we're looking at right now. So that's because if you didn't, and you were in Uber and you were worried about your dark pool instead of this 92,000 share seller and wondering why, you know, and been holding the stock and for the past hour, why it keeps going down, that's the reason why. All right. Now, let me talk about some other things regarding about how it can affect option premiums. Okay. If you've seen level 3, wait till you see level 4 now. Now, some people didn't even know level 4 even exists. Well, it just came out less than about a year or two ago. Envision that whatever you learn, because I know a lot of you, one of you just mentioned here earlier that said, you know, it's kind of hard to follow the level 2 because it moves so quickly. Well, how about if I told you we could put that on a heat map? How about if I told you that we could also aggregate the other exchanges, not just NASDAQ, but other ECNs out there, okay? Well, that's what you could do. How about if I told you that we could see how long he's been out there and if he's getting executed? So let's look at this. Let's look at Tesla, for example. Tesla, you see this little red line right here? There's this buyer out here for 74,000 shares. Okay, now the stock is trading at 168.70, and you're about 70 cents away from the next support level. And this person's been out there for a little while. You could not only looking at the right would be more level 2, but on the left will be more of the level 4 version of it. Now look what ended up happening. Stock bounces off 168 support where that big buyer was, right? guess what? That buyer got executed. And not only that buyer got executed, but it came right back down to it and went lower. And how much lower could it go? Where the next biggest buyer was at 167. So you can see right here that not only you can see these bulls that tell you that the time in sales and the volume bars, but you could also see, are they getting executed? Who's executing it? And where all those support and resistance levels are. Now we're going to get into something that's basically called breakouts. You know, so a breakout is the stock takes a seller out and goes higher. And that's basically what you have over here, you know, but it's not a breakout, it's a breakdown. So how does the stock break down? Hit the buyer, execute him, and went a lot lower. Now, let's look at Carvana, for example. So look, we've been trading stock the last couple of days, had some good iceberg orders. Carvana has a big buyer right here for about 41,000 shares at 1180. Okay. What does it do? It starts around 1208, gets back down to 1180, finds that support level right there. Boom, goes right up to 1230. And this guy is still out there. He did not leave. And you could see how when it got close to him, it got darker. What does that mean? That means he probably didn't have the 35,000. He probably had maybe 25,000. And then when he saw it got close to him, he says, oh, I'll buy more. And that number changed. That's how that happens. Now let's look at U. This stock was a pretty cool stock. We traded this stock too today. U went from $30, and this is a breakout. Hit the seller at 31, took him out. Hit the seller at 31.50, took him out. Going up to another big seller at 28,000 at 32. Right? What did it do when it hit 32? Took him out. Another big seller came out, took him out. Another big seller came out, took him out. See, this is called a ladder effect, okay? So when you see resistance levels and you're like, oh, resistance levels at 32, and you're like, oh, how did it break it? Well, that seller was out there and somebody bought it from him. It's, you know, and I know you're probably not buying 30,000 shares of a $30 stock, but somebody is. And you'd be like, wow, somebody really bought that? He must really think that stock's going higher. Why else would he buy it, right? That's called a breakout. How does a breakout happen? By seeing if those orders are getting executed. Let's look at this one, GT, another one. Earnings came out. Okay, GT started this morning, was at 14.38. Big seller pops up at 15, right? What happens when it hits 15? Boom. Seller didn't get out. Stock drops all the way down to $14 in a matter of, I don't know, less than 10 minutes. You see, not knowing that game plan out there will give you that sense of direction where the stock is going. That's what makes trading so much fun. Now, I am going to show you all of this live in the market. Listen, I'm not a big fan of showing PowerPoints because anyone can show you a nice example and anyone could Photoshop and anybody could, like, you know, it's easy, especially on a standstill. But if you want to see this live, I'm going to invite all of you to come see this live with me. And I'm going to give you 1 week access to it. Now, listen, you can't be self-taught, right? And please, like this, before I start, I had a disclaimer. Don't think whatever I taught you now, you go, oh, Fausto told me his secrets. I'm going to go to NASDAQ. I'm going to buy it. I'm going to change my MetaStock with the top 20 list and get my screens loaded. Listen, you need someone to teach you how to play the game. Okay, I'm not asking for a lot, but I'm not asking for work for free. Okay, you wouldn't want me work for free because then they'll all be worth. But the thing is this, I want to invite all of you to come and see what it's like and see why, you know, Cyber Trading University is one of, you know, been well known dealing with some of the biggest brokerage firms in the industry. Now, there's no better time to learn than now. This is our trading room. I started the first trading room when I first started teaching, and this is how I got into it. Basically, you see people got trading rooms all over the place. Where do you think they learned it from? Which is flattering, which is great. That means we're doing something right. But when I was a trader, I had to go work in an office, and I had to work in a desk and trade someone else's money. I became very good at it, and I wanted to go on my own, which a lot of you are doing right now. But I couldn't do it back then. The only way I could do it is I had to open up a brokerage firm, which I did not want to do. So I came up with this idea to start webinars. So I was actually one of the first people who pioneered webinar technology. But by doing that, I was around when the internet took off back in '95, and I said, well, you know what? How could I get people to trade, you know, in separate locations, not to come to New York? So we started a professional trading room online, and I want to invite all of you to come and see it. It's one of the top ones in the industry. We use some of the best technology in the world, and you'll see how we interact, how we share, how we talk, audio broadcast, all that stuff. Now, this is all I'm asking for. Okay, has everybody got their phone? $9. That's all I'm asking. Now, you're probably falling off your chair and be like, wait a minute, what's the catch? I'll tell you what the catch is. The catch is I don't know who you are. Okay, we got hundreds of people that are logged into this MetaStock platform. I'm not going to let everyone just come in there if I don't know who you are, because I don't know if you're a scammer or someone stealing our ideas, or, you know, heck, I don't know. Or maybe you really want to learn. But I'm asking for $9. And if you want, at the end of the week, I'll give you $9 back. But let me tell you what you're going to get for $9. All right. I'm going to give you 1 week access in my professional trading room. Okay. You're going to see all this stuff. You're going to get full access to my instructors, including myself. We're going to talk from 9:45 to 5 o'clock in the afternoon for 1 week straight. You are also going to get 3 workshops. We're going to give you workshops how to set up your platform, how to trade on level 3, level 4, how to find stocks in the morning, all that good stuff. Once again, call me generous. I'm just looking to do favors to the MetaStock employees, traders, have accounts with, because I know that if I could teach you to be a good trader, you're going to love the MetaStock platform. You're going to know exactly how it works. And you're gonna be very profitable, hopefully, if you follow the rules. I'm also gonna throw in 100 hours of our Traders Talk library, where we actually go out there once a week with. We do this live in the trading room. We'll take one of the students and we'll look at their journals and we'll basically review it and tell you what you did right and wrong. So we'll give you access to that, and I'll also give you my book. Okay, listen, pay $45. Pay me my 90% commission on. I'll be happy to do it. I'd rather you pay $9. I'll give it to you for free. And I know everyone likes to read. Everybody has a book. Well, not everybody. I wasn't a fan of doing a book, I'll be honest with you. But Wiley came up to me and says, Fausto, we need a day trading book. You're the only guy that we know that we want to do it. So I kind of did it. And I'm actually happy I did. It took me a long time, but I'm going to give it to you for free. I don't need it. Okay. I'd rather you make money on the 47 than dish it out. That's what you're going to get. That's it. I'm done. Okay. I'm going to show you how to find these stocks. I'm going to show you, you're going to be interacting with people around the world. You're going to have full access to our staff, everything for $9 stinking. And as a bonus, I'm going to do one more bonus. The first 20 people register, I'll do a private coaching class with you. Because the way I feel is this: you're going to need someone that's going to tell you if you know what you're doing. I don't want to make some of you part of Cybertrade University if you're not a good fit. Okay, you wouldn't want to go to the doctor and don't feel comfortable without getting surgery. At least talking to him first, right? Listen, trading takes a lot of work. It's not easy, but let me tell you, the expectations are just so exciting and so much fun. Everybody wants to trade, but no one would say take the time to learn it. The reason why MetaStock has these great events is because they know that if someone teaches you and you know what you're doing, you'll be a client theirs forever, And listen, people like myself would not put our name on the line and come here if we didn't think MetaStock was a great platform, okay? They're here for 30 years because they got something great that's there. And they have us here because they know that if we teach you how to use it properly, you'll be very profitable, and then you could just start your own home living channel, or maybe get stuck outside, get a suntan, and build your own garden. People are like, how do you have the time to do that? Trading gives you the time. So go out there, scan it, $9, money back guarantee. I'm not asking for a lot. I'm not asking for a little. I'm not making money on it. But what I am going to make is hopefully a good relationship, a good trader, and hopefully make you part of my team. And that's what it's all about. How do we get level 4, Eric? Great question. $9, scan it. I'll show you where to get it. Okay? Because I'd rather you not buy it you'll end up making more harm than good. That's how, you know, at the end of the day, let me teach you, go through the workshops, do it the right way. You know, like there's so many things I want to buy in the industry. And everybody's like, well, could you sit there and learn it first? They're like, just take a small class. I mean, actually be able to talk to somebody on the phone, you know, and they could coach you through it. Wouldn't that be awesome? You know what I mean? It's not going out there spending thousands. I'm talking 9. All right. All right. Any last minute questions? I know I'm out of time here. So, man, time flies. I love it. It was amazing. I didn't even know I was talking that long. I didn't even stop and get a drink.
Is that a Red Bull or something else you're drinking?
Oh, no. Pellegrino. Come on.
Okay.
Come on. No, not at all. I need a heart attack.
yeah, that's just bad for your stomach. Anyway.
But yeah,
thanks for questions.
I mean, your audience is awesome. I think this is like the first time I got so many really intelligent, more interactive questions. You had a really good audience here asking some great questions, which is
they're great. Yeah. But I mean, they also had a great presenter.
So, all right. Well, anyway, Jeff, thanks for having me again. I look forward to seeing.
We put those in the link, ctu.co/trial. It's on YouTube. You can scan it. Go try it out. It's $9.
I like the scanning part of it. It's just so cool how it works. You know, you just literally just put, you put it there and it brings you right to it. The QR codes are awesome, especially you don't get off your screen or whatever it is and you have to open up another window. Some people have like one monitor and so on. But yeah, that's awesome. But
do you see the last question?
What's
how
that?
Much level 4? Level 3 was $15, right? Muzu,
yeah, NASDAQ sells it at 15. And you know what? You don't have to even get it from NASDAQ. A lot of the brokerage firms offer it, on their platform. But I always tell everyone, buy through NASDAQ first just to see it because it's that you're going right to the source. A lot of these brokerage firms you talk to, Jeff, you're talking to these 18-year-old, 20-year-old kids. They don't know what they're talking about. They're like, oh, yeah, let me look into it. Listen, I'm telling you how it works, and that's how it is. Level 4 is a lot more expensive, but forget about level 4 right now. Focus on the numbers aspect of it, and then you'll know why you need the other one. But actually, you don't have to spend anything. Just spend the $9. We'll call it a day. Okay. Where can you get access to the recording, George? If someone's asking.
Oh, youtube.com/MetaStock. Like and subscribe.
There you go.
Fausto, it's a great session, says Kishore.
It was great, Jeff. It was great having you. I look forward to come to the next one. And everyone, good luck and happy trading. Hope you enjoyed all the presenters. There's some great content. Buy a little bit of something from everybody, and try everything from everyone out there, and then go out there and trade. Because if you think education's expensive, try ignorance. I always tell everybody. But with that said, thanks for watching me. I'll see you guys later.
Thanks, Fausto. All right, listen. Very good. We love having Fausto in. He does such a good job. So that's ctu.co/trial. And then let's go ahead and kind of get me the presentation again. Show the screen here. And oh wait, never mind. Daniel, don't worry about turning on your camera just yet. You can if you want to, but great session. Appreciate that, Fausto. Just say MetaStock when you fill it out. If there's a where did you hear about us, say the great conference, whatever. Both. You enjoy it. Let me know how you like it. It's a great service. So before I say one more thing, I want to say, give me a number. Okay, so what I need now, I've just refreshed the list. So if you've registered from YouTube and you're going to be on the list recently, what I need you guys to type in the next winner. So next winner can be any number between 1 and 11,285. You type in the number. I'm going to talk about a sponsor, and then I'll tell you who the winner is and what they get. So a big thank you to Stocks and Commodities for sponsoring the event, CMT and AAII. And I've talked a lot about them throughout the day today. I'm going to just kind of give a little bit of a blurb for Stocks and Commodities. I remember a decade ago, I called Stocks and Commodities and we were talking, and we've known the Stocks and Commodities for a really long time. But I said, I have an idea for this event that we're going to do. It's going to be online. We're going to have like 8 speakers. It's going to run all day. And that was, we did our first Online Traders Summit 10 years ago. And I was like, here's what we want you to sponsor it. I think it'll be a great way to kind of provide content and really education to traders. And that was really the whole goal all along. And that's Stocks and Commodities' main mission. They want to provide information about looking at stocks using technical analysis to traders. And they've been on board the whole time. They're so good to work with. They've provided, they've been subscribing, or they've been publishing since 1982. I've been a subscriber of Stocks and Commodities for the whole 26 years I've been here. They've always sent us magazines. 1.3 million subscribers, 17,000 articles that they've done over the years. Anyway, thank you to Stocks and Commodities. If you do any subscription to MetaStock, they're going to give you a 5-month free subscription. We don't pay for it. They just provide it to you. And if you spend $300 or more at the conference, at any of the things that we're doing here, they're going to give you a 2-year subscription. So a big, huge thanks to Stocks and Commodities. They've been a great supporter of us. So there you go. In terms of the recording, George, we are streaming the whole event to youtube.com/metastock. While you're at youtube.com/metastock, you should subscribe, because we do at least somewhat decent and sometimes great webinars every week. We do market recaps. We do conferences like this. We do summits. We do a lot of really good market content. And so if you subscribe, you'll get alerted to that every time we go live. And plus, we'll appreciate it. It helps us a lot. If you comment, you like, you come in, you talk, it really, really does help us with the algorithm, and it helps us get the word out. So we do appreciate that. So, of course, we're MetaStock. We help you scan markets, test ideas, forecast. We've been rated #1 in our price category for 30 years in a row. And what we're doing here, pricing for MetaStock DC, if you're here in the US, is $69. If you're overseas, it's $59. But if you pay for a month of MetaStock DC or real time, we're going to give you a second. I almost forgot to give a prize away, a second and a third month for free. So if you pay for that first month, we'll give you the second, the third month for free. That means for $23 per month, you can try it for 3 months. And then after that, if you like it, keep subscribing to it. I just saw a survey earlier. A lot of our customers have been with us for 10 years. It's amazing how much longevity there is. I was just looking at the survey. And for all of you that have been with MetaStock for a decade or more, thank you. I appreciate that. Find out why. Join us. metastock.com/conf promo 800-882-3040. So Dawn is going to help us out with the number for the winning prize. Here's what we're going to give away. We're going to give away our MetaStock real time for 3 months. That's a $100 value. We're going to, that's actually a $300 value for 3 months. We're going to give you a real-time data to go with it, which is a $165 value. That's our Zenith platform. Institutional quality data feed, very, I've had people compare it to Bloomberg. Super good. If you're interested in news, fundamentals, it's going to be included as part of that. Earlier today, we had Peter Dalal come in, and he talked about his Magic Trader. I'm going to throw in 3 months of Magic Trader with that. In addition, there's a website, Kevin Nelson is going to come in and talk about his Learn MetaStock website. It's usually $99 a month. I'm going to throw in 3 months of that. And also an elite service room, which is normally $299 a month. I'm going to throw 3 months of that in. So this is a pretty valuable price. I didn't do all the math on that, but that's a pretty big value. And the winner is going to be, thanks to Dawn, number 7777. So let me go ahead and figure out who that is real quick. Oh, I just need to put it up here. Hold on. That will be Wes M. Wes M. also with a Hotmail account and in the US. So Wes, I'm going to reach out to you probably next week. I'm a little bit tied up to the rest of this week, but I'll reach out to you and get you the information that we need from you to kind of get you set up for that prize. If you want an extended trial similar to that, give us a call. metastock.com/conf promo 800-882-3040 or metastock.com/sales chat. So our next presenter is Dan Sugar, and it is his first MetaStock event. And he's been teaching for a number of years. He used to work for the Online Trading Academy. This is the very first time he's going to speak here at a MetaStock event. So I'm really interested. Oh, here, I've got a picture of him too. All right. And there, you can see him in both places. Let's go ahead and touch your mic real quick. Let's make sure we can hear you.
Oh, there you go. Good afternoon, Jeff and everybody.
Hey. You're sounding great. Audio is nice and clear. Let me go ahead and make you the presenter.
All right.
I know we are starting about 10 minutes late. We've been 10 minutes late all day. It's just you're the last speaker. Feel free to take some extra time if you need to. Don't worry about stopping at 4 o'clock. If you just do your thing. So
sounds fantastic, Jeff. Thank you so much.
For me, I can hear you, I can see it, and I'm going to get out of your way. Your turn.
Am I sharing the screen okay?
Yeah, I can see it. It says trend lines and patterns.
Great, fantastic. Here's a good spot for me to share my IT technology joke. I'm used to Zoom a lot, so I haven't done GoToWebinar too many times, but I'm an analog guy trying to survive in a digital world. I wouldn't know a mosquito bite from a gigabyte or a megabyte, or I wouldn't know spyware from malware from my underwear boxers. So anyway, that's my technology joke. Good afternoon, everybody. Welcome. It's great to be here. As Jeff mentioned, I'm a rookie with the MetaStock conference. I've done a couple other ones throughout the years, but I really enjoy doing these, folks. Great way to share some information, share some knowledge. I've had the benefit of some really good mentors and coaches in my long career. So I really enjoy doing these. And again, trading can be very isolating. I'm in my home office, and it's great to get out there in cyberspace and, again, get with some traders and people that are soaking up some knowledge. MetaStock's a fantastic platform, and the online conference is a great way to learn. How many people have watched 4 or 5 so far? If I'm your 5th or 6th one today, get up, stretch your legs, do some calisthenics. I just had some green tea and honey and some trail mix, so I'm ready to go. So we'll dive right in and rock and roll. One quick little canine pooch disclaimer. I do have 2 Bernedoodles, 85-pounder, that's 3 bear, and Yogi is going to be 4 June 2nd. And they like to bark once in a while. So my home office has a couple windows, and then if they see a leggy golden retriever, leggy Labrador walking by, they might, or an Amazon drop-off, they might start barking. I'll mute my mic for 30 seconds, let them get it out of their system, and then we'll carry on. But sometimes they're very good and tired, and they don't bark at all. So anyway, all right. So there's my website. We're going to focus. Well, before I say that, let me ask you a question out there. Some of you have been around the industry and trading and investing for many, many years. Some of you might be relatively new, but if you've read some good books or you've talked to other traders or you've been on some other webinars, what's like the number one thing you read about, the number one strategy or the number one thing you hear mostly as far as, besides buy low, sell high? What else have you heard about, like, as far as trading? And, you can type it in the chat if you'd like. If not, I'll be happy to share it with you. But basically, you've probably heard, trade with the trend, right? Not against it. Trade with the trend. The trend is your friend. Somebody was quoted as saying the trend is your friend until the bend at the end, right? And the bend at the end is the trend line break, which is my URL that Jeffrey just put in there for me. But you want to trade with the trend. And sometimes markets are trading in a trading range. Right now, the S&P's been about 100-point range in the futures, maybe 120 for a couple of weeks now. But you want to discern, are we in an uptrend? Are we having higher highs and higher lows? Are we in a downtrend? Definition is lower highs and lower lows. Or are we in a trading range? Because you're going to approach and attack and trade each one differently. And, it's been around for a long time. We're going to go over a little bit of history. I got about 35 slides. We're going to knock out some history and strategy and some really great transformational information, not just informational, but it can be transformational if you apply it, definitely. And I would definitely take some notes, some screenshots, watch again if you need to. We'll go at a good pace, but you want to be a trend follower. First and foremost, I'm not here to shame Fibonacci or moving averages or RSI or stochastics. MetaStock and a lot of other platforms come with a myriad of indicators. But I think first and foremost, you got to understand the trend. You got to be able to discern the trend on the higher time frame. I call it the macro trend. And then most of your losing trades, you're probably trading against the macro trend. There's a couple other ones you might be doing, but the majority of your losses will be probably going against the macro higher time frame trend, right? Makes sense? So the more you can trade with the trend, the more you'll be able to get into some low risk, above average reward, and above average probability opportunities, right? And trends can be a decade or 12, 10, 15 years or so, just like, the stock market, it bottomed March of 09, and then we peaked in, basically January of 2022. So 13-year uptrend. Now, is it straight up? Of course not. That would make investing and trading pretty easy, but there's going to be some dips, 5%, 10%, 12%, 18%. But as long as you're buying dips during an uptrend at good support or demand zones or pullbacks to the trend line itself, you're going to do pretty well. And the oldest adage is cut your losses, let your winners run. Risk management is tantamount. If there's anybody out there that has been in through any of my classes or other webinars, I always like to greet my email database and my people on the webinar and my classes. Good afternoon, risk managers, because first and foremost, that's your main job, risk management. If you don't manage risk, you're not going to have any risk to manage. So if anybody that's familiar with my teaching and webinars and classes has heard that before. But all right, let's dive right in, folks. If you're from Chicago, you know the name of my LLC. A lot of people ask me why I named it that, but Chicago Board of Trade is on LaSalle at Jackson, and the Chicago Merc is at Wacker Drive. So I grew up in Lincolnwood, just outside of Chicago, the first northern suburb, and LW, LaSalle, Wacker, Lincolnwood, and trading's all about winners and losers and profits and losses. So that's why I did it. So there's our quick little disclaimer to keep the attorneys happy and make sure we understand that you shouldn't trade with risk capital that you can't afford to lose. If you don't put your stops in, the risk can be very, very substantial without a stop. The last thing that the last presenter, Fausto, mentioned, if you think education is expensive, try getting an education from, New York Stock Exchange University or NASDAQ State, right? Or, Chicago Merc Futures and Board of Trade. So you got to manage that risk and put your time in and get some knowledge. Absolutely. My ethos and my tagline has been integrity, transparency, and performance since I started educating and mentoring and coaching. So why you should listen to me? Just a quick little introduction. I'm actually a third-generation Chicago floor trader. My grandfather was at the Chicago Butter and Egg Board. Before there was Japanese yen and S&P and bonds and NASDAQ to trade, there was butter and eggs. And my grandfather was a butter and egg trader and broker at the Chicago Butter and Egg Board. Later on, it became the Chicago Merc. I'm the youngest of four, and my dad's the youngest of five. So I never met my grandfather on my dad's side. But I heard a lot of stories, actually. And then my father went to like 2 years of University of Illinois after the Navy. And then he started at the Chicago Board of Trade in January of 1950 and spent 35 years there. And so he got me my first job with E.F. Hutton. How many people remember E.F. Hutton? Extra credit if you remember their, what was their advertising slogan? Anybody? First three correct answers get a cup of good Starbucks in the Sugar Cyber Cafe. But E.F. Hutton was when E.F. Hutton talks, people listen. So I was a runner in 1980 for E.F. Hutton on the CBOE. So anyway, been around the industry a long time, and I took that 23andMe test, and my DNA came up XYT. So trading's in my blood, right? There's a quick little shot of me in the early 1980s learning how to trade bonds outside the pit at the Mid-Am as a runner. Anybody that owned a mortgage back in 1980, remember what your rate was? 13.5, 14, 15% mortgage when bonds were at 60 and rates, 30-year bond rates were, 16, 17%. So that was when I was 18 in the summer of 1980, learning how to scalp and trade bonds outside the Mid-Am pit. Those are some of my cards, but a little bit of history. But yeah, bonds are at 120 right now. or so, and rates are at, the short. We have an inverted yield curve, which is pretty bearish. The rates on short-term T-bills and T-notes are higher than 30-year bonds, which doesn't happen that often, but we're there now. So here's a little mentoring slide. I like this one with if at first you don't succeed, try doing what your instructor told you to do the first time, right? Listen to your instructor. Mentoring helps you with your goals, coaching, guidance, training, motivation, knowledge, keeps you on track, support, and success. So find a good mentor. Here's a couple quick little jokes. Again, those of you that have been, this is your 4th or 5th or 6th one today, or your 15th or 20th since Monday. Fantastic. That's great. But I like this guy. He's in a courtroom about to be tried. And he looks back at his attorney, and the attorney says, "Don't worry, I've watched a lot of Law and Order. I got this. You're in good hands," right? And then here's another one I love. Just finished a YouTube video on 747s. We'll be taking off shortly. Buckle your seatbelt. And the last one, of course, I can remove your blood clot. I've got Wikipedia. So anyway, quick little humor for lighting things up. Here's my book. I wrote a book about a year and a half or so ago. Trends, trend following, and trend lines. Goes over the history and specific strategies and so forth, and I'll put that link in the chat later if anybody's interested. So we're here to how to identify the macro trend, and I like to break trends down into 2 time frames. Basically, the macro trend, months and years, and the micro trend might be a couple days to a week. So you got the macro trend, higher time frame, big picture, and the micro trend, shorter term. So you might have the macro trend down and the micro trend up for a couple of days, short covering rally, but the macro trend is down, the micro trend is up. You might have them both down, the micro trend down and the macro trend down, and that's a very bearish, weak market. Other times you might have the macro trend higher, bullish, and then the shorter term one, micro trend down, or the macro trend bullish, and currently the micro trend is also bullish. So you want to be, you want to know your playing field. What's the underlying level of your playing field that whether it's, Apple or QQQs or crude oil or cryptocurrency or the euro currency. No matter what your market, you need to know what's going on with the trend. The macro trend, higher time frame. If you've been around investing and trading for a while, you've heard of John Murphy. He started stockcharts.com, and he's been he wrote a couple books in the 70s and 80s, technical analysis of the financial markets and intermarket technical analysis. He's one of the godfathers or so of technical analysis. So here's one of his quotes. "The trend line is perhaps the simplest and most valuable tool available to the chartist or trader," right? Simplest and valuable, 2 key things. And then the violation of a trend line is often the best warning of a change in trend. Hashtag the Benedict or trend line break, right? And then, so we're going to go through the slides, folks, and then in the last 10, 15 minutes, I'll go over some charts on MetaStock with, of course, trend lines, right? So just to manage your expectations, etc. But those 2 quotes are from John Murphy, one of the fathers of technical analysis. I hope your charts don't look like that on MetaStock or any other platform you may be using, but that's a hodgepodge, and where do you buy or sell, and way too much stuff going on, folks. I think a lot of traders and investors make trading and investing more complicated than it really needs to be, right? Trading should not be that complicated with, moving averages, Fibonacci, Andrews pitchforks, and whatever else they got on, trend lines, etc. So I like to keep things clean on my charts, some supply demand zones, old highs and lows, and trend lines. Basically, it's all I have. So 5 things you must know to be a successful active investor or trader is, number 1, you need a proven strategy with an edge. You back test it, it works, it generates a lot of low risk, above average reward, above average probability opportunities, and you have to have the discipline to follow it, right? What good is having a strategy with an edge if you don't have the self-control and discipline to follow it, which is extremely important. And those of you that have been around investing and trading know exactly what I'm talking about. If you are new, you have to trust me on that one. But you need a proven strategy with an edge and the discipline to follow it, whether that's Bollinger Bands or order flow or volume profile or stochastics or looking for divergence or reading the tape, price action only, or trend following and trend lines. Number 2, risk management. Again, if you don't manage risk, you're not going to have the risk to manage. Small losing trades are okay. It's the cost of doing business, right? If you have a stigma over losses, you got to get over it right now. And I've been telling my students for a long, long time, think of it as your trading business. Inside your trading business, you have revenues and expenses. Your revenues are your profits. Your expenses are going to be your small losses, right? Every business has it. You got to stay in business, you got to keep your expenses down, right? Trading is no different. Proper position sizing, right? Don't trade too large. Even if you have a $250,000 IRA or individual account that you're trading with, don't trade 10,000 Apple or 15 crude oil or 10 or 15 E-mini S&Ps, not the micros, the regular bigger ones. Trade small. And we have calculations: 1%, 1.5%, 2% of your account. So if you got a $25,000 account and you're willing to risk 1% per trade, that's $250. 1.5 would be $375, etc. That's per trade. You might have 3 or 4 trades on at once, but if all 4 get stopped out, you're still in the game, right? So position size, like the smart money and the big boys, absolutely. Number 4, understanding of probabilities and the risk-reward relationship. I know there's people out there that like to risk 2 to make 1, and that's just like, for me, that's not my jam, and I would never teach that. But I've heard people on a 5-minute chart, you have to be right a lot of times to risk 2x of your potential reward. So I'm all about 3 to 1, 4 to 1, 7 to 1, 8 to 1. Let those winners run with the trend lines, trend line breaks, and the patterns. You will get some 5, 6, 7, 8 to 1 trades out there, and I'll show you some examples. So risk reward and understanding of probabilities. If you have a knowledge of probability theory, or you're a good 7-card poker player or a good blackjack player, that's not going to hurt you in trading. And number 5 is sound psychology and solid mindset. Your edge starts in your head, right? Once you know your platform, you know your brokerage firm, you know how to place orders, you got your strategy down, right? It's all about what's between the ears. Fear and greed is the downfall of many, many active investors and traders. So here's a little Venn diagram for a good little, to drive home that point. You have to have a method and a strategy with an edge. You got to have a proper mindset, psychology, and of course, you got to have a plan for risk management, a stop on every trade. If this trade goes against me, where am I getting out? Where am I bailing on this trade if it goes against me? Super important. You have to understand the math too, folks. Again, some of you that have been around the game for a while, active investing successfully, short-term trading successfully, fantastic. Somewhere along the line, you learn the math. But if you lose, 20% of your account, you got a $1,000 account, you're down $2,000 in, 6 weeks or a month or 8 weeks. You got to make 25% back just to get back to break even. You lose 40% of your account, you got to make 2/3, 66.66. And if you lose half your account in a quarter or a month or whatever, for some bad trading and some poor risk management, you got to double your account just to get back to break even. So understanding the math is very, very important. And one more thing also is, the upside of the math is you could be wrong a lot, folks. You can make 100 trades in a week or a month or a quarter, depending on your level of activity. You can make 1,000 trades in a year. You can lose on 2/3 of those. You do understand that, right? You can be wrong 65% of the time and make money if you cut your losses and the losses. And some of those 35% wins, you got to let your winners run, right? Not 1-to-1 or 2-to-1, but you got to have a couple 3-to-1, 4-to-1, 5-to-1s, and your strategy has to allow you to do that. You have to know your strategy well enough that's going to produce a couple 4, 5, 6, 7-to-1 risk reward trades, meaning if you risk 300, you make 1,800. That would be a 6-to-1 risk reward, of course. So that's the good news. But so many people get focused on the trade that they're in, gotta be a winner, right? That they lose sight of the big picture. It's just the trade you're in that day or that week. You got your stop in, you got your target, you got your plan, let it play out, right? But some people get too overly emotional with the fear and the greed, and it messes up their process. So that's the math. One more thing about the math. I saw this recently and I grabbed this little slide, but just to manage your expectations again. I mean, if you can knock out $100 a day on average, some days you're gonna have a small loss, some days you're gonna make 350. But over the week, over the month, if you can average about $100 a day over a year, it's a nice little side hustle while you're learning, right? A lot of people want to get rich right away, and that's the kiss of death. That's not going to happen. It's a grind. Be a blue collar trader. Be a bricklayer. It takes time to get there, and you want to be you want to get to that unconsciously. Well, you want to get to unconscious competence, right? You just know it, but a lot of you folks right now are unconsciously incompetent. You don't know what you don't know. Then you go up to consciously incompetent, etc. But down the road, I mean, trading can be a very lucrative A, side hustle, or B, full-time gig, full-time position, right? So we're going to understand how powerful macro long-term trends are. Some of the things you're going to learn today, how powerful the macro long-term trends can be. Currencies can trend for a decade, or 5, 7, 8 years. Stock market, we just talked about 13 years. The other thing I wanted to mention at the beginning, which I just thought of, was the second thing is what's the number one driver of the stock market? What would you say is the number one driver of the stock market? What do you think? Type in your answers, folks. What do you think is the number one driver of equities and price and trends? Anybody have any thoughts on that? Can I see the chat? Or I think so, but do I have to scroll down?
Hey, Daniel, if you extend questions, you'll be able to see the chat.
If I extend questions, there we go.
Yeah.
Oh, there we go. I think so. There we go. Okay. So I can see your answers, I guess, if you type them in. But anybody have any thoughts? What's the number one driver of the stock market? Anybody have that? And again, for the spirit of not wasting too much time, but whale buying. I like that. The big boys. Side G, the big boys. For me, it's actually the Fed policy, FOMC, and interest rates. Weak, low rates drive, easy money, dovish Fed policy, you get bull markets, hawkish Fed policy, you get bear markets. I'm sure Jeffrey remembers Marty Zweig back on Wall Street Week with Lou Rukeyser back in the day. I used to watch that with my dad on WTTW in Chicago, but on Friday night with the Elves. But Marty Zweig used to say, don't fight the Fed. I'm sure most of you have heard that. Don't fight the Fed. When they're lowering rates, and they telegraph, we're lowering rates, we want to stimulate the economy and have cheap loans and cheap money and provide the punch bowl, for a decade, you're going to have a bull market. And conversely, when they're hawkish and they're raising rates, and they've been telegraphing raising rates for over a year now, you're going to get a bear market. And it's just a matter of how long it's going to last. So don't fight the Fed. In my opinion, my humble opinion, the number one driver of equities is Fed policy. And then after that, you got fundamentals, earnings, the whales, the big boys, exactly, right? But numero uno is understanding the Fed policy and FOMC meetings and their policy on the cost of money, interest rates. So you got to watch the bond market. A lot of good bond traders are better stock traders than stock traders themselves. So if you trade stocks actively, ETFs, stock index futures, you got to keep an eye on TLT with a 30-year bond futures or 10-year notes. One of them. Pick your poison, but keep an eye on the bonds and the notes and understand that correlation. But in my opinion, that's the number one driver of stocks. So those are the 5 things, folks. It takes time to develop, and it's a skill set. It is a skill set that you have to practice and get good at, right? And anybody can make money in demo mode. The real test is when you have skin in the game, whether it's a micro or 50 shares or whatever. But that's when you get that fear and greed, and you're really understanding how emotions can affect you, and you want to be in an even keel. That's the good word. You want to be in an even keel as much as you can. All right, so a quick little history. One slide about the history. It's good to understand where did trend following begin, where did trend lines begin, who uses them, who started them. So in my research, I did a real nice long white paper and that was the forerunner for my ebook But David Ricardo is credited as saying the first one that said, cut your losses, let your profits run. He was in London trading stocks and bonds in the 1790s to 1818. He made a fortune. You can Google him, whatever, but he's credited with saying, cut your losses, let your profits run, or cut your losers, let your winners run. A lot of new traders, what do? They cut their winners and they let their losers run. And it's part of the game. You're going to learn, but you can't keep doing that and expect to have any success or longevity, obviously, right? So cut your losses. Nobody likes to be wrong. But in trading, the best loser is the biggest winner. Those that can admit they're wrong, move on. Hey, it was a good setup. Some external event happened, whatever. You got into it a little too early. But I love little losers, love your stops, and risk management. Arthur Cutten was a famous Chicago grain trader, early 1900s, right behind the Board of Trade years ago on Van Buren, right behind the CBOT. There was a bar and restaurant called Cutten's. A lot of traders would go there after the close and eat and drink at Cutten's. But he made a lot of money, and he would say, stay with the trend, right? Jesse Livermore, Reminiscence of a Stock Operator. Some of you have read that and heard about that. Great book. It's a classic. He would always say, size up the market and its trend. Charles Dow Theory. He wrote several articles in the Wall Street Journal, 1899, 1902, about bull and bear markets and trend following. So, folks, this goes back 125 years, right? Trend following goes back a century, not just a couple decades. Ralph Nelson Elliott Wave expanded on Dow Theory. Some of you like Elliott Wave, great. Richard Schabacher, back in the early 1930s, he wrote Technical Analysis and Stock Market Profits. He was a big trend follower. Harold Gartley wrote Profits in the Stock Market, 1935, trend follower. Edwards and McGee, another classic that some of you may have read. That's one of the number 1 or number 2 classics. Robert Edwards and John McGee, I think around 1948, wrote Technical Analysis of Stock Trends and Trend Lines. And then Richard Dennis and his famous Chicago Turtle Traders. Some of you know the story. If not, write it down and Google, the Chicago Turtle Traders. It's a phenomenal story. I'll give you the Cliff Notes. Successful trading can be taught. You're not just born a good trader. So that's the Cliff Note version. But great story. Kind of like Trading Places with Dan Aykroyd and Eddie Murphy. Great book. But they use Donchian channels, which is like a trend following indicator. Pretty sure it's on MetaStock. I don't think there's any indicator that they don't have, but check it out. And then the last one that's not on there is the Market Wizards, which I have a slide later on towards the end. But some of you have read several of Jack Schwager's books, Market Wizards, the new Market Wizards, interviewed with floor traders, hedge fund traders, screen-based traders. The majority of them, not all of them, but the majority of the Market Wizards used trend following as either their number 1 strategy or their main strategy. So again, it's been around 125 years, and it's not that difficult, folks. It's not rocket surgery or brain science. Are you with me? The beauty's in the simplicity. Now, it takes a little while now to get used to drawing them correctly. I learned them from a very successful hedge fund trader, okay? After I left the floor in March of 1996, I became a retail futures broker for 10 years, 96 to 05. And then basically since 05, just been trading and teaching, for 18 years now. But for a while there, I was struggling. I met these 3 guys when I moved from Orlando to South Florida. I didn't love trading by myself in my house. I was used to being in Sears Tower with a group of other brokers and traders. And, so I looked around to find a trading room. Long story short is I met these 3 guys, 2 hedge fund managers, and one of them turned a $1 million hedge fund. One of them worked at JP Morgan on the currency desk, learned how to trade currencies and Forex from a institutional perspective. And then he dreamed about opening up a hedge fund and running his own show. And he opened up his own hedge fund in 1999 with $1 million, because it's hard to attract, institutional money and money from accredited investors with no track record. So he opened up $1 million hedge fund with $600,000 of his own money and $400,000 of friends and family. And in 10 years, the net asset value went to $1 billion. So he ran his $1 million hedge fund to $1 billion in 10 years. His main thing was trend lines and some patterns and classical technical analysis. So is that a good one too? Think for yourself. Yeah, Pete Stottlemyre, was market profile. My dad filled orders for Richard Dennis and Pete Stottlemyre. My dad and his partner were the top spread brokers in the bean pit, the largest spread brokers in the bean pit in the 70s. My dad struggled for 2 decades, not struggled, but didn't make very good money in the 60s and 70s. Excuse me, in the 50s and 60s. But then in the 70s, the bean market and corn and wheat were very volatile for 7 or 8 out of the 10 years in the decade of the 70s. And him and his partner were the top spread brokers, and he filled orders for Pete Stottlemyre and Richard Dennis, among others. So anyway, trend following, trend lines. If you tour in Stamford, Connecticut, or New York or Chicago, now there's a lot of new ones down in West Palm Beach and Miami, hedge funds, they're all moving to South Florida. If you take a tour of their trading floor and you see the Bloomberg terminals, you're going to see a lot of trend lines drawn on their terminals, on their charts. Not everyone, but a lot of them you will. That's where I learned them from. So, all right. So here's another quote from John Murphy. Charts are used primarily to monitor trends. 2 basic premises of chart analysis are that markets trend and that trends tend to persist. Trends tend to perpetuate. Trend analysis is really what chart analysis is all about. Trends are characterized by a series of peaks and troughs, highs and lows. An uptrend is a series of rising peaks and troughs, higher highs and higher lows. A downtrend shows descending peaks and troughs, lower highs and lower lows. Finally, trends are usually classified into 3 categories. He does major, secondary, minor. I just like to make it easier, go macro, micro, but you can choose which way you want to do it. A major trend lasts for more than a year. Secondary trend from 1 to 3 months, and a minor trend might be a couple hours or a couple of weeks. And again, that's from John Murphy. And I've been in front of so many students over the last 15 years. Some students will say, well, they look good in the chart stand, but trend lines, you can draw them anywhere, and they're very subjective. And I say, well, wait a second. If you know how to draw them accurately, they're very objective, right? Once you know how to draw them, they're not subjective at all. It's either there or not there, right? And that's my answer to that. So you need to learn how to draw them. It's a skill set, but once you learn, it's a great thing. So because trending markets offer the best profit opportunities, one of the most basic goals of chart analysis is to define and identify price trends so we can analyze and join them. The trend is your friend. Again, until the bend at the end. Definition of an uptrend: higher swing lows and higher swing highs. Some people call them pivots. Some people call them swing highs and lows. They're used interchangeably. And in an uptrend, the buyers are in control. The lows are in control. Downtrend definition: lower swing highs, lower pivot highs, and lower swing lows or lower pivot lows. And they should jump out at you from your charts like a sore thumb, right? A swing high or a swing low, it should be a pretty medium or large wick usually, and it should stick out like a sore thumb. Recent swing highs and swing lows are pivots. No matter if you're on a 5-minute chart, a volume chart, a 60, a 180, a 240, daily, weekly, monthly, depends on your time frames. And once you get used to being in front of the screen and looking for them, it'll become easier. Trends tend to persist and perpetuate, and a trend in motion tends to stay in motion, right? I'm going to give you some history. I'm going to mix in some biology. We already talked about some mathematics. All right, I know it's not biology. It's physics, right? But honestly, a trend in motion, the probability of a trend continuing is a lot higher than the trend reversing. It takes a lot to reverse a trend, and your trend line breaks can visually show you that, and I'll show you momentarily how they work. Here's a good one on, good segue. I forgot this slide was next, but a good segue. This is the E-mini S&P on a weekly chart with some trend lines. That first one on the left over here was the drop, the 18 or 20% drop in like 4 weeks after COVID, when COVID first started, February, March 2020. And then a nice long uptrend. And there's the January last year, 15, 16 months or so ago. There's a trend line break on the mini S&P futures first week of January. First week of January, we broke trend lines on the higher time frame, folks. Even if you day trade mini S&Ps or micro S&Ps on a 5-minute chart, 1-minute chart, which I personally hate those, but too much emotion in those super low time frames, but that's just me. But even if you day trade micros or minis on a 15 or 10 or 5 or 3-minute chart or a volume chart, it's good to peek in once or twice a day to the daily and weekly. Because if you see a trend line break on a weekly time frame to the downside, are you looking to buy dips and find spots to go long on support or demand, or reasons and areas to get short? And the answer is the latter, obviously. Okay, so and here we are right now, folks. We've been consolidating. We had those was it February or March lows, and now we've been, we're having a tough time getting above 4,200, 4,208, 4,210. We get 1 or 2 closes above 4,211 on the futures. That would be a little bullish, but we have lower highs, and we haven't made a lower low in a while. But we got the debt ceiling, we got an inverted yield curve. We got a couple stocks that are doing well. Google, Apple, Netflix today was up big. Nvidia's had a nice run. So I think it's the charts are telling me, not my personal opinion, but from what the charts are telling me, I don't think the bear market's just over yet. But I'll watch price action. If we get above some downtrend lines, that'll change my outlook. But right now, I still think there's a lot of headwinds for the markets. So there's the weekly S&P. Here's the QQQ index, and this is on the weekly, I believe, as well. Yeah, this is the weekly chart as well. So there's the 4-week trend line break. Here's a gap down, folks. On the left-hand side here, February of 2020, we gapped down Monday morning. Futures were down overnight, Sunday night, Monday morning, and then at 9:30 Eastern, we gapped down, and look what happened. We dropped 18, 20% in 1, 2, 3, 4 weeks on a gap down below an uptrend line. Sometimes you just break the trend line. Sometimes on a stock or an ETF or an index, you gap down Monday morning below an uptrend line. Of course, if it's futures, it could be Sunday night. So that's a pretty big signal. Do they all work? Of course not. Nothing does, but they're very high probability. Here's a small trend line break with a gap down as well. And there's different angles. There's like an 88 degree or 85 degrees and 70 degrees, whatever, different angles. But here's a long uptrend. And then there's January of 2022 right there. We broke below the trend line, nice drop, a 3-week sucker rally, dead cat bounce, and then there's a nice red, 5 or 6 weeks in a row. But folks, when you look at this chart right here where my cursor is, you can't argue that the power and momentum went from the bulls back to the bears right there in that first red candle. Now you got to see it in real time and draw your trend line so you're ready and prepared. But as part of your homework and part of your job as a trader and chartist and technician is to be prepared for Monday morning or whatever. But we don't know how big the move's going to be. 2%, and then it goes back up, or is it going to be the beginning of a 10 or 50% move or more? We don't know. All we can do is manage our risk, take our signals, and manage our emotion. But 6 weeks in a row, and that's 20, 25%. A little dead cat bounce. We have a little key reversal there with a new high for the move with a lower close. We didn't close below the trend line over here where my cursors. We didn't close below the trend line, but we have a new high for the move, a new 6 or 7 week high with a red candle. That's not a bullish candle. It's a key reversal. Monday morning, we gapped down below a trend line. One more gap down right there. And then 6 or 7 out of the next 8 candles were red. Okay? So here we are right now. We got above that little downtrend line. That's actually a bull flag. I should have put the trend line below it as a channel. That's a bull flag. I love 5 simple patterns. Bull and bear flags, ascending and descending triangles, and wedge or symmetrical triangle. You can draw them all on MetaStock. There's head and shoulders. There's other patterns, but those are my 5 go-to. Very reliable. You know where you're wrong, and they can generate 5 and 6 and 7 to 1 risk-reward opportunities. All right. Here's a very important point, folks. you can use trend lines and patterns for any trading style. We got some day traders, we got some swing traders, which is, 2 or 3 days up to 2 or 3 weeks, maybe a month, or we got some position traders from maybe a month to 4 or 5 months, options, forex, futures, whatever. Not too many. You don't really hold futures for 4 months, but stocks, options, ETFs. Some people do trade forex on a larger position trading, and then you got investing. So you got 4 styles: intraday, short-term swing, longer-term position, and investing. And trend lines and patterns can be applied to all of them. It's universal. And the other good news is you can apply to any asset class: stocks, exchange-traded funds, options, futures, forex, and crypto, Ethereum, Bitcoin, etc. Anything with a chart, even freeze-dried cockroaches, I heard, behave on trend line breaks, I heard. So it's not that liquid, though, those freeze-dried cockroaches. Anyway, that's good news, folks. So once you learn and understand trend following and trend lines, whether you're an investor and you day trade, or you do no day trading and you swing trade, plus once you make money swing trading, you become a bigger investor, this will follow you no matter what you're going to do. Trend following. You want to use MACD later, or Fibonacci, I can't even pronounce it, or Elliott Wave, or RSI, it's up to you. You probably won't need to, but if you want to, nothing wrong with it. Add to your repertoire, Bollinger Bands, whatever you want, but your focus and basic fundamental strategy, in my humble opinion, after being in the industry since a long time, 3.5 decades or so, would be trend following and trend lines. I've seen it all, folks. I've seen it all. So here's a nice quote from one of Richard Dennis's turtle traders, Michael Covell. He became a hedge fund manager after he was a turtle trader. He was one of the most successful turtle traders. There's a couple great books on turtle traders written by Michael Covell and others. But what type of strategy exactly is trend trading or trend following? Here's his definition. Trend followers use reactive technical analysis. Instead of trying to predict the market direction, their strategy is to react to the market's movements whenever they occur. This enables them to focus on the market's actual moves and not get emotionally involved with trying to predict direction or duration. Let the candles guide you. Let the momentum, let the price action, let the trend tell you what's going on. Draw your trend line, and it's very visual. And then there's some more things you can take a screenshot, but we're running close to timer, and I want to make sure I get to some good MetaStock trend lines on NVIDIA and Netflix and other stuff. And I'll even take some questions, and you guys can type in the symbol, and I'll pull it up, and we'll do it that way. I don't want you to think I'm cherry picking. Mr. Dan doesn't roll that way. I'll let you guys type in a symbol, and we'll take a look at it after I show you a couple. All right, so one major tenet of technical analysis is that prices of equities and stock indexes, ETFs, etc., they move in trends. Markets do not jump up and down in a random fashion. On the contrary, they show definite organization and structure in their chartered course. There's always that argument, is the market random? And my answer is, on a 5-minute or a 3-minute chart, you get that zigzag and emotion and randomness. But you start going to the 60, the 120, the 240, there's a rhyme and reason exactly why, what the candles are doing, or the bar charts or Renko charts or whatever. So during an uptrend, we want to buy long, buy the pullbacks, buy the retracements to the uptrend lines or solid support demand zones. You don't always get a pullback all the way to the trend line. In a strong, healthy bull market, the stronger it is, the shallower the retracements are going to be, right? The stronger the market is, the shallower the retracements will be. So, and then the rule is 3 touches is confirmation there's a trend. Once you get 3 touches, Houston, we have a trend, right? So 3 touches, confirmation that we have a trend. You get a swing low, you get a pop, you get a higher low, you get a pop, and you get a higher low. That's it, 3rd low, draw your trend line. During a downtrend, we want to sell short rallies or strength back to the downtrend lines or to supply or resistance. Those are used interchangeably, supply zones, resistance zones, whatever you want to call them. And there's also trading ranges or non-trending markets, right? Sometimes my go-to example years ago was eBay. Years ago, eBay was in a $12 range for 3 years, 48 to 60. For 3 years, a $40, $50 stock was in a $12 range. And then finally, I think they spun up PayPal, and then it popped through 60 eventually. But 3 years, a stock's in a $12 range. And every time it got down to 40 or 50, 51, it was a buy. Every time it got to 50 or 60, it was a short for 3 years. That's a non-trending situation. 3 major applications of using trend lines as part of your strategy. Number 1, lock in profits on existing trades or investments by using a sell stop if you're long below the trend line on a higher time frame. And I'll show you that on Netflix and Peloton or Zillow, some of these high flyers that got smoked, Carvana. I mean, there's been some phenomenal shorts that broke weekly and daily trend lines. I love that term I got from my father. Trees don't grow to the sky, right? Trees don't grow to the sky. And I love markets that are frothy. They're way ahead of their, way ahead of they get way ahead of them and they're on the news. And then when they break a trend line, sometimes there's a good 7 or 8 or 10 to 1 risk reward opportunity on a weekly or a daily. It might take a week and a half, 3 weeks. Sometimes it's in 3 days because markets take the stairs up and the elevator down. Sometimes it's the express elevator, right? Why is that? Greed's powerful. Fear is more powerful than greed. So there's some explosive rallies and some powerful green candles. Hey, Bear. But bonds, stocks, gold, real estate, crypto, they drop faster than they rally. Want to say hi, Bear? Here's my Bernadoodle. Here's my handsome gentleman. All right. You're doing good. Don't bark. Don't bark. Silencio, por favor. Some of your dogs are bilingual, right? Mine are too. All right. So number 2, why we use trend lines to locate favorable locations on a chart to join an existing trend using the 3-touch confirmation strategy. Uptrend, the 3rd touch is confirmation. Don't wait for the 4th touch to go long. You want to buy that 3rd touch, and your sell stop goes a little bit below the trend line. So you're not risking, a lot of money. You know where you're wrong. Any strategy that shows you that you can recognize where you're wrong, patterns and trend lines in my case, that's a great thing. Like, and my explanation would be, if you trade mini S&Ps or micros, why would you risk 5 points if you know you're wrong on a trade 3.5 points away from your entry, right? The closer you can get to the risk, the better. But don't risk 5 points when you know you're wrong at 3.5 points. You save a lot of money over the course of your career. And then 3rd way, to help recognize when the current trend is ending and a new trend forms in the opposite direction or reverses. Trend line violations, or TLB, trend line break. Okay? All right. Here's a good little example of how to draw them, and a nice little slide here with, the one on the upper left is a nice uptrend, and then the upper right, eventually it breaks the trend. You drop, you get a little retracement, and then you get a lower high, and it drops more. Lower left, lower highs and lower lows. That 3rd LH, the 3rd touch, is where you want to get short as close as you can to the trend line. And then your buy stop for risk goes a little bit above it. If you're on a weekly chart on Google, it might be, $3.50 or $5 a risk. If you're on a 5-minute chart and you're doing micro NASDAQ, it might be, 12 points, or it all depends on your time frame and your instrument. But location-wise where your risk is. Okay? Let's miss any questions here. All right, so there's a good little, take a screenshot, but that's a very good. On the lower right, you have the trend line break. Once you go green, you get above the downtrend line. Nice pop, a little pullback, retracement, higher low, and then it's off to the races. So here's a couple of those books I mentioned. Jack Schwager has like 4 or 5 books about the market wizards, interviewing floor traders, hedge fund traders, screen-based traders, money managers, etc. Russell Sands was one of the turtles. He wrote Turtle Trading Rules. There's an article about Richard Dennis. He was the main turtle trader. Him and his partner had an argument about, can good traders, are they born, or can you teach them a methodology and they can be successful? And they had an ad like in Barron's and Wall Street Journal and Chicago Tribune, and they got like 500 or 1,000 responses. I think they interviewed 200 people, and they took, I think, 13 or 12 traders. They taught them their trend following Donchian channels, way of doing things. And the ones that followed the methodology made the most money. The ones that try to tweak it because they thought this or they thought that, they didn't do as well as the ones that stuck to the rules, which is a great thing to learn. All right, so here's a little here's a bit.ly of my testimonials. I have a Facebook business page, and some of my students have written some reviews. I got 119 on there with a 5.0 rating. If you click this link, you'll get, well, I don't know if you got, I'm going to right click it and put it in the chat, but I know it's just a way to sign up if you want to see some testimonials. I've been doing this a long time, and it's good to trust, but verify. I don't know if you guys can hit that link from the slides or not, but I'll put those links in the chat in a second. Here's my book, 4450, 25 pages PDF, history, strategy, 4 specific strategies, 2 for bull markets, 2 for bear markets and downtrends, how to identify the macro trend, how to draw trend lines accurately, just like the hedge funds, specific entries, stops, targets. So there's a little ebook. Here's a special for you guys if you're interested. I did a 5-hour masterclass a little while ago, 2 sessions on Zoom. I got the recordings, total of 5 hours, all about identifying the macro trend. We're just kind of scratching the surface here, of course, but how to identify the macro trend, how to draw trend lines accurately, where to enter, specifically risk targets. I go over the 5 chart patterns I mentioned, position sizing, risk management, psychology, 1 hour live consulting. I want to make sure you get it. So 1 week, 3 weeks, 2 months, whenever you're done and you're ready, it's on your time frame, you let me know when you want the consulting. We'll record it, and you'll have a long 60-minute question and answer session. Plus, I'll go over some trend lines, etc. You get to keep the recording. My ebook is included. Normally, I sell that for $875, and I'm knocking off $250, so $625 for the package deal there. The recording of a masterclass, 2 sessions, about 2.5 hours each, free ebook with it included, and a 60-minute live consultation. So let me, were you able to do that, Jeffrey? Were you able to grab that from my slides and put it in there? Is that what you did? I think. XYN. Oh, there you go. Thank you. Yeah, perfect. Thank you. Yeah, so there's that. Let me just type in my email address as well. I don't think I mentioned that, or I don't know if it's on my PowerPoint or not. Dan@trendlinebreak.com. And again, I have a little, if you want to book a 30-minute consultation, if you're very serious about, being coachable and committed, I'll offer you a free ebook if you sign up for a 30-minute consultation. Work together to map out a crystal clear strategy to help you become profitable and find out how and if I can help you exceed your earnings goals, etc. So that's ebook with free 30-minute consultation. If you're serious, you're coachable, committed. About 2 or 3 times a year, I offer a 16-week, 4-month comprehensive mentoring program, which is a 4-night class, Wednesday, Thursday, Monday, Wednesday. You get the recordings, 90 minutes of consulting every Wednesday for 4 months, 90 minutes of group coaching and mentoring on Zoom. Those are recorded if you miss it, but so it's a whole package, ebook, consulting. I have a Slack trading group. You get a month free of the Slack trading group. So it's a comprehensive program. Let me know if you have any interest in that. All right. So I like this. I got this from a student years ago. She's thinking about Mother's Day or Valentine's Day, and he's got his mind on that crude oil trendline break that's going to risk $300 to make $1,500, right? I love that. I got that from a student years ago. All right. Let's look at some MetaStock charts, folks. There's the one that's the mini S&P that I had. Let me just show you a couple, and then again, you guys can type in your symbols. Let me just see here can I expand this? I don't know if I missed some questions or if Jeffrey's answering the questions. I don't see a sliding thing down there.
You can slide it out of the console and it'll show up, but I can read them to you too. So.
Oh, sure.
Are you looking for symbols?
Well, yeah, if they want to, I'll go over a couple right now on my own, and then if they want to type in some symbols, definitely any stock symbol. Let me do. Let me show you. I'll do a couple first, and then they can type some in, and we'll go from there.
Some questions while we go. PB wants to know: do you teach investing as well as swing trading?
Well, I teach the strategy. Great question, and the trend following and trend lines can be applied to day trading, short-term swing trading, longer-term position trading, and investing. So if you're an investor, you're going to be focused on the weekly and the monthly charts. If you're a day trader, you might choose a 5 or a 15 or a 3 minute or whatever. If you're swing trading Forex, you might do 240 daily and weekly. It all depends. You want to grab 3 time frames, but the good news, again, you can apply trend following and trend lines to any style and any asset class. It's really universal. Like sometimes I'll do my advertising for, crypto people between 18 and 30. Other times I do my advertising for, people above 40 or 50 that are investors. But it's really universal. I'll try to target certain groups once in a while, but the good news is you can use this for all styles and all asset classes, as I mentioned. I know we covered a lot, but definitely. I want a Netflix. Yeah. Another one.
Maybe wants to know if you use indicators.
Good question. The only indicators that I use are they're actually called dynamic trend lines, but they're really called moving averages. So I do use a simple SMA 5, 10, 15 period simple moving average, because those are dynamic trend lines. My trend lines are rigid, as you'll see in a minute here. And then moving averages obviously are moving averages. They're more flexible, but my trend line might be 1 or 2 candles ahead. My trend line break might get you into a good trade 2 or 3 candles or 5 or 10 or 20 minutes before the moving average crossover. So, but sometimes moving averages can get you in on a good trade, pretty quickly, but it might be 1 or 2 candles or 3 or 7 minutes after the trend line break.
Most wants to know what period do you prefer for a trend line in a day time frame?
For a day trader? Like an intraday trader?
I think what he means, I'm trying to kind of read into the question a little bit, but I think what he means is when you draw a trend line on a daily chart, how many bars do you prefer it go over? Is there a preference there?
Oh, that first bar that breaks the trend line, more than a couple ticks. Like on a mini S&P, if I'm on a 60-minute chart, I want to see like 4 to 6 ticks. Like sometimes it breaks the trend line by a tick or 3 or 5 ticks, and then it's a false break. Like again, nothing works all the time, folks. They do generate a lot of opportunities, but nothing works, all the time. Of course, we have to realize that. But so if it's a stock, on a 60-minute chart, QQQ or Apple, whatever, depending on the price of the stock, a $60 stock, you might go 8 or 10 or 12 cents beyond the trend line, or so. On a $200 stock, you might have to go 15 or 20 cents beyond the trend line. So it all depends on the price of the stock and the time frame. So on a higher time frame, you might have to give it a little more room. But again, as I always tell students, risk is commensurate with reward. So as the risk goes up, the reward needs to go up as well. Let me shut my shades here. It's sunset here in West Palm Beach. So I hope that answers the question there. Yeah.
Okay, one more. And actually, there's 2 more, and I'll just give them to you real quick. How do you determine your swing high to low?
How do you determine swing high and low?
Mm-hmm.
Right, great question. So here's a Netflix chart, and this is a weekly. So they should jump out at you. Like if looking at this chart to the left, there's a nice swing low. Let me draw a trend line. Once we got above that downtrend line, look at that. This is a weekly Netflix. So on the data we have in front of us, there's a swing low right there. The next candle, we broke a trend line that had 1, 2, 3, 4. These 2 are awfully close. 5 or 6 touches. And once we cleared that downtrend line, the power and the momentum, you can't argue with me. Well, you could, but you'd lose the argument, right? But you can't argue that the power and momentum shifted from the bears back to the bulls on that weekly candle. And that week was, we opened at 260. We pulled back about 350 a share Monday morning. And then by Friday, it's at 297. So there's a $37 rally on a $250 stock, 10% or more in a week on a trend line break. The risk was on this Netflix trade, you want to go long. We open up at the trend line, a little bit below it. Though, if you can see that wick right there, and it's kind of small, but some of you that have good eyes, and I'm on a high definition 42-inch screen here, so hopefully you can see that. But we opened at the trend line, we dropped 350 so that you can see the small wick. But then once we got above that trend line by $1, $1.25, $1.50, you got to go long. If you're an options trader, you can sell some puts, you can buy some calls, you know how to do your options. But, and that stop would have been about, 175 or 2.25. You get it 20 cents above the opening, which was 260.16. So 260.35, and your stop is, $2 below that. You're wrong. If it doesn't work, they don't all work. A lot of them do. I'll show you the ones that don't work. If we pick them out, I'll show you the ones that don't work. But if it doesn't work, you're out $2. But the reward, if you held it for a week, it went to 97. You're long at 60 and change. It's $35, $36 a share. If you bought options, then you're in for more than a week. And look at the next week. We gapped up the next week. So huge. So what's going on here, folks, is there's fresh longs getting in from hedge funds and people that know how to use trend lines, fresh longs. What else is going on here to cause that 2-week monster green candle move? What else is going on there besides what I just mentioned? What do you think? Let's think like traders. What else is going on there? Anybody? Thinking like traders, it's good to understand the psychology, but besides fresh longs, there's shorts getting stopped out. There's a bunch of buy stops getting filled. So the combination of buy stops with shorts, either locking in profits because they're short from a higher level, or they're short at a lower level and they're getting stopped out of losses. Either way, a bunch of buy stops and fresh longs coming in that provides that inertia energy. Boom. So there's a good one.
Most question was actually, would you work with linear regression trend lines, or are all the trend lines you do manual?
I draw my own trend lines. I draw manual trend lines. There's some platforms that'll snap it into place, and when you're first learning, that's good to have to help you learn how to draw trend lines accurately. That's good to have. I don't do any linear regression. I draw my own. But yeah, good question.
Okay.
Here's one more great example from that trough, December 26th of 18 to July. Here's a 7-month trend, uptrend with 1, 2, 3, 4, and then this one didn't gap down, but we had a bunch of old highs. And one of my things that I love telling students is price has memory. One of the first things I learned on the floor after buy low, sell high, and cut your losses, let your winners run is, old highs and lows are very, very important, folks. Price has memory. Prior tops and bottoms can create future tops and bottoms. And there's a great example. And then there's a big trend line break around, it's around that low, 358. Let's call it 355. So that trend line broke at 355. You use a $2 stop, maybe 250. When you see it in the weekly, now you can drill down on the daily or the 2-hour chart or the 60 and tighten your risk up, right? You can get more, you see the signal on the weekly, but then you go to a lower time frame and you can pick out, lessen your risk and sharpen your risk there. But there's a great one at 355, and by Friday, we're at 314. There's a $41 drop in 5 days. One little green candle squeezed in there, and then boom, boom, boom. Look at that. But again, you can't argue with me that the power shifted from the bulls back to the bears on that candle. And again, we don't know it's going to go $50 a share or $10. They don't all work. You're going to get stopped out on a couple. But just these first two examples, you can see. And then we got above a downtrend line over here. And again, I'll pick one out that didn't work. I'll show you. So here's a tougher one. Here's a good one. 3 touches right here at the peak. Again, triple top up there at 381, 383 area. We got 3 touches, 4, 5, 6. We got above it around, that opening was 271.99. So about 273. We got above it. The next week we went to 308. So 73 to 08 is $35. That's a 10% move. But then they came screaming back down. But there's your higher low. That next week, there's your higher low, and you draw your trend line, and you have a higher low right there. Okay? So this one that I just drew broke for a little bit. That opening was 3. Where's that opening price? Data tip window. Where's the opening? 306. I'm sorry, 343. We opened at the trend line, right? The opening was right at the trend line. They rallied up first from 343 to 364, $19, $21, and then dropped to 307. So this candle was green at first. Monday morning it opened, ran up first, $21. Once it came down and took out the opening Wednesday, Thursday, whenever, it turned red, broke the trend line, and proceeded to go another 340 down to 307. So $35, 10%. And that only lasted for a week and a half. Others last for many, many weeks. So here's Netflix. Here's the main one, and then I'll move on to another one, or if you guys have any symbols I'm going to take a look at. But here's a great one on Netflix. If you were long Netflix for 2.5 years or 4 years or longer, you know, that would be terrible investing or trading to have, you know, let's just say to have $20,000 in profits, not know where to put your stop in case it retraces after it's frothy and trees don't go to the sky. You know, that would be terrible to be up $20,000 on an investment or a trade and only make like $4,000 or $3,000 or scratch it or lose money, right? So that would be terrible. But if you know how to draw a trend line, you can use this to exit investments or trades. And here's a different angle. But if I'm up here, look down and to the left, grab a swing low or pivot low. Where's that launching pad? Where's that core launching pad? Right there, that big green candle. We had 1, 2, 3, 4, 5, 6 touches. Here's a launching pad, swing low. 1, 2, 3, very close. 4 touches. The bulls are losing some momentum around 690, 695, 700 actually. But then that week, now here's a little tricky one. This week right here, we broke the trend line by a little bit, $3 or $5, maybe $8. It's a $7 stock. We broke the trend line by a little bit, but we closed back above it. So A, you took a small loss, $3.50 a share, $5 a share, or maybe you bought some puts, you had to wait 2 weeks, and then they came in the money really nicely. Or B, you didn't take the trade because it just poked the trend line by a little bit. Then the next week, Monday morning, we opened at the trend line, ran up a little bit, and then it went red after going below the opening price Monday, and there's a drop from 675, let's call it 670. I'll give you $5 leeway per ounce or per share. 670 trend line break, and by Friday it's at 594. $75 drop. I'm not saying you caught all $7 of that. That's the advanced class, right? But you could have caught 40 or 45 bucks of that $75 move on $3 or $4 of risk, or you bought some puts and you get 10 to 1. Now I know it looks easy after the fact, folks, but I've been doing this a long time. You got to draw your trend lines and be ready for A, join the trend after 3 touches, or B, the trend line break. Okay.
We have a question from YouTube that I promised to ask. And we have a guess in terms of what it is, but we want to know if you're a wick to wick type of trend line dryer or a close to close type of trend line dryer.
That's a great question. I used to get some feedback. You know, I'm pretty much wick to wick. Yeah, I don't like the bodies. It's highs and lows. It's all about highs and lows. Sometimes, you know, highs and lows are emotional, fear and greed. You get those medium to large wicks, and you know, I love telling students the market loves to go down one more time, squeeze out the weak longs and suck in the novice shorts before it rips higher. Markets love to do that. And conversely, the market loves to go up one more time, suck in the novice longs and squeeze out the weak shorts and then, you know, drop. But I've developed my own style. Once or twice, I'll get rid of 1 or 2 anomalies. And let me see if I can find an example. But before I do, I'll get rid of one or two anomalies. If I can cut off part of one little wick and still get, you know, 4, 5, 6 touches, I'll get that trend line break higher, shorting before it drops. Doesn't always work my way, but I've been in front of the screen since March of 1996. I put in my, you know, 15 or 25,000 hours. But I'm not going to get rid of 3 or 4 that's curve fitting or cheating, but 1 or 2 wicks that violate the trend line. But there's 4 or 5 more that still obey the trend line, and I'll try to find a good example of what I'm talking about, I'll do that, because then I'll get short at a higher level or long at a lower level if when we get that trend line break. But great question. I'm wick to wick. Yeah.
All right, one more question. Do you use buy stops and sell stops for trend line breaks?
Absolutely. Yeah, a lot of folks don't even realize, stops are, you can use stops besides risk management, you can use stops for entries. And if you've been around the game, and you were taught well and you bet on your own, great. But yeah, when you, like Netflix, we got above some downtrend lines here, and we just got one above this week. There's one this week, folks. We'll see how much further it goes. But yes, when an uptrend line breaks, you put a sell stop in to get you into a trade, and then part of an OSO, OCO, sell short below the trend line. If that gets filled, place my buy stop here and either target 1 or target 1 and 2. I love scaling out with some profits, different targets, all ahead of time. Yes. And then for a trend line break to the upside above a downtrend line, you would put a buy stop. And you can do a buy stop limit to reduce your slippage. Not a lot of people know how to use buy stop limits, but you're giving the brokerage firm 2 prices. I want to get stopped in here and activate the stop, but I don't want to have too much slippage if there's a gap up. I don't want to, that'll ruin my risk reward proposition and reduce my slippage. So you can do a stop limit, and if it gaps through your stop and your limit, you won't get filled. Some of you know about that, but if you don't, learn about them. But yes, you can use stops to get into trades and trend line breaks or a wedge breakout or bull and bear flags. Absolutely. But Netflix is breaking above. Today's Thursday. We got one more day, but we're above a downtrend line on Netflix right now. We broke it, Wednesday, Tuesday, or Wednesday so far. But there's some good examples of trend lines. Any other symbols or? You still there, Jeff? Audio good?
But I'm talking to a muted mic. Let's do a couple. BP wants to look at TLT.
Oh, the bond market, sure. Oh, my mic's good, right? You can still hear me and see me?
Yeah, you're fine.
Great. Cool.
I was just talking to a mic that was muted, so it was my side.
Cool. Here's TLT. Again, the 30 or 40-year bull market in bonds is over. The free money's gone, folks. My mortgage, I bought a house April 4 years ago, 19, at 4 1/4, 30-year, and then they got down to 3 or whatever. I'm like, oh man, I could have got 1% better, but now they're 6.5 or 7. I'm looking good, but yeah, the free money's over right now, and it'll start again in 6 months. Whenever 6 months, a year and a half, 2 years, 2.5 years. The Fed will get back to their, low money, dovish policies, and we'll have another bull market, right? But right now, we got inflation, we got inverted yield curve, we got a lot of headwinds, we got a debt crisis. I think the market breadth is not that good. I use market breadth a lot. Internals, it's like looking underneath the hood. You got Apple and a handful of tech stocks doing really well, but a lot of other stocks not so good. So here's TLT. Here's a great trend line break. Right there a couple of weeks ago. This is the weekly still. We can look at dailies or 60-minute charts as well, but look at that trend line break right there. Here's what I'll leave you with, folks. One really good nugget, okay? When the higher time frame trend is down, right? You can look at this chart. There's your swing high or pivot high. We got lower highs, right? You can't argue with that. We got lower highs and lower lows. When the higher time frame trend is down, I love getting short below micro uptrend lines. Okay, say it one more time. It's worth repeating and worth writing down. This is a money maker. When the macro trend higher time frame is down, lower highs and lower lows, I love getting short when the micro uptrend line is violated. It's just a dead cat bounce. A little short covering rally is a big term you need to know about. It's a short covering rally. The big boys that know how to use trend line breaks, Dan Sugar graduates, and the hedge fund managers that know how to use trend line breaks, look at how many there's one green candle out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 weeks, 3 months. There's one green candle. After that trend line break in TLT, August. And I know it looks easy to, look back in the past. I'm a phenomenal hindsight trader. My old website was hindsighttrading.com. You get a free trial for 2 weeks, and then it would be $500 a month. That's a joke, folks. But seriously, once you learn how to do these and draw them on the hard right edge, where we're at now, you'll be able to catch trendline breaks. And number one, I love TLBs, believe me, as you can tell already. But numero uno, you want to join the trend. If it's down and you got 3 touches, you're looking to short at resistance, at supply, at the downtrend line. If it's up, I'm looking to join the trend, buy pullbacks, buy support, buy trend lines, buy long at the trend line retracements and corrections. But when there's a TLB, you can see how powerful they can be. Just in a couple, 20 minutes, some examples. Here's a great wedge. Here's a phenomenal wedge. Again, these trend lines on MetaStock are nice and crisp and clean. You got, just so you know too, you can right click on a trend line, go to properties, and then show label, and you can see how long it lasted, the percentage move, how many days, how many weeks. Was it a 20% move from low to high? And a lot of cool features, by the way. I like to keep my label, I don't like to label myself personally, but once in a while I'll take a look and see what that move was, whatever. But you just click show label, and you got performance and number of periods. Click apply. There's a 3% move, 27 periods on a weekly chart, so stuff like that. But anyway, we don't want to go too long. Jeffrey's had a long day and a long week. You got one more day tomorrow with some great lineup. I really appreciate your time. And Jeffrey, thanks so much for inviting me. Email me with any questions. You want to take advantage of that, the MetaStock conference sale, click that link. I'll email you the recordings tonight or tomorrow morning, my ebook, etc. But hope you got a lot out of it, folks. Attend some more tomorrow, take some notes, and you'll see which strategies and which mentors and coaches you jive with and your personality aligns with, and keep soaking up the knowledge, folks. Knowledge is power everywhere, especially in trading. And Jeffrey can put those links in one more time if you want, if you missed them, but we got about 104, 120 earlier, so.
All right. One of the things that I would say is you just showed my favorite new feature of 18. And that's the
I'm sorry, your favorite what?
The ability to measure the price move and the percent change and stuff like that is new in 18. And it's one of my favorite things. They added a lot of new things to 18, but that's one of the newest ones.
Nice. Yeah, that can be very helpful and beneficial. Some of them are 5 or 10% moves that took 3 weeks, and some are 15 or 25% moves that took 3 months, and it just gives you the data really quickly.
I love it. Yeah, thanks for showing that. And if you haven't got 18 yet, that's one really good reason to do it. Andrew says that great info, Dan. I learned! Exclamation point. So thanks for coming in. Welcome to the room for the very first time, and we'll see you again soon.
Sounds good, Jeffrey. Looking forward to it. Thanks again. Thanks, everyone.
Cool. Let me do this. We'll just wrap up real quick. Make myself the presenter. Turn on the camera. Share the screen. Talk about stocks and commodities. Thank you, Stocks and Commodities, for sponsoring the event. Great sponsors, long-term sponsors. Thank you, AAII.com. Find out more about those, that great nonprofit. And CMT, of course. So we had quite a few specials today that we talked about, and some really good ones. We started out in terms of the MetaStock products. We started out with Tushar Chande and his add-on. It's normally $4.99 as part of the conference special. You can get it for $3.99. We did Magic Trader Elite plus his fundamental training pack, $2,000 value, $19.95 to be specific, $7.99 for the conference price. And then Daniel Sinnig showed us the Power Bundle 360, which is normally $14.95, $9.95 here at the event. So some really, really good products. If you're interested in any of those, pick them up. If you want to try out MetaStock, I'll remind you, I've said it a couple times today, but for 30 years in a row, it's been rated #1. Can help you scan markets, test trading ideas, forecast probable price movements, get real-time alerts, commentary, signals. All of that pricing starts at $59 per month. If you buy a month, we will get a second and third month. You'll get it for free. Metastock.com/comp promo, 800-882-3040 or metastock.com/sales chat. And finally, let's talk a little bit about tomorrow. We're not just back tomorrow, we're here Saturday. But tomorrow we're going to start with Ken Calhoun. Ken loves to look at price moves, and he does a good job with it. A very interesting class. We have a couple of really interesting classes. Jerry Allison is going to talk about whether or not you, as a trader, should trade as a business. And he's going to talk about the advantages of that and kind of what that entails. He does a really, really good job, and I find it eye-opening when they talk about it. We're going to also do Kevin Nelson. Kevin Nelson does learn MetaStock. He does a great job with it. He's going to talk about trendline breakouts. Interesting. Then we're going to have Anka Metcalf and Tyler Wood, as well as Marco Gomez, and then our very own Bobby Hiller. So got a full day tomorrow too. Some really, really good classes. Hope to see you there. And there you go. Andrew says, thank you for having Dan Sugar as a presenter. Dan has been a mentor of mine since he left Online Training Academy. Please let me know when Don Sugar's back in. Thanks for coming, Andrew. I'm glad you came. BP says, FinViz has trend lines on daily charts. Not sure they look accurate. I like ours, but you know, I'm also biased. Hey, did I mention you could get an extended trial of those trend lines? You just have to call us 800-882-3040, metastock.com/sales chat or metastock.com/conf promo. So with that being said, thanks for coming today. Thank you to Dan, all of our great speakers today and this whole week. For those of you that are hanging out till the very end, thanks for watching. Appreciate it. If you're watching this video in the future or right now in YouTube, hit a like, hit subscribe. It helps a great deal. And Kelly and I appreciate it. So we'll see you again. Thanks for coming. Bye.
Hi, Kelly Clement here from MetaStock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.